One good evening to all of you. आज है 22nd of January 2025. वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। क्रूड ऑयल को देखोगे एक छोटे से रेजिस्टेंस जोन पे है, सेलिंग का प्लान रख सकते हो। नीचे आएगा तो फिर 6550 के अराउंड एक बाइंग का प्लान रखेंगे। नेचुरल गैस थोड़ा सा रेंज बाउंड बना हुआ है, मॉर्निंग पे फ्लैट ओपन हुआ था, एक बहुत ही छोटी सी रेंज में ही फंसा हुआ है। नीचे आता है तो 317-18 के आसपास एक बाइंग का प्लान रखेंगे 15 मिनट टाइम फ्रेम पर। और ऊपर ये छोटा सा एक वीक रेजिस्टेंस लेवल है, अगर यहाँ से चाहें तो कम क्वांटिटी में सेल कर सकते हैं। थोड़ा सा वीक है तो क्वांटिटी कम रखना। रेजिस्टेंस जरूर है बट थोड़ा सा वीक कह सकते हैं। बाकी ऊपर एक रीटेस्ट पेंडिंग है 340 टू 44, और फिर हमारे पास 350 टू 53 के अराउंड रेजिस्टेंस मिलेगा। बाकी क्रूड ऑयल भी वैसे बाय द वे इस रेजिस्टेंस पे कल रेजिस्टेंस ले चुका है, तो ये आई थिंक सेकेंड टाइम आएगा, सेकेंड या थर्ड टाइम। थोड़ा सा न्यूज़ का भी इम्पैक्ट हो सकता है, क्रूड पे ध्यान रखना, बुलिश हो सकता है क्रूड। अगर कुछ और न्यूज आती है डोनाल्ड ट्रम्प की ओर से, कल उन्होंने ऑलरेडी कह रखा है कि दे कैन इम्पोज मोर टैरिफ ऑन चाइना, ईरान एंड अदर कंट्रीज। अगर ऐसा होता है तो इट इज़ अ पॉजिटिव न्यूज़ फॉर क्रूड ऑयल एज वेल। ट्रम्प पोजिशन ऑन रशिया ईरान सैंक्शन could drive oil price move। बाकी 6:30 पे अभी न्यूयॉर्क सेशन ओपन होगा और 8 पीएम पे यूएस मार्केट ओपन होगा। डेटा की बात करें तो कोई खास डेटा शेड्यूल नहीं है, आज वर्ल्ड इकोनॉमिक फोरम की थर्ड डे है मीटिंग का। बाकी यूएस से कोई भी डेटा आज नहीं है, क्रूड ऑयल की इन्वेंट्री भी नहीं है आज, ध्यान रखना। सीधे कल आएगी क्रूड ऑयल की इन्वेंट्री। और कल आई थिंक लास्ट डे भी है वर्ल्ड इकोनॉमिक फोरम की, कल नहीं परसों होगा शायद। तो क्रूड ऑयल की इन्वेंट्री और नेचुरल गैस की इन्वेंट्री भी कल आएगी, इसके अलावा कोई डेटा नहीं है। कोई नई न्यूज आएगी तो उसका इम्पैक्ट होता हुआ दिखेगा मार्केट पे, अदरवाइज देर इज नो न्यूज। From planned tariff on imports from Canada, Mexico likely to raise fuel prices, Commerce Bank says। लेट्स सी नीचे एक सपोर्ट है, वहां तक आता है या फिर डायरेक्टली निकलता है ऊपर की ओर। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। सिल्वर भी देखोगे कल से रेजिस्टेंस पर ही रुका हुआ है, कल लेवल बताए थे। होल्डिंग, स्टिल होल्डिंग द रेजिस्टेंस एरिया, काफी ज्यादा साइडवेज चला गया था कल। टुडे इज ऑलमोस्ट साइडवेज मार्केट। बाकी कल नेचुरल गैस में को क्लोज होते होते बाइंग का ट्रेड बना था, उसमें थोड़ी बहुत ही बाइंग आई थी, फिर मार्केट क्लोज हो गया था। उसमें कोई रुका हुआ है तो यही फाइनल टारगेट है। बाकी अगर ये लेवल निकलता है तो फिर देखेंगे अपसाइड की ओर, बट एक छोटा सा रेजिस्टेंस इन नेचुरल गैस। Okay, 1 second. नेचुरल गैस के रेजिस्टेंस को थोड़ा सा वीक कंसिडर करके चलना, ठीक है। टारगेट बड़ा रखा हुआ है इसीलिए, बीच में कोई और सपोर्ट नहीं है, नीचे यही टारगेट रहेगा, पर थोड़ा सा वीक कह सकते हैं। Trump considered 10% tariff on all Chinese imports. ब्रेकिंग न्यूज कह सकते हो। Trump widened tariff threats to China, Europe on day second of office. Mr. Beast, internet's top creator, joins new bid to buy TikTok.
News when you want it with Bloomberg News Now. I'm John Tucker.
And I'm Karen Moscow.
And Karen, let's start with Netflix shares surging to an all-time high. Right now, they're up more than 14%. The streaming giant added 18.9 million customers in the fourth quarter. That's its biggest quarterly subscriber gain in history. It was fueled by the return of Squid Game and having its first major live sporting events. Ted Sarandos is the co-chief executive officer of Netflix.
We are constantly trying to broaden our programming, and live events is one of those things, and sports is part of that those live events. So when I look at this and say that's a really fantastic thing, but but it doesn't really change the underlying economics of full season big league sports being extremely challenging. So if there was a path where we could actually make the economics work for both us and the league, we certainly would explore.
That's Netflix co-CEO Ted Sarandos. He says the company's raising prices. The most popular U.S. plan is going to $17.99 a month. That's an increase of $2.50. Netflix is also increasing the cost of its cheaper advertising-supported plan.
Well, John, Netflix is helping to give a boost to futures this morning. So is Donald Trump's plan to boost the U.S.'s plans for artificial intelligence. The president has announced a U.S. joint venture with SoftBank, OpenAI, and Oracle to fund the expansion of AI infrastructure. Dubbed Stargate, the project will deploy $100 billion immediately, with plans to increase that to at least $500 billion. OpenAI CEO Sam Altman announced the venture next to the president.
I'm thrilled we get to do this in the United States of America. I think this will be the most important project of this era. And as Masa said, for AGI to get built here, to create hundreds of thousands of jobs, to create a new industry centered here. We wouldn't be able to do this without you, Mr. President. And I'm thrilled that we get to. I think it'll be an exciting project. I think we'll be able to do all of the wonderful things that these guys talked about. But the fact that we get to do this in the United States is, I think, wonderful.
Altman's company OpenAI will oversee operations. ARM Holdings, Microsoft, and NVIDIA will provide technology along with Oracle and OpenAI. The announcement comes after Trump rescinded Biden's sweeping executive order on AI. Stocks are moving on this new venture. Shares of Oracle are up 8%, NVIDIA more than 2.6%, and Microsoft 1.5%. SoftBank shares surged 10% in Asia.
Well, the president also said he'd be open to Oracle chairman Larry Ellison or Elon Musk purchasing TikTok as part of a venture with the U.S. government.
The deal, I think, is this, and I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit. It's not like, oh, you can take the U.S. The whole thing is worthless. With a permit, it's worth like $1 trillion. So what I'm thinking about saying to somebody is buy it and give half to the United States of America, half, and we'll give you the permit. And they'll have a great partner, the United States.
Well, TikTok temporarily went offline over the weekend. Trump signed an executive order on his first day in office to extend the deadline for a sale by 75 days. Billionaire Frank McCourt and Shark Tank investor Kevin O'Leary made a formal offer to buy TikTok earlier this month.
Meanwhile, John, in Davos, Switzerland, business leaders at the World Economic Forum breathed a sigh of relief when President Trump's first day of his second term ended with talk of tariffs rather than any implementation. But they're still concerned about the global impact of Trump's plans. IBM Vice Chairman and former top Trump advisor Gary Cohn spoke to Bloomberg at the World Economic Forum, saying there will be a lot of deliberation before tariffs are put into place.
Even when I was there 8 years ago, there was always a heavy debate on tariffs, on the positives and the negatives of tariffs, on the intended consequences, the unintended consequences. You know, look, it's day one of a 4-year administration. You don't have to put tariffs on day one.
And IBM Vice Chairman Gary Cohn also told Bloomberg that the corporate community remains optimistic a second Trump term will be positive for business.
And Trump has widened his tariff threats to include China and the European Union a day after he saw Canada and Mexico in his sights.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
The threats echo comments made throughout Trump's campaign, but the only actual action taken so far is a call for a review of trade practices. That's due April 1st, potentially giving China and others almost 10 weeks to avert new levies or address his demands.
Well, John, Trump is also taking steps to cut funding for diversity, equity, and inclusion. The White House says those roles will be placed on paid leave, and their offices related to those programs are being ordered to shut down. In a separate order, the administration moved to limit diversity preferences in federal contracting. That revokes a civil rights era order that sought to reduce racial or gender disparities among government contractors.
And Carol, we're finding out more about some of the people that Trump pardoned on day one of his term. One is Ross Ulbricht, the founder of the Silk Road Marketplace. That fulfills a campaign promise he made to court the cryptocurrency community. Ulbricht was sentenced to life in prison in 2015 for running a dark web marketplace where illegal drugs and hacker tools were sold using virtual currencies.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. 3 new members to the Baseball Hall of Fame, including Ichiro Suzuki, a hit machine both in his native Japan and in the majors, mostly with Seattle. It was near unanimous. There was one Hall of Fame voter who didn't vote for Ichiro. He goes into the first year in the ballot, as does CC Sabathia after a career with 250 wins, 3,000 strikeouts, and reliever Billy Wagner gets in his final year on the ballot. Aaron Glenn with a second interview for the New York Jets head coaching job. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm John Tucker, and this is Bloomberg.
Not everybody likes talking about money. Some people find it awkward. Sometimes they even find it a little embarrassing. I do not. I like talking about money. Whether it's the boardroom, the newsroom, the trading floor, I've spent the last 30 years talking about money, writing about money, and talking about it and writing about it a little bit more. I'm Maren Somerset-Webb, and every week senior reporter John Steppick and I answer your questions about personal finance, and we discuss the best strategies for making the most of your money. Listen in for the kind of insights and explanations everyone can use to help them make better saving and investment choices for themselves and their families.
My question is whether you think maxing out my company pension match is enough for when it comes to saving for my pension.
Should I attempt to pay my child's university fees and living costs?
My partner and I have excess savings, so should we overpay on our mortgage or should we put the money into stocks?
From Bloomberg Podcasts, tune in to Maren Talks Money. Follow Maren Talks Money on Apple Podcasts, Spotify, or wherever you listen.
Other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish
hogs.
I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably
Bitcoin.
wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
maybe not at the level that is priced into the S&P right now at 15% earnings per share growth, but nonetheless, still a fairly positive environment.
Stocks are priced to perfection, in your view. Are bonds priced to perfection?
No, actually, I think there's some real opportunities in fixed income still. We have a risk premium that's positive relative to, certainly relative to equities. And also, you're getting a real rate of return that is much better than we had pre-COVID. And you're getting a nominal rate of return in any number of areas that make a lot of sense. So we like all sorts of credit stories, structured credit, corporate credit, even high yield, and particularly the high quality portion of the high yield market. So there's still some real fundamental value that can be found in fixed income.
Can you say the same thing about treasuries?
Well, like I said, we're range bound in treasuries, and there's a trade that's actionable there as we go up towards the top end of the range, in the high fours, if you will, 475. You can extend duration. You can then also, as we move back, shorten. After all, we saw a 120 basis point rise in the 10-year, and we were able to play that trajectory really quite nimbly, if you will, during that window of time.
The incoming government might have to look at extending duration as well. Will that complicate things? How do you think about the deficit concerns of the moment, and do you think that's been responsible for the pickup in yields we've seen through December and into the new year?
I think there's a couple things that have really influenced the rise in rates. One is the deficit, and it's a real concern. Who's going to buy all these bonds that we have to issue in the U.S.? Right now, we're still being able to be financed through both U.S. investors as well as international investors. So that story is still playing out pretty well. But at the same time, you also have a Fed that is sending mixed signals with regard to the rate trajectory. Now, our belief is that rates are still going to be moving down over the course of 2025, and we're going to move towards a neutral rate. And I think it's going to be tricky for the Fed to really find that perfect neutral rate. But at the same time, they are also still slowly reducing their balance sheet. So they're sending mixed messages, and they're also acting in mixed ways.
You know, John alluded to this idea that the U.S. has to finance all of this, and you were mentioning this, right? Where's the money going to actually come from? And we've talked about how that sucking sound of cash going into the United States to try to fuel this, crowding out some of the debt issuance and other assets in other regions. How destabilizing is it to have one economy accelerating so quickly and diverging from the rest of the world?
Well, it is unusual, but what I would also say is that because the strength of the U.S. economy has definitely been there, we continue to see an inflow of capital, and I think we're going to continue to see that. And the opportunity for investment is going to go beyond the markets necessarily and into infrastructure investment, manufacturing build-out, real estate.
For the U.S.
For the U.S.
But not for the rest of the world.
But not for the rest of the world so much. And so there's going to have to be some real balance there. But for the meantime, the U.S. is going to continue to attract capital.
Can we get you excited about Europe in any way, shape or form? We're sitting here in Switzerland.
It's beautiful.
It's beautiful. A lot of people say it's a great place for a vacation. I've always been told that by US-based investors. Can we get you excited about Europe at all?
I think that Europe has some real opportunity, but they have to really make some structural changes. And we'll see if Europe's able to do that. One of the areas of maybe concern or caution is that previously very stable governments are seeing some turmoil. France, Germany, elections coming up. And so I think that as we come through those and we see more evidence of the trajectory, and if we see a real desire for Europe to engage in structural reforms, then I think we might be able to see an investable opportunity.
There's a lot to fix, and I appreciate your time. As always, it's good to see you. Anne Walsh there, the Guggenheim CIO. It's amazing how downbeat a lot of people are on Europe, and for good reason. We could sit here and list the reasons, but we'd run out of time. And at the same time, you've got an equity market in Europe today that's at all-time highs on the Stock 600.
How many of those companies, though, that are making all-time highs are related to U.S. sales that are actually doing better because they are hitching their line?
ये क्रूड ऑयल में ध्यान रखना नीचे एक एफईजी है यहाँ पर, ठीक है, आई होप दिख रहा होगा, काफी बड़ा एफईजी है ये, दिस वन। प्राइस यहाँ पर थोड़ा बहुत रुकने की कोशिश करेगा, थोड़ा लोअर एंड तक आ जाए नीचे सपोर्ट पे तो बेटर है मेरे अकॉर्डिंग। तो ये दिख रहा होगा, एक एफईजी भी है यहाँ पर, लगाया नहीं है, बट यहाँ पर थोड़ा बहुत रुकना चाहिए इसको। लोअर एंड टच करेगा तो नीचे सपोर्ट पे आ जाएगा, वी विल बाइंग ओवर देयर। बाकी देखो ये लास्ट टाइम ये सेलिंग अब की बार नहीं आता है नीचे, तो फिर ब्रेकआउट के लिए चला जाएगा, क्योंकि कल ऑलरेडी एक बार सेलिंग दे चुका है यहाँ से ये। तो एक बार दो बार ये थर्ड टाइम आ रहा है, और कल इसने यहाँ पर लोअर लो बनाया नहीं है ये। तो अगर ये कुछ इस तरह से गया तो फिर ये देख पा रहे होगे यहाँ पर एक काफ़ी अच्छा पैटर्न बन जाएगा ब्रेकआउट के लिए। तो मार्केट को कम्प्लीटली बेयरिश होना है तो नीचे वाला सपोर्ट ब्रेक करना है, और बुलिश होना है तो ऊपर ब्रेकआउट। यहाँ पर लोअर लो बनेगा नहीं बनेगा, दैट विल डिफाइन कि मार्केट और बुलिश होगा या फिर थोड़ा बेयरिश हो सकता है। ओवरऑल बता रहा हूँ, अभी तो रेंज के अंदर है। बाकी 5 PM हो चुका है, 6:30 न्यूयॉर्क सेशन की ओपनिंग। थोड़ा एक्सपेक्ट करेंगे उसके बाद वॉल्यूम बढ़ जाए। कल जगह पे एफईजी बना के बैठे हैं ये लोग भी। करते रहो गाइस, फटाफट से लाइक कर दो सभी लोग। हंड्रेड लाइक्स का टारगेट है, करते रहो गाइस, लाइक करते रहो। बाकी आज एचडीएफसी बैंक के रिजल्ट्स भी अच्छे आए थे। बैंक निफ्टी बुलिस हो गया वापस क्लोजिंग बेसिस पे। मॉर्निंग पे तो सेलिंग आई थी बैंक निफ्टी में डे हाई से, बट कंप्लीट रिवर्सल कह सकते हो। देखो एफईजी के अराउंड तो पहुंच गया क्रूड। लेट्स होप ये एफईजी ब्रेक करें, थोड़ा मतलब ब्रेक इन द सेंस थोड़ा लोअर एंड के आसपास आ जाए, तो यहाँ से फिर एक बाइंग प्लान कर लेंगे। बाकी देखो इंपॉर्टेंट लेवल है पूरा नीचे वाला, अगर ये लोअर लो नहीं बनाता है तो फिर ये प्रॉब्लम क्रिएट कर देगा, ब्रेकआउट के लिए चला जाएगा। तो ध्यान रखना सेलर्स थोड़ा सा, फिर ऊपर ज़्यादा कोई स्पेस है नहीं हमारे पास नियरेस्ट रेजिस्टेंस के तौर पे। जी मार्केटिंग किया एफईजी आज। on guys, 30 people are watching, like करते हो.
lower and not as grand, then they can also come back a tit for tat, dollar for dollar. If the United States
क्रूड ऑयल आ तो गया नीचे, लेट्स सी फाइनल लेवल तक आता है या फिर रुक जाता है एफईजी पे.
It goes to say 25% on Canadian imports and tariffs on that much, they're looking at potentially maybe aluminum. So we do see U.S. trading partners preparing for Trump 2.0, given the fact that we haven't got exactly what he's going to do on tariffs. We do know that he wants to have a review until April 1st. I like what the Mexican president said. She said, you know what, we all need to take a deep breath and keep our heads cool when dealing with this new administration and this new world.
We'll take a deep breath right now. Anne-Marie, appreciate it. Joining us here in Davos, Switzerland, Dave Mackay, the CEO of RBC. Dave, it's good to see you.
It's great to see you here in Davos.
We can talk about Squid Games a little bit later. Let's start with this spat. I don't understand this spat. Let me be perfectly honest. I remember when you joined us a number of months ago, 34 states in the United States run a surplus with Canada. If you strip out energy, the United States runs a surplus with Canada, except America needs the energy from Canada because of the way the refiners are set up. So can you help explain to me what this tension is all about?
Yeah, no, certainly there is tension, but you go back and look at the long-term relationship we've had with the United States. To your point, the supply chain integration, the energy integration. The U.S. imports 6 billion barrels a year, 6 million barrels a year. 60% of that comes from Canada. To your point, gets upgraded in the Midwest. That's significant profit. You can buy it at a 20% discount, upgrade it, make $10-20 billion of profit. So it's very strong alliance there. Therefore, there's a lot of signaling going on, I think, in the communication, signaling the importance of energy, signaling the importance of defense.
नेचुरल गैस में भी देखोगे लास्ट कैंडल ना एग्जैक्टली जो रेजिस्टेंस पे आई है कैंडल, लास्ट 15 मिनट की कैंडल ओपन इक्वल टू लो बना दिया है इसने. देखोगे लास्ट कैंडल है जो ओपन इक्वल टू लो बनी. इवन इट इज स्टिल ऑन रेजिस्टेंस लेवल तो वीक है, बट साथ में कैंडल भी ओपन इक्वल टू लो जो फर्स्ट टाइम लेवल को हिट किया है. नॉट गुड. लेट्स सी बड़ी सेलिंग देता है या फिर रुकता है नेचुरल गैस. इंपॉर्टेंट हो जाएगा. Aluminium falls at Trump consider 10% tariff on China in February 1st. नहीं, नेचुरल गैस में ऐसा कोई मेजर बीच में एफईजी दिख तो नहीं रहा. यहाँ पर कोई एफईजी नहीं है. क्रूड ऑयल में है, बट अगर ब्रेक कर दे तो मेरे अकॉर्डिंग अच्छा ही रहेगा. नीचे एग्जैक्ट सपोर्ट के आसपास आ जाएगा. क्रूड देखो एफईजी पे रुक रहा है थोड़ा बहुत. नीचे तक देखोगे टारगेट तो अप्रोक्सीमेटली 60 पॉइंट के अराउंड ही है, 30 पॉइंट मूव कर चुका है। लेट्स सी नीचे ब्रेक करता है नहीं करता है। सेल किया हुआ है, थोड़ा ट्रेल कर लेना 630 तक, अगर नहीं आया तो फिर थोड़ी प्रॉब्लम क्रिएट कर देगा। 630 न्यूयॉर्क सेशन की ओपनिंग है, आ जाए तो फिर नीचे बाइंग प्लान रखेंगे इधर पे। I'm good. DP World says see price will fall 20% if Red Sea attacks curved. I don't think so. Come on guys, 40 people are watching, like करते रहो सभी लोग, and take 5 minute break after every 30 minute as well.
US President Donald Trump says his administration is discussing new tariffs on Chinese goods by February 1st, raising the specter of a retaliatory trade war with the second largest economy in the world. Trump made that threat at the White House on Tuesday.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
In the same briefing, Trump singled out the European Union for troubling trade imbalances with the US, and also vowed to hit them with tariffs at some point.
The European Union is very, very bad to us. They treat us very, very badly. They don't take our cars. They don't take our cars at all. They don't take our farm products, essentially. They're going to be in for tariffs.
Mr. President.
It's the only way you're going to get back. It's the only way you're going to get fairness. You can't get fairness unless you do that.
Trump says Canada and Mexico are
Update on stories elsewhere this morning. Let's cross over to New York and catch up with Danny Berger for your Bloomberg Brief. Hey, Danny.
Hey, John. President Trump says that he is open to Oracle Chairman Larry Ellison or Elon Musk as part of a joint venture with the U.S. government. Trump signed an executive order on his first day in office, extending TikTok's sale deadline by 75 days. Billionaire Frank McCourt and Shark Tank investor Kevin O'Leary made a formal
नेचुरल गैस का ध्यान रखना गाइस, रेजिस्टेंस एरिया से, ठीक है, वो वीक है, ऑलरेडी पहले बता चुका हूँ। एफईजी कोई है नहीं इतना मेजर नेचुरल गैस में, बट इसलिए टारगेट बड़ा ही है यहाँ तक। थोड़ा संभल के इसमें क्रूड ऑयल के कंपैरिजन में। क्रूड ऑयल में एक एफईजी हो सकता है रुक जाए, बट क्रूड ऑयल फिर भी रेजिस्टेंस पे ही था। ये रेजिस्टेंस थोड़ा सा आप कह सकते हो उतना स्ट्रांग नहीं है जितना क्रूड का है। बाकी क्रूड स्टिल होल्डिंग दैट एफईजी 6570 के नीचे क्लोज करता है तो मेरे अकॉर्डिंग आ जाएगा फाइनल टारगेट तक, नहीं तो बस यहीं पर साइडवेज जा सकता है। तो ट्रेल कर लेना 630 से पहले, अभी टाइम है वैसे तो 1 घंटा है, 5:30 हो चुका है ऑलमोस्ट। बाकी कोई न्यूज आती है तो उस पर भी फोकस रखें, स्पेशली फ्रॉम यूएसए। ट्रम्प का कुछ भरोसा नहीं है कब कौन सा स्टेटमेंट दे दे। लाइक भी करो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। 30 people are watching, 20 likes. Come on, crude. कंसोलिडेशन में गया तो फिर मुश्किल हो जाएगा इसके लिए। यहीं पर रुक रहा है क्रूड ऑयल एफईजी पे। इम्पोर्टेंट है नीचे आना है तो 6570 के नीचे जाए, नहीं तो रुक जाएगा यहीं पर। अटक गया ये भी। क्रूड को ट्रेल कर लेना गाइस, ट्रेल द क्रूड ऑयल। बाकी नेचुरल गैस में कोई एफईजी नहीं है तो नहीं लगाया कोई मेजर। बाकी अब अगर ये प्राइस एक्शन देखोगे, अगर ये नीचे नहीं आया तो ध्यान रखना काफ़ी अच्छा प्राइस एक्शन बिल्डअप हो जाएगा सेम लेवल पे। ब्रेकआउट के चांसेस बढ़ जाएंगे उस केस में। बाकी देखो अगर ये ऊपर ब्रेकआउट के लिए अगर गया तो फिर हम थोड़ा सा अपर लेवल से एक सेलिंग का प्लान रखेंगे अगर ये नहीं ब्रेक करता है एफयूजी को। ठीक है, ये ऊपर वाला लेवल है, यहाँ कहीं सेलिंग का प्लान एक और रखेंगे। तो उस केस में फिर टारगेट थोड़ा छोटा हो जाएगा बिकॉज ये अगर ब्रेकआउट हो गया सेम रेजिस्टेंस बिकम सपोर्ट। बट लिक्विडिटी लेनी है मार्केट को तो थोड़ा आना चाहिए, सेम नेचुरल गैस के साथ है। कंसोलिडेशन ज़्यादा हुआ तो फिर कल की तरह एक ब्रेकआउट साइड ट्राई करे प्राइस। फर्स्ट टाइम ही आया यहाँ पे तो। पॉइंट का बन रहा है।
They don't really understand or believe because they don't really have any of the facts. How much are people waiting for some of that to shake out before completing a deal?
You know, I think people are waiting to see some deals go, quite honestly, and to do well in this environment. If I look at our IPOs from last year, though, of all of the IPOs that list on the New York Stock Exchange last year, in aggregate, they were up 58% versus their IPO price. To me, that's the sign that the market's really open. So once you remove that uncertainty around the election, now's the time to go.
I was speaking with one bank executive who said the market's been open.
in its first 2 days?
I think that he is very pragmatic when it comes to considering the ramifications of geopolitical tensions.
Do you feel like people are being very careful at this particular Davos? That everyone's like, yeah, we're excited. We don't know anything, but, we're excited and there's a lot of optimism. Or do you feel like people have a real concrete sense of kind of what the next year is going to look like?
I think people are optimistic in pockets. I think there is questions around, the geopolitical landscape is probably the biggest one, tariffs in particular, and obviously the knock-on effect of questions around tariffs is going to be inflation, because those two really do work hand in hand. So I'd say people are pretty optimistic, though. And even on the geopolitical side, if you look at, the deal that was done last week to release the hostages and the ceasefire in Israel, between Israel and Gaza, there is reason for optimism. There are green shoots that people are able to point to. There are data points that
positive steps already so far. I think we all hope we see more. Lynn, it's good to see you.
Good to see you guys.
See you very soon. I know. Lynn Martin there, the NYSE president from the New York Stock Exchange. Lisa, with an aversion to happiness and optimism.
No, hold
here in
on
Davos,
a second.
Switzerland.
No.
Okay.
No, happiness is a good thing. I actually think we need to celebrate happiness, study it actually more.
Ringing endorsement.
But I think that there's a feeling of what exactly am I missing? Because in the past, Davos messages have not necessarily been borne out. So I think it's important to question a consensus at a time when there still is a lot of uncertainty. Just being,
I'm winding you up. I totally agree with you.
I know, you're winding me up.
Gary Cohn said this yesterday. Gary came on the program and he said, you have to take everything in Davos with a grain of salt. Ken Rogoff was with us, formerly of the IMF. You're all familiar with the professor. Made the point that this time around, he's got doubts around whether we actually see that boom.
Well, we need a little bit more grains of salt on the sidewalk. Maybe we could get that.
Yeah, that's a different complaint. I'll share that complaint with you the next hour. And on the airlines, maybe. Up next, in the second hour of Bloomberg Surveillance, we'll catch up with the former US Secretary of State, John Kerry, the former Speaker of the House, Paul Ryan, the Coca-Cola COO, and the Gap Inc. CEO as well. From Davos, Switzerland.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
You talked about how governments are not looking at healthcare and investing in healthcare as much as they should. What's the message you'd like to send to those governments?
Well, I think a healthier population is always going to be more productive. It's just that sometimes the political will isn't there in some of these countries. So I hope that they can keep this as a priority, because a workforce that is 20 or 30% down during a pandemic or an outbreak, or there's certain diseases that keep spreading, is not healthy, it's not productive. And if you want everyone to perform at their best, and you want healthcare costs to be down, you don't want to be burdened with insurance costs and other costs, I think it's important to invest early in health, in child health, in women's health, and I hope that continues both in India and other parts.
The Fed is not getting the economy to slow to the extent it wants.
Prospects look like they are accelerating, improving, and valuations suggest that.
I wouldn't quite say a recession's around the corner, but it's not as many miles away as it was, at one time.
We are more concerned about the debt and the deficit today than we have been in a while.
I think that it's hard to really have a crystal ball about inflation right now. I think it's a much less certain picture.
This is Bloomberg Surveillance, live from Davos, with Jonathan Farrow and Lisa Abramowitz.
Shall we do this now? I know it's beautiful, but honestly, it is possibly one of the worst kept ski towns in Europe. And I'm talking specifically about the sidewalks.
There's been a lot of slippage. We've seen people
all the
falling.
time.
Yes, this is true. Yes,
all the
it's true.
time.
We can get into that later, but we can talk about
Secretary Kerry wants to weigh in, but he's going to have to wait on all of that. You want to weigh in now?
You're unhappy with
I know. Not with you. Not with you. I'm always happy to see you. I'm happy to see you. Got to get through some stuff first. I know. Just as difficulties. We can have a longer conversation in a moment, all right, about those things. Let's head over to Washington, D.C. There's a lot to talk about. Let's catch up with Anne-Marie. Anne-Marie, it's been another busy 24 hours and lots of changes from the incoming president.
An incredibly busy 24 hours, although I do need to weigh in. I do agree with you. They should just move it to Megève or San Moritz. That would be my preference. I'm not there this year. Good luck to you guys on those sidewalks. In Washington, D.C., it has been incredibly busy. Yesterday, we got another announcement from President Trump, flanked by tech executives like Larry Ellison and Sam Altman of OpenAI, talking about this AI initiative. And we are talking about a tremendous amount of money that the president wants to put towards this and the deregulation process he wants to see to make sure that we can have AI data centers and that America is leading the way for this. Take a listen to a little bit of what he had to say yesterday about this new initiative, which is called Stargate.
Announcing the formation of Stargate. So put that name down in your books, because I think you're going to hear a lot about it in the future. A new American company that will invest $500 billion at least in AI infrastructure in the United States, and very, very quickly, moving very rapidly, creating over 100,000 American jobs almost immediately.
So we still need to know more about the scope and some of the details when it comes to Stargate. What we do know is the chairman of SoftBank will be the one taking the lead on this, and then potentially other companies will also be working with this new joint venture, including the likes of NVIDIA, Microsoft, and ARM Holdings as well, John.
Anne-Marie, appreciate it. Now I can do a more formal introduction to the former U.S. Secretary of State, John Kerry, also co-executive chair of Galvanized Climate Solutions. Secretary Kerry, good to see you, sir.
Glad to be here.
We'll start again. I'll be more upbeat. I'm happy to see you. You know I am.
Thank you, sir.
The new president says drill, baby, drill. I want to understand how you feel about that and what kind of trajectory you think we might be going on through the next 4 years.
Well, I think the president's correct that we need an abundance of what we call firm energy. We need to make sure that America is leading in the technologies of this transition to new energy, clean energy. But I would say that build, baby, build is, drill, baby, drill ought to be replaced by build, baby, build, because that's what we need to do in all aspects of energy. There will be higher demand. He's absolutely correct, and I'm glad to see a $500 billion infrastructure announced, because that's going to be the key to our doing it, and it's going to be the key to leading in AI. But, and there's a huge but, data centers demand a massive amount of energy, and that's going to become very competitive. Will that energy be provided by clean energy, or is it going to just add to the problem we have of a warming planet with increased intensity to our storms, more damage all around the world? We haven't suddenly lost the connection between the choices we make about how we provide energy and its impact just because we elected a new president. So we've got to stay tuned into the science. We have to stay tuned into the marketplace, and the marketplace is going to move predominantly in the direction of this new energy. To wit, last year, about almost $2 trillion went into venture capital for new energy, clean energy systems. $1 trillion went into fossil fuel. That's a 2-to-1, first time ever shift in the marketplace. And if you look at what's happening in that marketplace, other technologies are coming on, like wind. Texas, the home of fossil fuels in America, that is now the leading state for the deployment of wind turbines. So I think the marketplace is going to continue to invest and move in this direction on a global basis.
Is that the marketplace or government intervention?
No, that's the marketplace. It's happening all around the world. I mean, I've been recently in the Far East, in Singapore, and recently also in the Middle East, in most of the Middle Eastern countries. Everyone is engaged in this transition. UAE, a major producer of oil and gas, is also a major producer of new nuclear plants. They've got 4 new nuclear plants. They have a vast array of solar, one of the largest fields in the world, and they are determined to have a higher level of energy produced by renewable energy.
To build on what John is talking about, I'm thinking about, let's say, the electric vehicle credits. And there was this idea that we would really transition people to vehicles that were considered cleaner. And yet China did it successfully because they have the resources to do that. The United States doesn't. They need to import them, and it actually makes the U.S. more dependent on other places. Were some of the government policies misguided in what was necessary to actually tackle the problem from an economic perspective?
I think we worked very hard to open up new supply chains, and we did open up new supply chains. India is an example. We invested about $500 million in trying to build, in building the largest production plant in the world. And yes, China has, in fact, captured much of that market. And they captured it, frankly, with unfair trade practices, which is one of the reasons that's a legitimate issue between us and them. And we have to work that out. Solar was really worked on and developed by the United States and Germany. And then China stepped in. There was a massive amount of dumping into our country, and the production gravitated towards China. But today, China is now, I mean, many people complain, including the president. The president said China is not doing what it should be doing. Well, China is the largest producer of oil,
Today, an avalanche of early actions from US President Donald Trump. How the January 6th pardons have sparked fury and concerns it'll embolden extremists.
What a U.S. withdrawal from the World Health Organization could mean for global health initiatives. And Trump's attack on diversity, equity, and inclusion begins. It's Wednesday, January 22nd. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Christopher Waljasper in Chicago.
And I'm Tara Oakes in Liverpool.
President Donald Trump began his first full day in office attending a prayer service at the National Cathedral in Washington, D.C. It was at that service that he got a sermon he may not have been expecting from Episcopal Bishop Marianne Edgar Budde.
There are gay, lesbian, and transgender children in Democratic, Republican, and independent families, some who fear for their lives.
She also made an appeal on behalf of immigrants fearing deportation. Trump was asked what he thought of the sermon later in the day.
I did think it was a good service. No. Thank you very much.
I have one message for President Trump. I'll see you in court.
California Attorney General Rob Bonta. 22 Democratic-led states have sued over Trump's plan to roll back birthright citizenship after he ordered government agencies not to recognize the citizenship of American-born children if neither parent is a U.S. citizen or legal permanent resident. Prince Harry has settled his lawsuit against Rupert Murdoch's News Group newspapers over alleged unlawful information gathering. His lawyer says that a deal has been reached to settle the lawsuit.
Houston, Texas, New Orleans, and other parts of the U.S. far south saw as much as 8 inches of snow on Tuesday. The storm also brought ice and strong winds that threatened dangerous conditions for the region, with more than 900 flights out of Houston canceled on Tuesday.
Israel has launched a military operation in the West Bank, describing it as an offensive against Iranian-backed militants. It comes just 2 days after the Gaza ceasefire took hold and just 24 hours after Trump lifted sanctions on Israeli settlers. And in Turkey, 9 people have been detained in connection with a ski resort fire at a hotel, which has killed 76 and injured dozens. Trump has announced a private sector investment of up to $500 billion to fund infrastructure for artificial intelligence. Trump says that ChatGPT's creator, OpenAI, SoftBank, and Oracle are planning a joint venture called Stargate, which will build data centers and create more than 100,000 jobs in the United States.
In 2021, Capitol Police Officer Brian Sicknick was assaulted during the January 6th riot. The next day, he died of multiple strokes. This week, our reporter Nathan Lane called up his brother, Craig.
Just wanted to get your reaction on the pardons.
After Trump pardoned the men and women who stormed the Capitol.
Well, how I view it is my brother died in vain. Everything he did to try to protect the country, to protect the Capitol.
Sicknick did not mince words.
What Trump did is despicable, and it proves that
Hundreds of rioters were freed on Tuesday, including Stuart Rhodes, the former lead of the far-right Oath Keepers group. He spoke to reporters after being freed.
Do you feel emboldened and perhaps legitimized and validated by the Trump?
Well, I don't feel emboldened. I feel vindicated and validated. Yes, absolutely. Of course,
Trump has described the riots as a peaceful day of love.
So, Nathan, the former leaders of both the Proud Boys and the Oath Keepers are now out of prison. What message might that send to extremist groups?
It's a very strong message to his supporters that what they did on January 6th in his name by trying to overturn the election, which he still falsely claims was stolen from him, that they were in the right. And that even if violence occurred, in a sense, it's okay. Extremist experts who track political violence have said they're very worried that this sends a message to these extremist groups like the Proud Boys that, essentially whatever they do in the name of Trump or for Trump will not be punished. And so it sets up this incentive structure for them to look out for opportunities to help them out.
So we paid $500 million to World Health when I was here, and I terminated it.
President Trump withdrawing the U.S. from the World Health Organization with the stroke of a pen on Monday.
It seemed a little unfair to me.
The move sent global health leaders scrambling to prepare for a WHO without the U.S. involvement. Our global health reporter, Jennifer Rigby, is in London covering the fallout.
Global health experts around the world have said this is a blow for the health of the world and also a blow for the United States, right? That's the argument they're making, that it's not just about the rest of the world. This could also affect the US because diseases don't respect borders. So in a pandemic situation, being out of the WHO is a risk for everybody.
So what could the removal of U.S. funding in particular mean for the services that the WHO provides around the world?
The US is the biggest funder for the WHO, but only about 100 million of it is money they have to pay because of the size of their economy. The rest of it is voluntary funding, right? Earmarked. So they can choose what that money is spent on within WHO. And in the past, that's been things like fighting HIV, tackling tuberculosis, and also health emergencies are all funded very heavily by the United States. Sometimes up to 3/4 US money goes into those programs.
Okay, so what happens next?
So under US law, the US now has to give a year's notice to leave the WHO, and they also have to pay any outstanding fees. So that year, a lot of global health experts are going to spend that time trying to change the Trump administration's mind. And, it could be seen that this is kind of like an incendiary sort of opening of a negotiation, right? Where you say, okay, we're out unless you do this. And that kind of remains to be seen exactly what the US would want from WHO in order to stay and what the WHO could or would give. But, there's a lot that could be done with US funding under an administration that wanted to change it without having to leave the WHO.
The first female uniformed leader of a branch of the US Armed Forces has been fired by the Trump administration. A senior official at the Department of Homeland Security saying US Coast Guard Commandant Admiral Linda Lee Fagan was fired because of leadership deficiencies, operational failures, and inability to advance the strategic objectives of the US Coast Guard, adding, on condition of anonymity, that one of the reasons was Fagan's excessive focus on diversity, equity, and inclusion, or DEI, policies. Fagan's firing comes less than 24 hours after Trump signed off on executive orders to eliminate DEI programs in federal government agencies.
We will forge a society that is colorblind and merit-based.
Race and Justice reporter Bianca Flowers has more.
The removal of Linda Fagan as commandant for the U.S. Coast Guard aligns with Trump's broader reach and approach to limiting or redirecting DEI programs across federal agencies. Fagan was very much known for her advocacy efforts and DEI policies in regards to recruiting more women, retaining talent from underrepresented groups. So I think her removal is very telling of possibly what
CrudeOil almost FEG breakdown पर है. ब्रेक करता है तो नीचे सपोर्ट जोन पे आएगा, वहां वापस बाइंग का प्लान रखेंगे. 6:30 होने वाला है, ध्यान रखना, थोड़ा सा मार्केट वॉलेटाइल हो जाएगा. कोई डेटा तो नहीं है आज. बाकी नेचुरल गैस भी थोड़ा बहुत आ गया. टारगेट थोड़ा नीचे तक है, बड़ा टारगेट है अराउंड 12 पॉइंट, तो इसको हाफ हाफ डिवाइड कर सकते हो. 6 पॉइंट का कंप्लीट टारगेट टोटल मिला के देखोगे तो लगभग 11 to 12 पॉइंट है. काफ़ी बड़ा टारगेट रहेगा, तो ट्रेल क्रूड ऑयल भी स्टक ही हो गया एफईजी पे जस्ट. यहाँ पर एक एफईजी नेचुरल गैस में भी कह सकते हो। करते रहो गाइस, 50 people are watching, 25 likes only। जिन लोगों ने लाइक नहीं किया लाइक करते रहो, 100 लाइक्स का टारगेट है। बाकी देखो नेचुरल गैस अगर इस एफईजी का ब्रेकडाउन रीटेस्ट कर दे तो इसके नीचे एक और सेलिंग का ट्रेड प्लान कर लेंगे। और फिर नीचे आता है तो यहाँ कहीं बाइंग का प्लान रखा जाएगा। लाइक्स आर कंप्लीटेड, कम ऑन गाइस, लाइक करते रहो सभी लोग। ओवर ट्रेडिंग मत करना, ठीक है? डोंट डू द ओवर ट्रेडिंग। वॉल्यूम एक्सपेक्ट रहेगा आफ्टर 6:30।
What else is to come for folks that are in positions that have been proponents of DEI?
Looking at these executive orders on DEI, can they extend beyond federal agencies?
They can have broader implications for businesses and contractors who depend on federal government funding. These could be federal contractors, nonprofits, educational institutions that may have to reassess DEI programs to comply with some of these new directives.
Fagan and the Coast Guard could not immediately be reached for comment. And for today's recommended read, we take a look at Trump's approval rating at the start of his term.
One more thing guys, अगर आप टेलीग्राम पे देखते हो मेरे चैनल को या सर्च करते हो ट्रेडिंग विद सागर के नाम से, तो वहाँ पर बहुत सारे फेक चैनल हैं। डोंट जॉइन दोज चैनल्स, ओके? आई एम नॉट प्रोवाइडिंग एनी काइंड ऑफ सर्विसेज लाइक कि कोई कॉल दे दो, पुट ये बाई कर लो, ये सेल कर लो, ऐसा कुछ ना तो मेरा टेलीग्राम चैनल है और ना ही मैं कोई अकाउंट हैंडलिंग करता हूँ। तो अगर मेरे चैनल के नाम से या फिर कोई अगर मेरे नाम से मांगता है तो ही और सी इज़ फेक, डोंट बिलीव ऑन दोज। मेरा जो टेलीग्राम एक्चुअल टेलीग्राम चैनल है उसका लिंक आपको डिस्क्रिप्शन बॉक्स में मिल जाएगा, सिर्फ वही ओरिजिनल है, ठीक है? यहाँ पर यूट्यूब पे जाओगे आपको सब कुछ डिटेल मिल जाएगी। दोज आर द ओनली ट्रेडिंग विद सागर सर्च करना, अभी का लाइव देख सकते हो। डिस्क्रिप्शन बॉक्स में चले जाना, डिस्क्रिप्शन बॉक्स में आपको ठीक है, ये है अपना टेलीग्राम चैनल ओनली, ये ट्विटर, ये इंस्टाग्राम, और स्क्रीन पर एक नंबर दिया होगा वो व्हाट्सएप नंबर है। बाकी अगर ये टेलीग्राम का लिंक अगर ओपन ना हो तो अपने टेलीग्राम पे आप डायरेक्टली सर्च कर लेना ट्रेडिंग विद सागर, तो बहुत सारी फेक प्रोफाइल आएंगी, उनको ज्वाइन मत करना, ओपन करके देख लेना एक बार, प्रीव्यू चैनल करके ऑप्शन आता है। अभी फ़िलहाल के लिए 2947 सब्सक्राइबर ही हैं। प्रीव्यू चैनल करके देखोगे तो उसके अंदर आपको दिख जाएगा, कोई भी डेटा आता है लाइव में आता हूँ या फिर कोई और डिटेल्स होती है वही मैं शेयर करता हूँ। वहाँ पर आपको ईमेल आईडी मिल जाएगी मेरी, व्हाट्सएप नंबर एंड ऑल दीज। ना तो यहाँ पर कोई मैं कॉल देता हूँ, ना ही किसी से किसी तरह का कोई फंड यहाँ पर ट्रांजेक्शन होता है। ठीक है, तो इस तरह का कोई भी अगर अकाउंट है, सारे फेक हैं, ध्यान रखना। यहाँ पर तो नहीं आएगा शायद, आई थिंक ट्रेडिंग विद सागर आया क्या? So please don't give your credential to anyone. ठीक है, सेफ एंड कोई भी अगर ऐसी सर्विस देता है तो प्लीज़ स्टे अवे फ्रॉम दोज। स्पेशली कोई अगर आपका अकाउंट का क्रेडेंशियल मांगता है कि हम आपका अकाउंट हैंडल कर देंगे, especially if those person are not SEBI registered. Like I'm not a SEBI registered, so I can't give those kind of services. Even जो registered भी होते हैं उनको भी अकाउंट मत दो अगर सर्विस लेते भी हो उनकी। क्रूड ऑयल नीचे आ गया, लेट्स सी 6550 के अराउंड आता है तो बाइंग का प्लान रखेंगे वहां से। आधा घंटा और है, न्यूयॉर्क सेशन भी ओपन होने वाला है।
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
In case you missed it on Bloomberg Crypto.
Are you concerned that with this new stablecoin, folks will be less interested in XRP?
We see them as really.
देखो बिटकॉइन भी नीचे सपोर्ट रेंज के अराउंड पहुंचने वाला है, इसमें भी एक बाइंग का प्लान रख सकते हो डाउन साइड पे 1,04,050 के अराउंड। ये नीचे आता है तो एक सपोर्ट दिख रहा है 15 मिनट टाइम फ्रेम पे बिटकॉइन। $1,50,000 4000। ओके देखो, नेचुरल गैस में भी हाफ प्रॉफिट बुक करके चलना, ठीक है। अगर एफईजी का ब्रेकडाउन रीटेस्ट होता है तो यहाँ पर एक और सेलिंग का प्लान कर सकते हो, अगर फिर से किसी को लेनी है, या क्वांटिटी ऐड कर सकते हो। जो लोग ऊपर से सेलिंग में, यहाँ पर हाफ क्वांटिटी बुक करके ट्रेल करिए। फ्रेश एंट्री देखते हैं अगर ब्रेकडाउन रीटेस्ट होता है इस एफईजी का। लाइक भी करते रहो, 40 लाइक्स इज द टारगेट गाइस, सॉरी 100 लाइक्स इज द टारगेट। कोई क्वेश्चन है तो कमेंट बॉक्स में पूछ सकते हो। लोअर सपोर्ट के नीचे देखोगे तो ऐसा कोई सपोर्ट वहां पर बाकी बचा नहीं है, काफ़ी लो लेवल पर ही है फिर सपोर्ट। उसके बाद अगर नीचे लोअर लेवल पे सपोर्ट होल्ड नहीं करता है प्राइस क्रूड में। थाउजेंड 450 के अराउंड। नेचुरल गैस में हाफ प्रॉफिट बुक करके चलना गाइस। एफईजी ब्रेकडाउन रीटेस्ट करेगा तो और मजा आएगा इसमें डाउन साइड पे। मयूर वाडकर जी, हो गया आज का आपका, चलिए बढ़िया है, ग्रेट। नेचुरल गैस में सेल निकल गए हो। वैसे फाइनल टारगेट हुआ नहीं है, अगर चाहो तो अगर कुछ क्वांटिटी ट्रेल करना चाहते हो तो ट्रेल भी कर सकते हो। हाफ टारगेट बुक करके, थोड़ा टारगेट बड़ा है, इतना डायरेक्टली तो नहीं गिरता है प्राइस हमेशा कभी भी। शर्मा जी, कॉल पे बात करनी है, बताइए क्या हेल्प कर सकता हूँ। नेचुरल गैस रुक गया वहीं पर एफईजी के नीचे। ब्रेकडाउन जरूरी है और नीचे आना है तो, नहीं तो रेंज बना देगा प्राइस। पीएम भी हो चुका है गाइस, 610 हो चुका है, 630 न्यूयॉर्क सेशन की ओपनिंग रहेगी, ध्यान रखना। इंपॉर्टेंट कैंडल है 6:30 पीएम कैंडल। न्यूयॉर्क सेशन इज गोइंग टू ओपन। क्रूड ऑयल भी देखो सपोर्ट पे आ चुका है, सेलिंग वाले निकलना चाहो निकल जाओ, उनका टारगेट हो चुका है 60 पॉइंट का। नीचे एक सपोर्ट रेंज रहेगा, यहाँ थोड़ा बाइंग का प्लान करेंगे। देखो दो ऑप्शन है, या तो अभी डायरेक्टली बाइंग कर लें या फिर थोड़ा वेट करें 6:30 की कैंडल का, क्योंकि 6:30 की कैंडल का भरोसा नहीं है, कुछ भी कर सकती है नीचे। बाकी ये लास्ट सपोर्ट जोन ही है, अगर ये होल्ड नहीं होता है तो फिर सीधा आप कैन एक्सपेक्ट कर सकते हो 6450 अगर ब्रेकडाउन रीटेस्ट हो गया तो। बाकी एफईजी अब रिमूव कर सकते हैं, इसकी ज़रूरत नहीं पड़ेगी। कि दो तरह से ट्रेड करना है यहाँ पर क्रूड ऑयल में बाइंग के लिए। फर्स्ट या तो वेट कर लो 6:30 की जो कैंडल बनेगी उसका वो ओपन हो जाएगी, उसके बाद बाइंग करना, ठीक है। या फिर अगर डायरेक्टली बाइंग कर रहे हो बिफोर 6:30, क्योंकि याद रखना इसके बाद एक ही कैंडल है, फिर 6:30 की कैंडल ओपन हो जाएगी और वहाँ पर कैंडल ओपन इक्वल टू हाई बना के नीचे चले गई तो रिस्क हो ज़्यादा बढ़ जाएगा। तो क्वांटिटी अगर डायरेक्ट बाई कर रहे हो थोड़ा सा कम रख सकते हो, बाकी 6:30 पे अगर लेवल पे रहा तब क्वांटिटी ऐड कर लेना। गॉट इट। बाकी नेचुरल गैस स्टिल होल्डिंग द एफईजी, ब्रेक नहीं किया है तो इसमें कोई फ्रेश एंट्री और नहीं बना सकते। एफईजी अगर ब्रेकडाउन रिटेस्ट करेगा तो इसमें एक और सेलिंग का ट्रेड प्लान करेंगे, नहीं तो ये रेंज बाउंड है फिलहाल। बाकी सेलर्स निकल सकते हैं, ठीक है, सेलर्स का टारगेट हो चुका है। बाइंग का देखो टारगेट कहाँ तक रखेंगे। यूएस मार्केट नहीं, न्यूयॉर्क सेशन कह रहा हूँ मैं, यू नो फॉरेक्स का न्यूयॉर्क सेशन की बात कर रहा हूँ। आई एम नॉट टॉकिंग अबाउट यूएस मार्केट। यूएस मार्केट तो 8 पीएम पे ओपन होगा, उसमें टाइम है काफ़ी। फॉरेक्स का न्यूयॉर्क सेशन ओपन होता है, जैसे लंदन सेशन है, एशियन सेशन है ना, से प्री मार्केट कह लो यूएस मार्केट से पहले। थोड़ा नीचे अगर आए US Canada can strengthen energy rare earth material trade. थोड़ी देर पहले तो न्यूज़ कुछ और ही आई थी, US चाइना लिखा था इसमें. 60 people are watching. Like करते रहो guys. Don't forget to like the stream. इसका AMD कितना चल रहा है? SDFC. HDFC बैंक देखोगे अभी भी 1% पॉजिटिव चल रहा है क्लोजिंग बेसिस पे. इसका रिजल्ट तो अच्छा आया था ऑलरेडी. NTPC board to consider second interim dividend for fiscal year 2025. कब मिलेगा इसका डिविडेंड? सेकेंड इंटरिम डिविडेंड फॉर फिजिकल. जनवरी 25 को आई थिंक इनकी बोर्ड ऑफ डायरेक्टर्स की मीटिंग है. अच्छी न्यूज़ है एनटीपीसी स्टॉक होल्डर्स के लिए. सेकेंड डिविडेंड इंटरिम डिविडेंड मिल सकता है. कितना देते हैं लेट्स सी. शाम को 11 इंडियन टाइम के अकॉर्डिंग 11:30 पर सैमसंग गैलेक्सी अनपैक्ड भी है. दोज हु आर एंड्रॉयड यूजर्स इंडियन टाइम के अकॉर्डिंग रात को 11:30 पर दे आर इंट्रोड्यूसिंग न्यू फोन्स, मोबाइल फोन्स. ठीक है, नेचुरल गैस स्टक हो गया वहीं पर. 15 मिनट इज लेफ्ट. 15 मिनट और हैं बस. न्यूयॉर्क सेशन की ओपनिंग पे नेचुरल गैस फिर रिपीट कर दूं, ऊपर रेजिस्टेंस है, नीचे एफईजी पर रुक गया ये. एफईजी के नीचे अगर कैंडल क्लोज ब्रेकडाउन रीटेस्ट फॉर्मेशन होता है तो फिर से वापस और सेल कर सकते हैं, नहीं तो इट इज साइडवेज इन दिस रेंज मोस्ट प्रॉब्ली. क्रूड को देखोगे सेलर्स का टारगेट हो चुका है. बाइंग्स यहाँ पर बाइंग कर सकते हैं. क्वांटिटी रख चाहो तो कम वेट रखना. अभी 6:30 की कैंडल ओपन होगी. आफ्टर द न्यूयॉर्क सेशन इज गोइंग टू ओपन. You can trade after that as well, or you can add more quantity after that, 6:30 candle 15 minute, because sometime वो 6:30 की कैंडल पे सडनली कोई कैंडल बनती है, सपोर्ट रेजिस्टेंस ब्रेक हो जाते हैं. ऊपर टारगेट, ऊपर वाला जो एफईजी बना है यहाँ तक, ये टारगेट रहेगा बाइंग का. ऊपर वाला जो एफईजी है दैट विल बी द टारगेट. अगर एफईजी के ऊपर ब्रेक कर गया तब फिर हम एक्सपेक्ट करेंगे 6,645. नेचुरल गैस में मैं एफईजी से बाइंग सेलिंग रिकमेंड करता नहीं हूँ चांद सर वाले जी। अगर आप कर रहे हो तो क्वांटिटी थोड़ी कम रखना। अभी 630 की कैंडल भी आने वाली है। ब्रेकडाउन रिटेस्ट पे सेल जरूर कर सकते हो, इतना कह सकता हूँ, या फिर नीचे सपोर्ट पे आ जाए तो वहाँ बाइंग कर सकते हो। करते रहो guys. Don't forget to like the stream. 70 people are watching. At least 70 likes हो जाने चाहिए अभी तक। बड़ा स्लो लाइक कर रहे हो, बताओ।
And merchandising and great execution. And along the way, we became a retailer that sold stuff. We had brand familiarity and we had fans out there, but we lost the storytelling part of our brands, and arguably our brands became less relevant. And so we needed to really go back to the roots of each one of our brands and talk about what is the brand purpose? Why are we here? How did we get here? And so each one of our brands follows a playbook, and it starts with the purpose of every brand. Then we study the insights, consumers, and trends, and we create amazing product at distinct value. And we then connect that product to great storytelling through marketing that's culturally relevant. And last but not least, as a retailer, retail is detail. And so execution matters above everything else. That's a combination of a lot of sequencing that takes a lot of time and diligence, but the proof is in the metrics, and we're making a lot of progress.
There's a lot to unpack there, including marketing that's culturally relevant. I'm thinking influencers and how you sort of have tapped into different voices other than just non-traditional advertising. How big of a shift was that to work with individual people and kind of hitch the brand to them?
Yeah, well, I'll tell you, it was a shift. But with our brands that are legacy brands, we went back to the origin story of how did these brands begin with, right? And although marketing has evolved and the media landscape has evolved, today it's really important to be where your consumers are, and they're everywhere. But when you have a clear purpose and precise brand values and great product with great perspective, you can drive a lot of synergy across multiple platforms and feel like it's one voice. And a lot of the work that we've been doing has created that brand personification, whether it's through influencers, social media, the digital dialogue. You need to be everywhere your consumers, but you need to be there with creative that's precise, and you need to be interesting to get people interested. And we've done some really good work so far.
It's fascinating to me because there's both a shift away from fast fashion, and then there's uber fast fashion that's coming off some of the social media trends that people hop onto and want to buy through the social media networks. What's the complication in dealing with this sort of very rapid fashion, especially at a time where there's some uncertainty about supply chains as well as some of the international relationships?
Sure. First, I would say we're not fast fashion. We're generational brands. We're legacy brands. We have incredible key items that people depend on, khakis and Oxfords and denim and Athleta with key core concepts. So we are certainly fashionable, but we're also very reliable for great product at great value. We then have a layer of fashion that follows and in some cases defines trend, but you never want to be too trendy. We want to be on trend, but never too trendy. And that's the balance of the art and the science that goes into our brands and any brand for that matter. Fast fashion tends to be faster with trends. We're getting faster at creating new and exciting product into our stores, but we have reliable, great basics with great storytelling, great value, and great style.
Well, originally during the first Trump presidency, there was a question around retailers and how much they would get hit disproportionately from potential tariffs. How are you immunizing some of your supply chains from tariff uncertainty, let alone the actual tariffs themselves?
Yeah, well, I would give credit to our supply chain team, and they've done an excellent job over the last several years diversifying our footprint. Our manufacturing footprint today is really fully diversified. Less than 10% of our product is coming out of China. We really have a fantastic global supply chain that is driving incredible product development all over the world. Tariffs, as they come, will be able to navigate and deal with it, as everybody will. We're not, in isolation of the overall challenge. But it's our job to create great value and great style and execute with excellence. And it's our job to figure out the P&L ramifications of that, but make sure that our consumer proposition stays intact. And that's how businesses get through these type of scenarios.
As you pulled back from China, could you give us a sense of where you went, where you diversified to?
Southeast Asia, Central America, we're in India as well. We've got Vietnam as one of our great sourcing countries. So we've got a really diversified footprint, and we continue to expand and explore. And in some cases, going to developed markets and developing markets using our platform to bridge opportunities. I think one of the points of pride of the heritage of our company is we bridge gaps to create a better world. And much of the work that we're doing here in Davos is learning, connecting, listening, and living our purpose to bridge gaps to create a better world. And in some cases, bridging the opportunity gap is going out and developing product in places that need that work.
News when you want it with Bloomberg News Now. I'm Karen Moscow. President Donald Trump widening his tariff threats to include China and the European Union. He's threatening 10% tariffs on both.
It's not just China. China's an abuser, but the European Union is very, very bad to us. They treat us very, very badly. They don't take our cars. They don't take our cars at all. They don't take our farm products, essentially. They don't take very much. We have a $350 billion deficit with the European Union. They treat us very, very badly.
And Trump made the comments at the White House yesterday. The threats echo comments made through Trump's re-election campaign. The only action actually taken so far is the call for a review of trade practices. That's due by April 1st. It potentially gives China and others almost 10 weeks to avert new levies or address his demands. President Trump has also announced a new investment push for artificial intelligence. We get more with Bloomberg's Amy Morris.
The initiative is led by SoftBank, OpenAI, and Oracle in a joint venture worth billions of dollars. President Trump.
It's the largest AI infrastructure project by far in history, and it's all taking place right here in America. I'm going to help a lot through emergency declarations because we have an emergency. We have to get this stuff built.
It begins with an initial $100 billion investment, which could scale up to $500 billion over the next 4 years. The initiative is called Stargate. It aims to create 100,000 jobs focused on AI and related infrastructure, including investments in data centers, semiconductors, and energy. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. Well, the president also said he would be open to Oracle chairman Larry Ellison or Elon Musk purchasing TikTok as part of a joint venture with the U.S. government.
The U.S. should be entitled to get half of TikTok, but it's worthless if the president doesn't sign, then it's worthless. So I think, like a joint venture, I think we would have a joint venture with the people from TikTok. We'll see what happens.
While TikTok temporarily went offline over the weekend, Trump signed an executive order on his first day in office to extend the deadline for a sale by 75 days. Billionaire Frank McCourt and Shark Tank investor Kevin O'Leary made a formal offer to buy TikTok earlier this month. Trump is also taking steps to cut funding to diversity, equity, and inclusion. The White House says those roles will be placed on paid leave, and the offices related to those programs are being ordered to shut down. In a separate order, the administration moved to limit diversity preferences in federal contracting. That revokes a civil rights era order that sought to reduce racial or gender disparities among government contractors. Well, we're finding out more about some of the people Donald Trump pardoned on day one of his term. One is Ross Ulbricht, the founder of the Silk Road Marketplace. That fulfills a campaign promise he made to court the cryptocurrency community. Ulbricht was sentenced to life in prison in 2015 for running a dark web marketplace where illegal drugs and hacker tools were sold using virtual currencies. Netflix shares surging to an all-time high. The streaming giant at 18.9 million customers in the fourth quarter. That's the biggest quarterly subscriber gain in history. It was fueled by the return of Squid Game and the first major live sporting event. Ted Sarandos is co-chief executive officer of Netflix.
We are constantly trying to broaden our programming, and live events is one of those things, and sports is part of that live events. So when I look at this and say that's a really fantastic thing, but but it doesn't really change the underlying economics of full season big league sports being extremely challenging. So if there was a path where we could actually make the economics work for both us and the league, we certainly would explore.
And that's Netflix co-CEO Ted Sarandos, who says the company is raising prices. The most popular U.S. plan is going to $17.99 a month. That's an increase of $2.50. Netflix is also increasing the cost of its cheaper advertising-supported plan. A major winter storm that slammed Texas and the northern Gulf Coast is spreading heavy snow, sleet, and freezing rain across parts of the Florida Panhandle and eastern Carolinas. Warning areas include the big cities like Jacksonville, which could see snow, sleet, and accumulating ice into today. Johnson & Johnson beat Wall Street's fourth quarter expectations as strong cancer drug sales compensated for a decline in demand for the company's blockbuster psoriasis treatment. Prince Harry claimed a monumental win as Rupert Murdoch's UK tabloids made an unprecedented apology for intruding in his life over decades and agreed to pay substantial damages to settle his privacy invasion lawsuit. Futures are higher, lifted by a slew of robust corporate results. Right now, S&P futures are up 0.5%, Dow futures up 1/3%, and NASDAQ futures up 0.9%. 10-year Treasury yield 4.57%. And that's news when you.
Guys, natural gas FEG ब्रेक किया है, well and good. यहाँ पर अगर ये हल्का सा रीटेस्ट करता है ना, अभी कैंडल क्लोज हो ही जाएगी शायद, अगर ये रीटेस्ट करता है तो ये वापस एक सेलिंग का प्लान कर सकते हैं यहाँ पर, और किसी को क्वांटिटी ऐड करनी है तो वो और क्वांटिटी ऐड कर सकते हैं, बाकी ट्रेल कर लेना जिन लोगों ने ऊपर से सेल किया हाफ प्रॉफिट बुक करके। फाइनल टारगेट नीचे रहेगा, यहाँ पर आएगा तो फिर बाइंग करेंगे 317 के अराउंड। बाकी क्रूड ऑयल भी सेलिंग का टारगेट तो हो गया था, सपोर्ट पर ही है, यहाँ से थोड़ा सा बाइंग करेंगे तो ऊपर एफईजी तक का टारगेट रहेगा। जिन लोगों ने किया है वो लोग चाहे तो आप कॉस्ट पर रख सकते हैं एसएल। न्यूयॉर्क सेशन ओपन होने वाला है, 6:30 की कैंडल बनने वाली है, बस 30 सेकेंड ही रह गए। बाकी जो लोग वेट करना चाह रहे हैं तो 6:30 की कैंडल का वेट कर सकते हैं, ठीक है। न्यूयॉर्क सेशन की ओपनिंग पर कभी कभी मार्केट सडनली मूव कर जाता है। बाकी फिर यूएस मार्केट ओपन होगा 8 बजे, उसके अलावा और कोई डेटा तो नहीं है आज के दिन। क्रूड ऑयल की इन्वेंट्री भी नहीं है आज, ध्यान रखना, देयर इज नो क्रूड ऑयल इन्वेंट्री शेड्यूल फॉर टुडे। न्यूयॉर्क सेशन ओपन गाइस, न्यूयॉर्क सेशन ओपन हो चुका है। लेट्स सी किस तरह से मूव करता है प्राइस नाउ। हो चुके हैं, लाइक भी करते रहो गाइस, इतना धीरे लाइक मत करो, थोड़ा फास्ट फास्ट लाइक करो।
Occurs, we show you where it is, why it happened, and the business impact, so you can prioritize action and trigger auto remediation.
Well, the era of Trump 2.0 has begun, and though risks of reigniting inflation do persist, President Trump is inheriting a U.S. economy that's in pretty good shape. On his first day in office, President Trump injected some uncertainty into that backdrop, though, signing the most day-one executive orders in recent history. Joining us now, we want to bring in Mohammed El-Arian. He is the president of Queens College at Cambridge University, also chief economic advisor at Allianz, also alongside market domination co-host Julie Hyman. Mohammed, it's great to have you back here on Yahoo Finance. I'd love just to get your first reaction just in terms of some of the market implications, economic implications from the executive orders that were signed yesterday.
Thanks for having me on.
The market wanted to treat yesterday like drops Friday or the CPI date, which is an event risk, and you get the information and you move on. What the market is realizing is that this is much more dynamic. This will go on for a while. And you mentioned what happened in the FX market. That was fascinating because on the first set of trade-related comments, the dollar weakened quite a bit. Then we got the second set a few hours later, and the Mexican peso depreciated, the Canadian dollar depreciated, and the dollar regained half of what it had lost. So the message is this is not a one-day event risk, both upside and downside. This is something that's going to remain with us. So far, the market likes what it has been hearing, but it's early days.
Mohammed, your point is well taken. This is just the beginning of what could be a long 4 years for the markets. In the next, say, 100 days, obviously that's usually a period that people watch closely. What are you going to be watching most closely? What's going to be most pivotal for markets?
So 5 areas. Some we know already. So energy is really important. And that we've heard a very clear message from the president about drilling. Immigration is a second issue because that impacts the labor market. And to what extent are we going to see the repatriation of illegal immigrants? And how does that impact the labor market? So that's the second one. Trade, of course. And we are early days. If anybody in China or Europe is relieved, I tell them just wait. It's early days. So we need to see what happens on tariffs, deregulation, and fiscal. So 5 areas, all of which have a significant impact on earnings, on the economy, and will influence how the market behaves.
Mohammed, you recently wrote in the Financial Times about many things, among them that one of the things that propelled Donald Trump to this second term as president is sort of the economic dispersion in the United States. The idea that the economy, as we showed coming into you, is on pretty good footing, but it did not benefit everyone equally. From what we have seen from this administration in the first day and from what you're expecting, do you think that's going to change? Do you think that the measures that Donald Trump is expected to implement are going to go to the heart of that issue that got him into office?
Yeah, I mean, the issue of dispersion, or what a lot of people are called the K-shaped economy, where the rich are doing better, but the poor continue to struggle, that was very well understood by President Trump. And that is the reason why the electorate didn't appreciate the economic exceptionalism that everybody talks about, that is strong U.S. growth, because the benefits of that growth were not shared widely. And if you're at the bottom of the household income distribution, you've run down your pandemic savings, you've maxed out your credit cards, and you're insecure, you're financially insecure. President Trump understood this much better than the Democrats. The Democrats were never able to address that issue in a manner that allowed them to get credit for the overall economic performance. So there's full awareness in the Trump administration of this issue. There's a promise that they will address it. And that's why the details of the fiscal are going to be so important, as will other parts of the policy. But it is fully understood by President Trump because it has helped propel him back to the White House.
And so what we've heard, Mohammed, is that there will be a golden age of America. Will that golden age of America then extend into the income cohorts that have not felt like they've been in a golden age, even if we do see an extension of the Tax Cuts and Jobs Act in a 2.0 fashion?
It must. If we are going to have a golden age, there has to be better trickle down, and I hate that word, but better trickle down to the low income people. You cannot run an economy with K-shaped characteristics for a long time. Just like at some point, we have to worry about the bad and the ugly of the global economy. You've heard me say this. The good of the global economy is the US. The bad is China. The ugly is Europe. These are the 3 major economic areas. And there's massive divergence as well there. The US is outpacing the other 2. The IMF revised its global economic outlook for 2025. Guess what? It took the US growth rate up by 0.5 percentage points. That's an enormous amount for a large economy. And it took down Germany and France. So these 2 issues are going to be key. One, can he address internal diversion between the rich and the poor? And 2, Can he convince China and Europe to get their act together so that we don't get this external dispersion? Because either we're going to level up the global economy or we're going to level down the global economy. And leveling up is a hell of a lot better than leveling down.
To sales less crash 18% in 3 days, 44,600 crore loss. Wow. Budget 2025 income up to Rs 10 lakh rupees per year to be tax free. New 25% tax slab may be introduced and announced. Okay, न्यूयॉर्क सेशन की कैंडल क्लोज ही होने वाली है ऑलमोस्ट. अब सीधा यूएस मार्केट ओपन होगा 8 PM पे. उससे पहले और कोई मार्केट तो नहीं है, डेटा भी नहीं है, कोई नई न्यूज अगर आएगी तो देखेंगे. प्लान क्या कर सकते हैं, वापस नेचुरल गैस नीचे आता है तो इस सपोर्ट एरिया पे लोअर एंड पे यहाँ बाइंग का प्लान रखना। क्रूड में भी देखो थोड़ा बहुत ही पुल बैक आया है, वापस प्राइस थोड़ा लोअर लेवल के आसपास फिर से मिलता है तो वापस बाइंग का प्लान रख सकते हैं। ये ऊपर एफईजी तक टारगेट रहेगा, इस एफईजी का अगर ब्रेकआउट रीटेस्ट हो गया तो फिर 6646 तक का एक टारगेट रखेंगे। बाकी अगर ये नीचे सपोर्ट होल्ड नहीं करता है, ब्रेक डाउन कर देता है, तो फिर ब्रेक डाउन रीटेस्ट पे और सेलिंग एक्सपेक्ट करी जाएगी। फिलहाल के लिए यही सपोर्ट है लास्ट वी हैव। इसको 15 से पे कर दो। मिनट है कैंडल क्लोज होने में स्टिल।
Global thought leader.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
To quote the late, great Alfred E. Newman, what? Me worry? Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bastin.
And I'm Alex Steele. I guess everyone's feeling pretty happy today.
Why not?
We're kicking you off to the closing bell right here in the U.S. So we're off the highs of the session, but nonetheless, we see a pretty strong rally underway, whether you're looking at tech, whether you're looking at the Dow, whether you're looking at the S&P. Now, tech, not the strongest performer of the day. That belongs to the S&P and the likes of, say, the Russell and the mid caps. But I did want to point out what is helping lead the rally, Romaine. You're going to get into it as well, but that's going to be AI. Look at the AI tech ETF, up a whopping 2%. Oracle up 7% as we wait for some kind of announcement from President Trump about OpenAI, Oracle, and SoftBank, some kind of deal in that space.
Big tech getting a nice boost today, but we should point out.
नेचुरल गैस को देखोगे कैंडल वापस एफईजी के अंदर ही वापस आ गई। लास्ट कैंडल ने ब्रेकडाउन जरूर कर दिया था एफईजी का, बट लुक एट दिस कैंडल, वापस एफईजी के अंदर ही क्लोज कर गई है। लग रहा है साइडवे जाने के मोड में है। ये थोड़ा सा नीचे क्लोज करती तो यहाँ पर भी एक सेलिंग का ट्रेड वापस मिल जाता। 323.8 के नीचे क्लोजिंग ऊपर आ गई वापस। तो कोई नहीं, इसमें भी प्लान रहेगा, नीचे आएगा तो सपोर्ट पे यहाँ पर एक बाइंग का प्लान रहेगा। सेलिंग के लिए भी डायरेक्ट मत करना, रीटेस्ट नहीं किया इसने एफईजी का। ब्रेकडाउन हुआ, कैंडल क्लोज हुई, नेक्स्ट कैंडल वापस रिकवर कर गई 630 वाली कैंडल। तो अगर ये वापस ब्रेकडाउन रीटेस्ट करे, मतलब फिर से कैंडल क्लोज करे एफईजी के नीचे, तो इसमें एक सेलिंग का ट्रेड तब प्लान करना। ठीक है, लास्ट कैंडल देखोगे वापस एफईजी के अंदर क्लोज हो गई है, एफईजी के नीचे भी क्लोज जाती तो हम ले सकते थे यहाँ पर डायरेक्टली, बट बिकॉज दिस कैंडल इज क्लोज्ड अबव, नॉट अबव द एफईजी बट इनसाइड द एफईजी, सो भी हम कह नहीं सकते कि ये ब्रेकडाउन जो लास्ट कैंडल ने दिया था वो एक्चुअल है या नहीं है। यही थोड़ा सा इशू रहता है 630 की कैंडल पे। कोई नहीं, वापस अगर कैंडल क्लोज करे पुल बैक दे वापस करना, नहीं आता है तो फिर नीचे सपोर्ट रहेगा यहाँ बाइंग के लिए। ऊपर रेजिस्टेंस है डे हाई जो कि टेस्ट हो चुका है, कोई नया लेवल और बना नहीं है प्राइस में। क्रूड वापस थोड़ा सा बाइंग प्लान करना, ऊपर एफईजी तक का टारगेट रहेगा, एफईजी ब्रेक होता है तो ब्रेकआउट रीटेस्ट पे फिर और थोड़ा और ऊपर का टारगेट रख सकते हो। बाकी अगर ये ब्रेक डाउन कर गया नीचे तो फिर ब्रेक डाउन रीटेस्ट पे सेल करेंगे। क्रूड थोड़ा सा नीचे और आ जाए वापस। देखें जरा कितने पॉइंट का एसएल बन रहा है यहाँ पे। पॉइंट काफी है। ठीक है, इतना तो रखना ही पड़ेगा एटलीस्ट 15 to 20 पॉइंट एटलीस्ट। थोड़ा बहुत ऊपर नीचे कर सकता है प्राइस, ध्यान रखना, बट जितना छोटा एसएल बने उतना बेटर। लाइक भी करते रहो गाइस, 50 लाइक्स हो चुके हैं, 100 लाइक्स का टारगेट है। डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। सब्सक्राइब भी करते रहो चैनल को।
Impact for different companies.
How do you look at the sequencing them for your clients when it comes to tariffs to tax cuts? Because part of the rhetoric is if you get the tax cuts, even though you have the tariffs, we're going to even out and everything's going to be okay.
So this is one of the great misunderstandings about tariffs, right? Which is one of the things that the president and others talk about is the benefit of tariffs is the reshoring of American production, especially in manufacturing. They've also talked about, and the president talked about it yesterday, foreign countries paying money to the United States, to their treasury, to our treasury, to make up for potential tax cuts. You can't have it both ways because, in fact, if a company is paying the tariff or a person is paying the tariff, that is going into the treasury, but it definitionally means that good is not being produced in the United States. So it really is one or the other.
What about this whole tit for tat idea? I mean, we heard from Justin Trudeau in Canada, the outgoing Prime Minister of Canada, who basically talked about this could be dollar for dollar type retaliation. I'm not sure what Sheinbaum down in Mexico plans, but it doesn't seem like some of these nations are just going to sort of take it maybe in the way that they took it last time.
Well, look, history is pretty clear that any country that imposes tariffs, the response is almost always a countervailing tariff, and so we should expect to see that. And we saw that in the first go-around with China, where the president had to support U.S. farmers when China stopped buying soybeans.
Yeah.
And so, you know, that should be an expectation.
Yeah.
And that is why some of this may be actually be negotiating posture versus actually a policy implementation.
Well, we're seeing some of that uncertainty show up in soybean prices today. Here's a question, might be a dumb question, but it's a question that I've been bothered by. If tariffs work, why is our trade deficit with China just as high, basically, as it has been for, I don't know, the last several years? I mean, the tariffs have been there. So what's the purpose of them other than just
they've been much more limited, Romaine, than what the president is talking about now.
Yeah.
But the reason with China is very specific, which is they are an export-driven economy, which means they are exporting more than they import. We are an import-driven economy because we're a consumer-led economy. Also, our dollar is fundamentally overvalued, which creates a problem for our exporting and a benefit for imports. And that is not going to change simply by the implementation of tariffs.
Yeah.
And moving a lot of this stuff out of China to be penalizing is, in fact, a possibility. But the likelihood of that all of that production gets reshored to the United States is actually quite unlikely. It's much more likely to go to Mexico or other, low-cost South Asian economies. And as a result, all of these benefits of tariffs, I think, get mushed up into one big pot, and all of them are not achievable.
You also have had decades of experience on Wall Street. So if you were to look at a sector that could actually do really well in this uncertain environment, what would that sector be?
Boy.
Deal making, financials?
Deal making, Alex, as you know, is never really helped by uncertainty. So businesses are really good about planning when they understand the rules of the road. And so my fear would be, despite all the animal spirits that seem to be being unlocked by the Trump presidency, that in fact, until some of these issues around tariffs get more clearly scoped out and defined, I think that will actually be a dampening on deal-making activity. That, combined with the fact that interest rates remain somewhat elevated, I think is not creating an ideal market for deals, despite the fact that I think what you're seeing in the stock market is, an enthusiasm for a much more pro-business environment from this administration than we saw in the last.
All right. Well, businesses, at least for right now, seem to be relatively encouraged by what they see. So we're going to catch up with you, I'm sure, quite a bit here as we start the new Trump administration, as we start our new show here on this Monday afternoon, counting you down to those closing bells, a dive deeper into the potential impacts of the newest presidential administration. This time, the impact on America's supply chain. A sit down with Brandon Daniel, CEO at the logistics company Exeter.
And plus, you got Netflix result out after the bell. We're going to break down what to expect, whether or not Beyonce and Mike Tyson were able to give the streamer a helping hand last quarter. Do you think we book Beyonce for Netflix?
I was excited.
That would be awesome.
Okay, I guess I won't stick around. And when those earnings do hit the tape, we're going to give you the most important investor context, including a sit down with investor Ross Gerber over at Gerber Kawasaki. You don't want to miss that. Stick around. This is The Close on Bloomberg.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
All right, stocks in the green across the board today, and it's a pretty widespread rally as well. Some say it's a relief rally after President Donald Trump didn't impose some harsh tariffs on day one. Joining us now, Callie Cox, Chief Market Strategist with Ritholtz Wealth Management. Hey, Callie, do you buy this kind of relief rally? Is that the right narrative today?
For now, Alex, and the reason why I say that is because earnings look stable, the economy looks okay, and all of this policy speculation was kind of on the rocks to begin with. So am I shocked that, it's day 2 of the new administration and we're not getting concrete tariff details, No, I'm not. But, a few months ago, we were also warning investors to be careful about, jumping into headlines too soon.
So do you need to hedge upside then? Like if you don't want to be buying the upside, you have to hedge it because we might get these kind of relief rallies?
Necessarily think so. And you have to remember, too, our clients over here are investing for years and decades. So higher stock prices are, something that obviously we welcome, Alex. And, we talk a lot about setting expectations over here. 20% rallies in a year in the S&P aren't something you should expect every year, especially when, the bar is a little bit higher this year. But overall, it's great news when the market is going up, and we think the market has more fuel to go up this year.
What is that fuel, Callie? Is this going to be fundamentally driven basically about the bottom line of what companies produce or something else?
Well, I think if you believe Wall Street, then yes, it will be fundamentally driven. And I don't look bottom up when it comes to profits, but those analysts who do look bottom up expect double-digit earnings growth in the S&P 500 this year. And, there are two ways to look at this, right? Of course, fundamentally, that's good news for the stock market. You want profits to be growing. You want the economy to be pushing forward. At the same time, we think expectations are a little bit too high. And the recipe you're looking for a good year, Romaine, is low expectations and pleasant surprises. We wonder a little bit if that factor of pleasant surprises is gone now because the bar is so high, but I don't think that's necessarily a reason to abandon the market. I think it's just another reason to look for balance in your portfolio.
I mean, it was kind of interesting. I was looking at the latest fund manager survey out by Bank of America. Obviously, these are bigger institutional type investors, but there was a lot of talk in that note that Michael Hartnett put out about this idea of looking at some of the laggards, of the market laggards, and that they could actually benefit in a way, particularly when you have so many of those big cap stocks that are either at or near record highs. Do you see opportunity in some of those lagging names, or is there a reason why they were lagging to begin with?
I definitely do, especially because the lack of breadth that we've seen this tech versus everything else rally over the past few years has been mainly due to interest rates. And of course, interest rates are still quite high, and the Fed indicated to us about a month ago that they may not come down as much as everybody thought about 6 months ago. But that's not necessarily a limiting picture for the rest of the market. Interest rates could come down. I don't expect the 10-year to stay around 4.5%. I think it should be a little bit lower. And as rates come down, it should allow the market to breathe a little bit, and it should encourage investors to look more at value stocks and stocks that were limited by high interest rates to begin with.
Right, Callie, is that a small cap value call, or is that going to be sort of a quality large cap value call?
Well, I think value is important right now, especially if you look at the market, you see valuations that are trending toward historical extremes. And I think you have to put a caveat beside that, Alex, because, of course, tech is trading at pretty high valuations, and then the rest of the market looks a little bit more reasonable. But right now, I think it is important to focus on value in your portfolio, especially if you're worried about what the future holds. I mean, the economy could be fine this year, but the fact that we're dealing with high expectations may mean that we see more of those 5 to 10% sell-offs, those inconsequential sell-offs that can kind of knock you off the base, knock you off of your own base for a few weeks. So if you want to shield yourself against those pullbacks, think about defensive stocks. But I actually think value is interesting here, especially those cheaper cyclical stocks when we have a lot of change going on in the economic outlook.
Yeah, and also if you still have money coming in for, say, infrastructure, particularly AI infrastructure, which we may get some announcement later on today. Before I let you go here, I got to ask about Bitcoin, because you're talking about a portfolio construction, right? And talk about some whippy headlines, right? You get nothing at the inauguration address yesterday, and Bitcoin goes down. Then you get the SEC acting chairman launches a crypto task force, and crypto winds up going up, Bitcoin rallying. Does that need to be part of your portfolio construction?
I think what we've seen over the past few days with crypto really shows that you need to be smart about sizing things in your portfolio, right? We tell clients, crypto is obviously interesting. I don't think it's an asset class that you can quite ignore anymore, especially if you are a younger investor and you're more educated on what's going on in the space. It's an interesting space, but at the same time, it's a risky young market, and we've seen that in day-to-day moves in Bitcoin, one of the most well-known crypto assets in the space. And, the risk obviously gets a little bit higher from there. So size it appropriately. Remember that it is still a young, risky market, but there are a lot of developments in the space. And, if you're investing, I quite frankly don't blame you. Just know your risks.
All right, Callie, well said. Chief Market Strategist with Ritholtz Wealth Management, a day where we see stocks across the board in the green, led not by big tech, but by some of those cyclical names. The Russell up 1.8% on the day, twice the gain of the S&P 500. When we come back, we're going to focus in on another potential market-moving stock, and that is Netflix. From the Beyonce Bowl, she's not here, to Squid Games 2, also not here. We're going to talk about ending 2024 on a high note with its programming. We're going to preview what to expect from Netflix's earnings report. That comes after the bell. The preview comes after the break in our Top Call segment right here on The Close on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
All right, let's get a view from the sell side. Top calls. Big movers on the back of analyst recommendations. And we start today with Apple. A rotten day for the maker of iPhones, hit with not one but two downgrades. Jefferies analyst Edison Lee, one of them, cutting his rating to underperform from hold, expecting Apple to miss estimates due to weak iPhone sales. Apple results out next week. Those shares at one point on an intraday basis having the worst day since August. Next up, an overweight rating from Morgan Stanley for the clothing and apparel company Urban Outfitters. The analyst touting Urban Outfitters' impressive success at incubating new growth brands. She also sees room for its valuation to expand as this year shapes up to be a stock-picking environment in softlines retail. Urban Outfitters up 10% here on the day at $60 a share. That's a record high. And finally, MoffettNathanson giving investors the green light to buy Warner Brothers Discovery. The analysts there are expecting the media company to experience relative stability this year, driven by continued growth at its Max streaming service and reduced headwinds for that studio business. Those shares up about 4% on the day, best day in about a month. And those are some of our top calls. But we do want to stay in this world of streaming and entertainment because we're less than an hour away from Netflix. The company expected to post earnings after the bell, and much of the focus is expected to be on the push into live events and sports. Alicia Reese is Vice President of Equity Research at Wedbush. She has an outperform rating on the shares, and she joins us right now. All right, let's start off with some of these live events, because that really seemed to be what investors were focused on, despite the fact that you had some glitches for some of those events. A lot of people did tune in for them, and I think the expectation is for the events they have planned going forward that those numbers could be even bigger.
Yeah, there were some glitches in the fight night, but they were all resolved by the time we got to the NFL Christmas dual games, and we certainly don't expect any more going forward. Netflix has a good handle, I think, on what it's capable of and what it needs to do to accommodate the massive viewership that it can get globally for those live events. Whether it's domestic content, international content of any region, they can and are best positioned to show this content globally and get that viewership going, and increasingly get some really great advertising going on those live events. They just announced the Women's World Cup, and I think that's the first of many more to come.
So, Alicia, when that earnings release comes out, the shareholders letter, everything else comes out later tonight after 4 p.m. East Coast time, what is the one thing that you're going to just really look for in that release above all and anything else?
Well, Netflix has been doing, I think, a good job of weaning us off of that subscriber growth guidance that they are not going to give anymore starting for 2025. So that includes the guidance they're giving going forward. But throughout 2024, they didn't really give specific subscriber guidance. They gave some, rough estimates, some guidelines, some brackets, if you will, on what to expect. And so instead, they're going to just focus on revenue guidance. And you have to kind of parse through. And I think they'll give some interesting language around what to expect in the first quarter and throughout 2025 with regard to what do we expect from the ad tier contribution to the ARM? What do we expect from, subscriber growth rates throughout the regions? Mm-hmm. I think they'll give enough color, but they got to hit that subscriber growth and that revenue targets and beat those, really. I think the bogey is 10 plus, even into 12, 13, really for the stock to really work for the fourth quarter. If they can show some really nice advertising growth and contribution into year end, I think that'll get the stock to work as well.
Alicia, in your universe, is there anyone who can come in a close second to Netflix at this point, particularly with their content pipeline that's coming up?
Absolutely not. Netflix has the cash to spend on content, whereas most of its competitors do not from their streaming services, at least. A lot of their streaming services are still trying to just get into the black and stay in the black and not bleed the rest of the company. For the other studios, though, they do have their theatrical segments that Netflix doesn't have to kind of keep them afloat, keep the cash churning. For Netflix, though, they're going to dig in a little bit on that too. They just announced a theatrical release with IMAX. It's going to be probably a pretty big deal for them, to get that theatrical revenue and probably the first of many. So I think they're expanding throughout advertising, throughout live events, throughout, potentially theatrical releases. They have a lot of opportunity to keep that really big lead that they have in terms of ability to spend on content and simultaneously generate lots of free cash flow.
Alicia, great stuff. Really appreciate it. Wonderful analysis, Alicia Reese over at Wedbush. She'll be very busy come 4 o'clock. But the stock is up almost 80% in the past year. It's not near its 52-week high, but nevertheless, it's still super solid. So again, it has to be that beat.
Yeah, and it's kind of, Netflix is so weird, right? Because it's like every quarter, I think we go through this sort of machinations of is this the one that kind of knocks them off a peg? And, usually they post numbers that at least are good enough to keep going. And it gets to this idea, like, who are the dominant streamers right now? It is kind of Netflix, and I don't know, it's kind of everyone else. I mean, no disrespect to Warner Brothers Discovery. I love Max. You probably watch that more than Netflix, but it's not quite Netflix.
No, and not when you have the pipeline that Netflix is coming out for all their, like, Stranger Things, Wednesday. Anyway, coming up, Mexico and Canada. Yeah, I like that show. Are bracing for possible tariffs from the Trump administration. We're going to delve into the impact on supply chains.
He's a deal maker.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Right, and if you're a deal maker, the first thing you do is you show your powerful stance. So you make a broad statement: I'm going to tax Canada and Mexico by 25%. Well, and then you sit down at the table, you get them to the table, and you say, this is what I need. I need some help on immigration.
There's a lot of mutual interests between the U.S. and China, and we can work together. I think the benefits is much, much bigger than we fight to each other, become one winner, one loser. We even don't know who will win, who will lose, right? So it's a clear equation there. So I think President Trump understands that.
We obviously went through an inauguration and change of power in the United States yesterday. We know that's fairly positive for business. On the fundamental level, it's positive for business. It's a pro-business, it's a smart regulatory environment. So everyone's thinking that's very good for business.
All right, Gary Cohn and a lot of other folks chattering about the Trump presidency from the creme de la creme of the business world. Today marks the second day of the World Economic Forum out there in Davos, Switzerland. You are not in Davos, Switzerland.
I'm not in Davos, Switzerland.
All right, I don't know what time it is.
I'm here with you.
All right, I don't know what time it is in Davos. It's 3:31 here in New York, though. And you are Alex Seal. I am Romaine Bostic.
So they tell us. You're looking at a definite powerful rally underway here. It was interesting to see the rhetoric in Davos this year versus, say, 2016. It's just a very different kind of Wall Street and global leaders confronting another Trump presidency.
And that was kind of the whole scuttlebutt coming in. It's like, what was this Davos going to look like? You have a new president in the United States who clearly has kind of had an anti-globalist bent. That was kind of the indicative of what Davos was. Yet he's also very pro-business, and he fancies himself that. So how do you sort of reconcile the two? Does Davos change or has Trump changed?
Right. Well, let's ask someone maybe on the ground. Brandon Daniels is CEO of Exeger, which helps businesses and supply chain manage all of those issues. He is also in Davos. You've been speaking, I'm sure, to many, many clients, CEOs, etc. What's the number one question you're getting right now?
The number one question is, what is the current trade warfare going to look like over the next 60, 90, 120 days? Everyone wants to understand what the major superpowers of the world are going to do to rebalance their economies and to rebalance the their global position against the complete landscape. So as you saw, early at the sort of end of last month, you saw where China rolled out export control bans on antimony and germanium and gallium. You're seeing the United States talk about major tariffs against China and Mexico. Everyone here at Davos is wondering about the potential business implications of this continued trade warfare between the two major consumers and innovators and business manufacturers of the world.
So the fact that we also have no idea how it's going to work out, what do you tell your clients about supply chain issues? I mean, if you haven't moved production or diversified production by now, what are you waiting for?
Yeah, I think there are three things to consider. Look, this isn't just about tariffs and about moving manufacturing back to the United States from a Trump administration policy perspective. I think there are really three things that they're trying to accomplish. The first thing, and you can see this in sort of the pause as they start to evaluate the tariffs that they're going to actually execute. One, they want to make sure that they're putting tariffs against areas where the United States could have competitive advantage. There's not a huge difference between real estate in Peoria, Illinois, and real estate in, Hebei, China. And so the one thing is, where are there jobs where automation, where AI, where robotics can essentially neutralize the labor arbitrage between the two countries and put the United States in a competitive advantage. The second thing that they're looking at is, where do we have intellectual property that we want to keep? And so I'd imagine that these tariffs are going to continue to focus on the areas where we want to be competitive, whether that's in electrification of vehicles, or it's in quantum computing, or it's in advanced microchips and AI. And then the last thing I think you're going to see are areas where we want to make sure that how our U.S. companies are being treated by China is not different than the way that Chinese companies are being treated by China. Right now, you have a number of companies in the U.S. that can only source certain metals, certain components, certain materials from China. And they have a distinct advantage and huge economic advantages versus the United States companies that have to source them directly from China and have to pay tariffs against them, where China has sort of economic manipulation that can be employed.
I am curious, though, Brandon, because when we talk about the challenges on the supply chain, obviously it's not just about whatever percentage tariffs and where they go to. There are also some more sort of, I guess, practical or more sort of pedestrian issues that supply chain folks are going to have to deal with. And one of those is, quite frankly, are just trade routes. There's been, I don't know exactly what the president is talking about, but he seems to think that control over the Panama Canal should somehow revert back to the United States and out of Panama's control, whether that could ever happen. But I am curious that, do folks need to start thinking about these things as well, that sort of the traditional routes, the traditional sort of trade of physical barriers, if you will, could be shifted in a way that we haven't seen in decades?
Well, the thing, Romaine and Alex, there are a lot of issues with our existing logistics infrastructure, and we've seen it play out over and over and over again. Our ports are not resilient against many of the major storms and many of the major natural disasters that have happened. There are sweeping issues with labor. And obviously, then there's geopolitical tensions that erupt into chaos, like with the Houthis. And so I think what the administration is looking at is, how do we relieve and resolve some of our contested logistics, which is one of the biggest problems that we have, is that our logistics are actually contested by adversaries or by new potential disruption types. And so, understanding what's going to be possible within our existing trade routes and what those relationships might be with, for instance, Panama, we're going to have to see how they evolve. I'm going to be meeting with the president of Panama here in Davos tomorrow, as we're going through our meetings with world leaders and business leaders. And, one of the things I'm hoping to hear is, how do we plan to improve the infrastructure, the economic relationships, so that we can actually continue to advance the mission that we have, which is to make the supply chains work again, which they have not been.
Yeah. We only have about 30 seconds, Brandon, but I am curious. The president of the United States is expected to address Davos as well, virtually, not physically. I am curious as to what you think leaders there want to hear out of him.
I think they want to hear that he's looking to do deals, right? I think they want to hear that this is not about a rigid set of hard lines. I think they want to hear that the United States is open for business, and that's the optimistic view. For the first time ever, there is a USA house here in Davos. There's always been an India house, there's always been a Brazil house, there's always been a Japan house. For the first time ever, we set up a USA house here, and that's because what we're hoping is we're coming to the rest of the world and saying, we're open for business, but it's going to be fair and it's going to be balanced.
All right, Brandon, really appreciate you taking time for us. Brandon Daniels out in Davos. He is the CEO of Exeger, a conversation about the supply chain issues that could arise here in the new Trump administration, a Trump administration that has wasted no time here in rolling back some of the previous administration's goals and targets. We should point out, just in he's not even been in office 48 hours. And he's done more than 24 executive orders. Just to put that in perspective, in his first time in office back in 2017, his first full week in office, he only signed 4 executive orders. Among the more than 24 executive orders that he has signed includes one that actually repeals President Biden's sweeping executive order regulating artificial intelligence. We want to go now down to Alondra Nelson, who formerly led the White House Office of Science and Technology Policy. She's now a distinguished senior fellow at the Center for American Progress. And she joins us now to talk a little bit about, I guess, the future of AI regulation and policy. Alondra, I am curious here as to sort of what comes next. You guys worked a long time on this policy. It comes out. There was a lot of talk here that if President Biden wasn't reelected, that this thing could potentially be toast. And as of today, it is toast. Is it over?
Well, I think it's a new beginning. I mean, listen, there were no surprises with the repeal of President Biden's October of 2023 AI executive order. Candidate Trump had it as a campaign promise that it was going to be something that would be repealed day one. So yesterday's repeal was not a surprise. I think what was surprising and disappointing is what is the plan going forward. So the Biden AI executive order has been talked about, I think, over the last 24 hours as being kind of very narrow and very regulatory, but it's also very forward-leaning with regards to innovation. So what happens to all of those investments? There were R&D investments to democratize AI. There was that executive order has stood up something called the National AI Research Resource that was championed by people like Fei-Fei Li, the prominent Stanford computer scientist. And that is making computational power, data, et cetera, available not only to academic researchers, but to startups. So, there were efforts here to really sort of diversify, democratize the sort of broader AI ecosystem, in addition to investing in talent, trying to, figure out how we're going to get our workforce right. Because if we're going to, win this race, this outcompete adversaries and competitors with regards to the AI race, we're going to have, compute, infrastructure, talent, and the like. And some of that's going to have to come from some of the commitments and investments that the Biden administration signaled, even if they come from the Trump administration, they're going to have to come from government.
Well, a big part of that executive order, the Biden executive order, was this idea of also making sure that a lot of the information that these AI companies are collecting, or at least sort of the outcome of the data they're collecting, was shared with the federal government. So at least there was some sense of knowing whether what was going on was right or wrong or damaging or beneficial. Is there any mechanism in place now without that executive order?
There's no mechanism in place. I mean, so it could be the case, Romaine, that things will chug along and that the Trump administration won't stop things that are going forward. But you have to imagine, if you are working as an employee in the federal government, there's a little bit of confusion. So I think what was challenging about yesterday was not the repeal of the executive order. We knew that was going to happen, but it left a kind of lacuna, it left this kind of hole in the space of what happens next, right? And so does that mean that we continue to, have one of the world's few AI safety institutes, as we stood up at the National Institute for Standards and Technology that just had, a great meeting in November that brought together the other safety institutes, UK, South Korea, Japan, and others, to be thinking with allies and partners about how you do this research well in a forward-leaning way and keep it safe. Does that go on or does that not go on? So I think there's just some confusion and a little bit of chaos with regards to the signals of what happens next.
Alondra, what about the states? Is it possible for the states to step in right now?
Sure. I mean, but business is really worried about the state stepping in, which is why we really need this federal leadership. So I think the concern that we're hearing from, the business community is we're going to end up with a patchwork. If we don't have leadership at the federal level, we're going to have, as we do in Colorado, Colorado state AI legislation. You've got, that Gavin Newsom, the governor of California, signed 18 bills in the last Congress, in the last legislature in California, related to AI in some capacity. So the state of Illinois, for example, has had sort of bills and laws on the books around AI and biometrics for years now. So things are already moving forward. And, we are going to need some federal leadership here, or you have companies dealing with the patchwork. And so, I think for businesses that are looking for some kind of clear direction, I think the lack of a replacement for what was repealed yesterday is a real challenge right now.
Alondra, what would you welcome from Washington? Like, what would be something that you could live with, considering that they don't want anything restricting AI?
Well, let's just be clear. I mean, a president's executive order has very few, it is not regulation formally for the most part. So it has very few kind of levers or kind of harnesses it can place on business. But what it can do is give shape to how government uses these technologies and how it procures these technologies, and also can make these investments in things that, business might not invest in: talent, workforce, research and development, particularly on potential use cases for AI that might be a market failure, that might not initially be things that you want to commercialize. And I think, what I would want to see in answer to your question is having government sort of help to build this ecosystem in a way that is trustworthy. So that was one of the words that was used in President Biden's executive order. Because right now, if you look at the survey data and the research, the American public is very, very uncomfortable with AI. So the Edelman Trust Barometer did some polling in the spring, and the United States has some of the highest mistrust measures with regards to AI in the developed world. Like we're in the top 3 or 4. Pew Research Center data shows that use is growing of AI across the board, but there's still a lot of concern and mistrust about whether or not it's going to be used in the workplace and how it's being used in the workplace, how it's being used in medicine and healthcare, and whether or not people are just going to get a fair shake.
Alondra, we appreciate that. We got to leave it there. Alondra Nelson, thank you so very much. Distinguished Senior Fellow, Center for American Progress, and former President Biden's science and tech advisor. Great stuff. All right, 15 minutes to the closing bell on this pretty ebullient here Tuesday for the equity market. Katrina, I don't know, did I say it right?
Wow.
This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Until some of these issues around tariffs get more clearly scoped out and defined, I think that will actually be a dampening on deal-making activity. That, combined with the fact that interest rates remain somewhat elevated, I think it's not creating an ideal market for deals.
Stefan Seelig over at Bridge Park kicked us off to the close here on this Tuesday afternoon. When I started the show, I said Monday afternoon.
You did?
I forgot Monday was
I
a
didn't even know that you
holiday
said
for
that. So that
MLK
says
Day.
things that are good for me.
Look at that, live on the air corrections. And we talk about, though, the big rally that we had. Did you get your glasses, by the way?
No.
Oh, okay. All right. Well, I am observant in some other cases, and I did observe that the market had its best week last week, best week since basically the week of the election, and kind of resuming where it left off.
Yeah,
Nice
and small caps. Well, thanks so much.
Sure.
Small caps really leading the way there. I mean, look, we're up almost 2%. This is the best day that we've seen, the highest level since mid-December. So that rally most definitely broadening out, and it's obviously in some ways helped by tech. Interesting though that Apple is one of the laggards on that day. That's not helping going anywhere fast. But Oracle helping for the upside in tech.
Yeah, it was kind of interesting. A few of the Mag 7s are in the red today, including Microsoft and Tesla. So I guess if people are looking for opportunities to buy, I guess, something else.
Sure, maybe we're bottoming out. Will it continue? I mean, clearly the 200-day moving average is definitely solid for the Russell, but I mean, do we actually get a sustained breakout? That's continues to be my question.
That will be the question, of course. I will try to answer that here, maybe with our next guest. Katrina Dudley joins us right now here in Studio 2, portfolio manager and investment strategist with the Franklin Mutual Series. And Katrina, I mean, let's start off here kind of with the upside in this market, right? You have a lot of folks buying stocks today. They're not necessarily buying big tech in mass the way we would normally see in these rallies. They are looking at materials. They're looking at energy companies. They're looking at things that are much broader than maybe what we saw in the weeks past. Yeah. That's good, right?
It is good. And why? If we look at a 2-year forward EPS stack, all sectors of the economy are actually posting positive EPS growth. And that is what is driving the performance of the average stock, as we call it. So the 493 other stocks that make up the S&P 500. And earnings growth ultimately is what drives stock price performance. We can sit and talk about valuation. We can debate it here and there. And we do believe it's an important part. But if you don't see that earnings growth come through, you're not going to see stocks working.
Well, that gets to Alex's point about sustainability, at least when we talk about, small caps, mid caps, and the other, 493 in the S&P. Are we going to see that follow through? Meaning, are the corporate fundamentals going to be supportive of continuing to buy some of those laggards?
So it's always nice to just break things down into steps, and I like to do that with my kids. And so if you think about it, we have a resilient consumer. So let's start with that. A resilient consumer is spending more. And a higher spending in an economy that is 70% geared towards consumer spending is good for our GDP growth. And where are we seeing that? The Atlanta Fed just upped their expectations for U.S. growth from 2.7 to 3. And if we have stronger GDP growth, we have stronger earnings, and stronger earnings are good for equity. So it's just if you kind of break it down into those component parts, it's actually a really good narrative to be bullish on U.S. equity.
I just had this image in my head. Instead of her reading bedtime stories to her kids, she's just explaining to them the ins and outs of the market.
How do you think I get my kid to go to sleep? I read her the research report that I'm reading. But then to that point, is that all things equal for small caps? Or are this going to be like large value cyclicals within the market instead?
No, I don't think it is that the large value cyclicals, because going back to that term, the value cyclicals, is really looking at the valuation versus the earnings expectations. And cyclicals are not particular, they're kind of middle of the road in terms of where we're looking at earnings expectations. Tech is still leading the way. Industrials are the second best in terms of our EPS expectations. But the valuations on the industrial stocks are not particularly inexpensive, particularly some of the really big brand names. So I think that you really just need to look at where and why companies are generating earnings growth. I think the parts of the market where we see the lowest rates of earnings growth are actually in the staples, which would kind of fit that defensive narrative, which is lower growth expectations and therefore lower room for upside on an equity basis.
So where's the juicy part?
I think it's really in looking at where the valuation and the earnings growth, there's just that mismatch.
Is there a sector where that works, or is it going to be one individual basis?
I think it's really, in this case, a little bit of one-off, because we have the positive narrative that I've talked about, but we also need to think about where are the risks in the market and what are the components of that risk. Tariffs is what we've talked about, okay? That's an easy part of the risk. Immigration is another part of the risk, but we're also seeing risks show up in healthcare sectors, for example, with changes in the Medicare. So you need to understand is what are the risks to the earnings and where do you want to be positioned, and then combine that with valuation. And I wish it would be so easy to kind of say go all in, but I think generally speaking, the breadth of the earnings growth expectations, such a broad swath of sectors, means that generally speaking, we think that the market as a whole can work.
We were talking earlier in this show here about the latest Bank of America Fund Manager Survey. Michael Hartnett making the case that some investors, U.S.-based investors, institutional investors, are looking outside the U.S. for better opportunities. Do you find a case to be made in any sort of broad, meaningful way to be invested, to allocate more, outside the U.S. than in the U.S.?
It's difficult because the valuation's cheap, but in my entire investing career, European markets have always been cheaper than the U.S. market, number one. Number two, this kind of earnings growth is not showing up in European companies to the same extent we see it showing up. One of the areas, though, we are overweight on Europe is actually in the bond market, because we think that the ECB is going to cut more. That will be good for the bond market. But the reason we think it's going going to cut more is that we actually think they need to do more to support the economy. So they need to be that engine of economic growth. In the U.S., I think it's just the return of animal spirits that's driving our engine here.
Any worries about the dollar and the effect on corporate earnings?
I think that the strong dollar is pretty much baked into what people are expecting, so I'm not really worried about it. I don't think it's got a lot more further room to strengthen, but I think at these levels, it's kind of baked in.
All right, Katrina, always a great conversation. Katrina Dudley, she's portfolio manager and investment strategist with Franklin Mutual Series, helping us count you down to those closing bells. Just about 3 minutes away here on this Tuesday afternoon, Alex, and stocks are pretty much right where they were when we started. The S&P up almost 1%, but the outperformers, you're going to find that in the Russell 2000, the S&P mid-caps, and Dow Transports.
Yep, and also want to point out we get a lot of earnings coming out in the next 10 minutes time. We get Netflix, we get Capital One, we get Interactive Brokers, and we get United. That's a nice swath. You're going to get a nice read on how the consumers are doing with both United as well as Capital One.
Kind of interesting to see the VIX subdued on this day. You're seeing a lot of buying in the Treasury space, actually pushing yields down. You took a look at commodities today? Yeah,
did.
Oil really down, but then, of course, a lot of the base metals dropped as well because of concerns about policies towards Mexico.
Yep, a lot of reports coming out about the ARB and then how you can trade the ARB between the two if we do get tariffs. And obviously for oil, drill, baby, drill, well, that's more oil and that's lower prices at the end of the day.
Absolutely here. So on this Tuesday here, of course, the first full day of the new Trump administration, the markets are taking it in stride, bidding stocks up, a lot of record highs out there, not necessarily on the headline indexes, but certainly on an individual basis as we break down all of today's market action right now with our global simulcast.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you through that closing bell, a global simulcast. It starts right now. The whole gang is here. Scarlet Fu wheeled into the TV studio. Carol Master and Tim Stenovic in their radio cage as we welcome our audiences across all of our Bloomberg platforms. Carol Master here on what looks to be a relatively phenomenal Tuesday for U.S. equity markets.
We call it home.
I know, and they don't let you out of it. Did you welcome Scarlet Fu back?
We love having Scarlet Fu.
Oh, yes, Scarlet.
The whole gang is here.
It's been so long.
Was she wheeled in?
I was literally wheeled in, yes, this is true.
Although her foot actually hurts, so that's not actually a funny joke today.
Oh, okay. All right, well, let's talk markets then. S&P 500, guys, most names. For every name that's down, roughly, you've got 4 names to the upside. So definitely a lot more of a broader upside trade today.
All right, I'm looking at Bitcoin because, yes, we did see a fresh record yesterday. The equity markets may have been closed due to the holiday, but ahead of Trump's inauguration, we saw Bitcoin hit 109,000 per Bitcoin. Now it's trading at just around 106,000.
It definitely feels like an everything rally, except for the dollar, which kind of stalled out. But you look at small caps in particular, 10 out of 11 groups are higher. That's kind of the same breakdown for the big caps. The only group that is lagging behind is energy right now.
Yeah, but taking a look at small caps, we're 8 points away from breaking that 50-day moving average. If we see some follow-through buying tomorrow, can we finally get that sort of sustained upside and a new level higher for small caps?
The broader market getting some big help today from NVIDIA, Amazon, Oracle, some of the big heavyweights, so the percentage gainers are definitely in that energy space, material space, as well as some of the industrial names as well. We are awaiting earnings out of a few companies, including Capital One, including Netflix, as well as United Airlines, as we get the closing bells in New York. Up 0.9% on the S&P 500 as Netflix, Carol, crosses the wire.
It does indeed. Netflix, let's go first of all to net paid streaming users in the fourth quarter, 18.91 million. That is a massive beat versus the estimate of 9.18 million. Also, the company getting into the outlook, it sees 2025 revenue, 43.5 billion to 44.5 billion. It had seen 43 to 44 billion. And you do see Netflix shares up about 5.5%, 7% here now in the aftermarket.
I'm looking at shares of United Airlines down about 1% in the after hours as we speak. Fourth quarter adjusted earnings per share did beat estimates, coming in at $3.26. Estimates were for $3.05. Fourth quarter operating revenue coming in at above estimates at $14.7 billion. Fourth quarter available seat miles also coming in above estimates at 78.3 billion. Fourth quarter revenue passenger miles exceeding expectations. Also shares right now just lower by about 0.7%.
I want to go back to Netflix for a bit because of that massive beat on the net paid streaming users in the fourth quarter, double what analysts had anticipated. In addition, revenue, $10.42 billion. That's the outlook for the first quarter, which is a bit shy of what analysts had anticipated, which is $10.48 billion. Nevertheless, you're seeing the stock really jump at the moment, up almost 8%. And Netflix has authorized an additional $15 billion in stock buybacks as well.
Yeah, I mean, it's really hard to find something super negative about this. Remember, this is the last quarter where we're going to be getting those subscription numbers. So it's sort of how do you then benchmark how well Netflix is doing in that revenue number? That'll do it for you on that high end, over $44.5 billion.
But why would you stop reporting your streaming ads if you're going to beat by double?
All right.
Good question.
It's a good
question. You guys should take a closer look here at the investor letter here. The company does talk a lot about sort of the metrics that they will be using going forward, but more importantly, this idea of monetization and some of the efforts that they're making to do that. Also saying that they do plan to make a better, their words, push into games. They actually talk about some of the success they had with Squid Game Unleashed and how that could sort of be a template here for some of the other things. And of course, they talk a lot about live events here and the push there. So a company that is becoming a lot more layered in its offerings here, and at least based on what they're saying, they think that is going to be the future of this company. Interactive Brokers earnings are also out at the moment here. And sorry, I'm having a little trouble pulling it up. Here we go. Interactive Brokers is coming out right now. Those shares higher by about 1% here in the after hours trade after EPS did come in just a little bit higher than street estimates. Average customer margin loans also coming in above estimates. Customer accounts also coming in line at about 3.34 million. Net interest income at 807 million. Those shares up 1.2%, Carol.
All right, so let's also get to Massimo. It is, let me just pull it up here. Sorry, we're bouncing around here, guys. They've got a new CEO, and so forgive me, I actually don't have it up on my terminal. So they are announcing a new CEO at the company, so something that we're watching here also in the after hours.
All right, let's go take a look again, maybe at United. I just want to take a look at their guidance here, guys. The first quarter, if you're looking at an earnings beat, they're looking at 75 cents to $1.25 a share. That is a huge beat from what the expectations were. I was taking a look at that first quarter, doing quite well. Remember, Delta really set the bar quite high for United Airlines, and they delivered that fourth quarter profit well ahead of expectations.
I also, too, when we talk about this idea of consumer spending, the health of the economy, we were talking with Katrina Dudley just heading into the close. She was very optimistic, and a lot of that was this idea here that at least in the U.S. here, we continue to fire on all cylinders. GDP is up, consumer spending is up, and corporate fundamentals seem to be supportive of equity valuations, in her words.
Hey, I want to go back to Netflix because this is a blowout quarter, guys. Shares continuing to soar higher after the company reported net subscribers that was more than double what analysts thought they would. And I think it's this mix of programming, at least that's what the company is coming out and saying. I'm old enough to remember, I was talking about this earlier, old enough to remember when Netflix would never do anything live. Netflix would never do sports. Netflix would never do, like, a weekly talk show or something like that. Netflix wasn't even doing comedy specials a few years ago. This company is turning into essentially offering every mix of programming, and it looks like customers are paying for it. They're okay with it. I mean, I was telling Carol, I've never seen a boxing match in my life, but yes, I tuned into the Tyson-Paul match.
And you waited a long time to actually see that main event, too.
It wasn't starting, so I watched it the next day. I stayed off of social media and I watched it the next day.
And it's not just sports, too. I mean, we talk about the live comedy events that they've been doing. I know they had the one with Chris Rock and John Mulaney and a few others, and of course that roast of Tom Brady. So this is not just sort of one thing. They really are experimenting with a lot. I guess the question is more, at least for me, making sure that the costs are under control and certainly developing some of those projects.
And one way they can keep costs under control is to not bid for live sports. They do make the point that they're not focusing on acquiring rights to large regular season sports packages that does not include potentially things like playoff games or games on Christmas Day.
And this gets to the point, too, and probably to Tim's point, too, is this kind of does this kind of create the stickiness, if you will? Because we talked so much about the churn. Netflix, people will sign up for it just to see whatever binge watch the show, and then they leave. And now they have these various ad tiers, which are designed to keep people sticky.
Yeah.
And you have all these layered events here, which maybe you just kind of pay it and forget it.
Yeah, I do think, look, if you don't want to pay $20 a month for the ad-free version of Netflix, then maybe you say, okay, well, I'll go to that lower tier, the ad-supported tier. I can live with that because they're giving me a little bit of something that I want to watch at least every month.
All right, guys, I just want to get in here. Capital One, that company also reporting as well. So in terms of earnings, it was a beat coming in $3.09 a share. Total deposits also coming in quite strong, $362.71 billion. Net interest margin, though, was a little bit light compared to estimates coming in just above 7%. The net revenue coming in also a little bit light. They did talk about their fourth quarter having steady top-line growth in their domestic car business. They also talk about a return to loan growth in their auto business and stable credit card business. Carol.
Listen, I want to go back to Netflix, right? Because this is a big one, and we're seeing it move big time. Our Lucas Shaw weighing in and saying, talking about this live programming and how vital it is to Netflix as it builds out its advertising business. So we're not going to get the subscriber numbers, right, going forward, but advertising is the way forward. And what's interesting, it says the company shows advertising during football and wrestling to all of its members, not just those on the less expensive advertising supported tier. He also says that in their 12 major markets, the majority of new customers opt for advertising in the 12 markets where it is available. So it just shows that people are, opting into that model, and that looks like that's the way forward when you look at where, kind of revenue growth is going to be going forward. So just kind of interesting stuff. All right, Netflix up about 10% here in the aftermarket. All right, guys, that's a wrap. Across platform radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. Closing bell. We'll see you again, same time, same place tomorrow.
And we continue our coverage right here on Bloomberg Television. The biggest mover in the after-hours trade is indeed Netflix. 18.91 million subscribers change, up about 44% year over year. And of course, the numbers that they really want you to pay attention to, those are the top and bottom line numbers. Revenue of $10.25 billion, up 16% year over year. EPS of $4.27. That's up from $2.11 year over year and above street estimates. And the guidance for the first quarter, the company says revenue coming in at about $10.42 billion. That's a little bit light from what the street was expecting, though not by much, 10.48 on average. And the company says it sees EPS of $5.58. Street was looking for $6.01, but you see the share reaction. Investors like what they heard. I wonder if our next guest likes what he heard. David Joyce joins us right now, senior analyst at Seaport Research Partners, who currently has a buy rating on shares of Netflix. You liking what you see, David?
Yes, and I'm glad that I upgraded it last week. The subscriber numbers, so the last quarter we're going to get them, but they really are really what blew away the expectations. The revenue came in line with our estimate, as did operating income and EPS. But what's more important is that the company increased the 2025 revenue guidance by about $500 million, both on the range that they provided in the prior quarter, and they increased their margin expectation to 29%, which had been at 28%. So I think that the momentum continues to favor Netflix. They're really doing everything right at this point.
They spent a lot of time in the investor letter talking about some of those live events. Now, they do make clear, David, that live events are still going to be a small percentage of the total programming, a small percentage of revenue. But to quote them specifically, they are saying that we think the eventized nature of these events will result in outsized value to both our members and our business. What do you make of that?
That has been their strategy since they started to dip their toe into sports. They didn't want to be buying full seasons. They just wanted to buy the more unique assets that people were going to be tuning into more often than not. And that's what they continue to do with having a couple of NFL games on Christmas Day. They just won the rights to two of the women's FIFA World Cup championships. And that's really where advertisers are really allocating their spending as well. So they don't have to, and this all indicates why they are able to increase their margins that are really at this point above the rest of their legacy peer group.
They also have room to increase their subscription rates as well, their plans, but they haven't announced that in this earnings announcement. A couple of analysts are looking for that to happen fairly soon because the last increase was back in 2022. When they do so, David, what kind of pop will that give revenue?
It really will be something that gets layered in by region and opportunistically as well. They could probably put in another 10 or 15% increase, something that's just on the cusp of retaining the customers, because you don't want to have to then spend to try to regain the customers if you lose any on price. But the other thing is that almost half of their gross additions are coming from this advertising tier, which are lower priced at the outset, but within 2 years should be generating a better monthly revenue than you get from just the subscription model. So I think that they still have a number of levers at their disposal. But I would expect that they just layer these in so they don't create a growth challenge for themselves. They want to continue to have things that people are going to be looking for to layer on in future periods.
One thing that they do point out is that there are some they felt a little bit of pain from the strong dollar. Given that the dollar is not expected to weaken anytime soon, it'll probably hold at these levels. Do you anticipate that to be not a risk, but a weakness here for Netflix? I mean, it can't do very much about it, but it's something to keep in mind.
It's something to keep in mind, but that fear of the FX did cause the shares to fall on nearly 10% in the recent weeks. And until last week, I thought that it was probably just getting a little bit out of whack, given the fundamental opportunity set that they have. Given that they're winning all these sports rights and generating subscriber additions and having the most nominations for the Golden Globes, they're really doing the right thing on the content side as well. Mm-hmm. And advertising is expected to more than double for them this year. So it really doesn't seem like the FX should be more than some noise. It's again, given that the dollar has strengthened so much, you're going to start to have some comparable quarters later this year where that change impact is not going to be really noticeable.
I am curious, though, David, when we talk longer term, I mean, because this is a company that really has found a way to kind of evolve with the times. One sort of aspect that I think it is, I won't say faltered on, but certainly hit a few speed bumps, and that was the rollout of gaming. They talk about this in the investor letter. They talk about Squid Game Unleashed and how that became one of the top sellers on the Apple App Store, at least among free games, and how they are going to take a little bit more of a targeted focus than maybe what they initially had laid out, basically focusing on really big names, big titles like Grand Theft Auto, like Squid Game, but also the idea of trying to be a little bit more platform agnostic, so not just for mobile, but something that could be played across all devices. Can this become a meaningful part of their business?
I think it'll remain something that's on the margin, but it is something that helps with the consumer engagement and retention. Helps to continue to brand some of their key pieces of intellectual property. It could be additive in time, but again, I think it will be more on the margin. This is really a more lean back kind of a model that they've done so well with just providing the content. So we don't expect the gaming to be that meaningful, but it'll be a contributor on the side. But it's I think has a lot of aura effects.
Right, but the bread and butter when it comes down to it is paid streaming users. And in the fourth quarter, Netflix added 18.9 million net paid streaming users. That is double what analysts had anticipated. Why stop breaking out this number? Why stop publishing this number?
Well, it's a law of large numbers. That means that they may not have such record increases again. I think they've really tapped into the bulk of their user base in the key markets around the globe, where they can be generating the really strong pricing growth and advertising revenue. So that's why I think with there being less of an upside on the subscribers from here, there are a lot of ways to continue monetizing them. But I think that would, while that metric would still be helpful, I think it's not the driver going forward. The driver going forward is monetizing this user base that they have in place. And given that their service already has very low churn, lowest churn by far of any of the streaming services, I wouldn't expect there to be a subscriber issue going forward. So we just really need to hone in on the advertising opportunity, the continued wins of the content, and what they might do on the ancillary side of things in terms of live experiences based on some of their IP as well as the games.
All right, David, really appreciate your joining us with your instant analysis. David Joyce is senior analyst at Seaport Research Partners. Netflix shares up by more than 10% in after-hours trade. We were talking about Netflix. We're also looking at United Air, its profit surging for the fourth quarter. And as a result, this, of course, remained on the heels of Delta saying that it sees a great year coming up. A lot of tailwinds for these legacy carriers.
Yeah, and I mean, it looks like they're all sort of preparing for this idea that, of course, they are now getting at the capacity that is, at least for them, the best for their profitability. We even saw Southwest, which of course had been struggling for some time, scaling back a little bit here in terms of their employee count, particularly on the pilot side here. So when you look at the numbers out of United, when you look at what we heard out of American, at least with the big carriers here in the U.S., they seem to be doing well, Scarlet Fu.
They seem to be doing well. There's a lot of demand for premium services, and there's a lot of corporate demand as well. We're going to continue with the earnings parade because coming up, we're sticking with Netflix and diving deeper into the world of streaming with Ross Gerber. He is CEO of Gerber Kawasaki Wealth and Investment Management. This is The Close on Bloomberg.
Earnings season is here.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam Research in the semiconductor space.
AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg.
Welcome back to The Close. Romain Bostic here alongside Scarlet Fu. Netflix, Scarlet, the biggest gainer in the after-hours trade. And, well, why shouldn't it be? Another, well, encouraging quarter from the biggest streamer out there.
Yeah, and the number to look at here is 18.9 million subscribers in the fourth quarter. That was the net add of paid streaming subscribers. That is more than double what Wall Street expected, and it does top the previous best, which was an additional 15 million in the first quarter of 2020. Of course, that was during COVID when everyone signed up for Netflix. I know this is a number that Netflix says it will no longer report anymore and wants to shift everyone's attention to revenue numbers and operating margins, but it really opens your eyes.
Yeah, well, I think at this point, too, it's also about kind of retention. And I think they said it best in their investor letter. They had a whole section in there on monetization. How do you sort of make the most of the folks you have? Remember, this is a relatively mature company. It'll be interesting to hear what Ted Sarandos and Greg Peters, the co-CEOs, have to say on that, I should call it an interview, really. It's not really a conference call, but an interview that they have. I think that starts at 4:45 New York time, 1:45 out there on the West Coast. And it gets to this idea of what they want you to look at. So maybe they think when, as far as the future of this company, we should be focused on some of those dollar numbers rather than the actual subscriber numbers. Remains to be seen whether investors will go along with that, because I'm sure next quarter everyone will be like scratching their head like, why don't we have a subscriber number? Why don't we have a subscriber? Because I feel like everyone's just going to ask them for it anyway. So
they're going to model out their own versions of the number, right? Regardless.
Exactly.
Yeah, but you mentioned the events. It was a big live events quarter for the company, right? You had the Mike Tyson, Jake Paul fight. You had 2 NFL games on Christmas Day.
So
and of course,
have you watched any of these live events that they've done?
I didn't watch either of those, but I had heard that there was a lot of like the buffering issues.
Yeah, it was definitely glitchy that they have to sort of work out. But I mean, the numbers were there in terms of the number of people that watch them, if you believe what Netflix told us. So it's this idea here that they basically become a network almost unto themselves to a certain extent, and they are able to attract eyeballs with these events. And we talked about this during the simulcast, the idea that they're not necessarily bidding to be like, CBS NFL or NBC or anything else. As long as they can get a couple games here and there, a couple events here and there, they seem to be content with that.
All right, joining us now to discuss more is Geeta Ranganathan of Bloomberg Intelligence. And Geeta, we're talking a lot about Netflix and how it feels like it's, the new cable TV operator here. It's becoming everything to everyone. It's got live events. It's got its original programming. It's got some sports. It doesn't want to become a regular sports provider, but it is bidding for certain special events. One thing that I noticed in the shareholder letter is Netflix saying, we believe we account for less than 10% of TV viewing in every country we operate. That suggests there's a lot more growth left here.
There definitely is a lot more growth. And it's really interesting that you bring up this whole live sports strategy. So I think so far what they've done, Scarlett, is they've taken a really measured, calculated approach, kind of seen how the programming resonates, with both U.S. audiences with the NFL and global audiences with Tyson and Paul. And I think they've got their answer. So now they really know that they can make much more, bigger bets in this, in this field. And again, it's also the mix. So they had this big splashy, events with the NFL, with the Tyson Paul match, and then you had them go after WWE, which is much more, consistent kind of year-round programming, right? Otherwise, usually with sports, you have seasons. Once the season ends, you have people kind of burning and churning. But with WWE and with the upcoming UFC rights, if Netflix decides to be a bidder, that kind of gives them that consistent, year-round programming, which viewers are going to come back to every week after week.
Where does the scripted programming fit into this, Geeta? I mean, they talked about it in the release, saying they understand the importance of having movies, having series that people want to watch. And that is kind of the core of what Netflix is, or at least how we view it. That commitment's still there?
That commitment absolutely there, Romain. I mean, if you just look at the content pipeline for 2025, and they have said this many times on record, this is their strongest year of content. I mean, you just look at this slate. It is absolutely a blockbuster slate. They have returning seasons of all their hit shows, whether it's Night Agent, whether it's Stranger Things or Wednesday, or, even the new Knives Out movie. So it's all there. So scripted content, again, is going to be a huge driver for them in terms of subscriber ads, going into 2025. And then advertising becomes the bigger portion once you go into 2026. So they really have now this multi-year kind of growth strategy that's in place for, the company.
How much more detail are we going to get from the company when it comes to the...
Guys, US market open होने वाला है, 2 मिनट रह गए. Crude oil कह सकते हो थोड़ा सा रह गया टारगेट से. सडनली कोई न्यूज आई थी, उसकी वजह से मार्केट थोड़ा सा ज़्यादा ही वॉलेटाइल हो गया. नेचुरल गैस भी, क्रूड ऑयल भी. क्रूड ऑयल में अपना एसएल ट्रेल कर लो, अगर अभी भी ट्रेल कर रहे हो तो. थोड़ा सा रह गया, ऑलमोस्ट आप देखोगे 43 पॉइंट मूव किया. ऊपर वाले एफईजी था, एक्सपेक्ट था. यहाँ पर भी बीच में एक एफईजी बना हुआ है. प्राइस जस्ट स्टक ऑन दिस एफईजी. यहाँ पर देखोगे इस एफईजी पर ही रुक गया प्राइस. ऊपर वाले पे आता तो बेटर रहता. तो ट्रेल कर लो अब. ब्रेकडाउन हुआ तो फिर काफ़ी नीचे आ जाएगा. लास्ट सपोर्ट कह सकते हो. नेचुरल गैस भी नीचे वाला एफईजी पे ब्रेकडाउन यहाँ पर जो बना था पहले, ब्रेकडाउन रीटेस्ट तो नहीं कर पाया. कैंडल ऊपर चली गई थी, बट ऊपर भी एक एफईजी था, वहाँ से सेलिंग मिली और फिर वहीं से रिटर्न हो गया. यहाँ पर पता नहीं क्या है, कुछ सपोर्ट तो नहीं है यहाँ पर, फिर भी प्राइस स्टक हो रहा है. नीचे आ जाता तो यहाँ पर एक बहुत अच्छा सपोर्ट है, यहाँ से बाइंग करते, बट लग रहा है ये भी शायद यहीं पर रुक जाएगा. नाउ लेट्स सी ये ऊपर वाला रेजिस्टेंस अब क्या ब्रेक करता है या फिर नहीं. दोनों ही क्रिटिकल पॉइंट पर हैं, क्रूड ऑयल भी, नेचुरल गैस भी. क्रूड ऑयल अगर ऊपर नीचे ब्रेकडाउन किया तो फिर काफ़ी अच्छा जाएगा. क्रूड ऑयल भी ऊपर ब्रेकआउट किया तो ऊपर जाएगा. ओके, यूएस मार्केट ओपन. यूएस मार्केट ओपन नाउ. देखते हैं किस तरह का वॉल्यूम जनरेट होता है. कर लेना अपना एसएल क्रूड में गाइस। यूएस मार्केट की कैंडल है, वॉल्यूम देखना पड़ेगा किस तरह से मूव होता है। सबसे नियरेस्ट वाले एफईजी पर ही रुका है ये, थोड़ा सा हमने दूसरा एफईजी ले लिया था ऊपर वाला, दैट इज द नियरेस्ट एफईजी। एक बार नेचुरल गैस को भी देख लेते हैं नीचे रुक क्यों रहा है ये। इज देयर एनी सपोर्ट और नहीं, कोई सपोर्ट तो नहीं है। एफईजी है वहां पर एक नीचे, नेचुरल गैस में एक एफईजी जरूर है। ओके, दैट्स व्हाई इट इज होल्डिंग। एफईजी पर रुक रहा है नीचे, नॉट अ एग्जैक्ट सपोर्ट बट एफईजी इन 15 मिनट टाइम फ्रेम। काफी बड़ा एफईजी है, वैसे तो टेस्ट हो गया था। यहाँ पर ना एक एफईजी बना हुआ है जहाँ पर रुक रहा है ये। ओके, क्रूड स्टिल वहीं का वहीं है, नेचुरल गैस भी रेजिस्टेंस पे रुका हुआ है। नेचुरल गैस में ऊपर का एफईजी रिमूव कीजिए, ब्रेक करके ऊपर गया है ना? कौन सा ये एफईजी? हाँ, तभी वो सपोर्ट की तरह काम कर सकता है। प्राइस अब ये जो एफईजी है ना, सपोर्ट की तरह काम कर सकता है। ये ऊपर रेजिस्टेंस है, ये एफईजी सपोर्ट की तरह काम कर सकता है, तो प्राइस अभी फिलहाल इस रेंज के अंदर है। या तो ये नीचे आ जाए वापस इस एफईजी के, या फिर ऊपर ब्रेकआउट दे कहीं रेजिस्टेंस के ऊपर, बिकॉज नाउ दिस इज अ रेंज। कोई और सपोर्ट रेजिस्टेंस बन नहीं रहा है, ये एक रेजिस्टेंस है और नीचे ही सपोर्ट है। जब तक ऊपर या तो एसएल सेलर के जाते नहीं है, तब तक ये सारे एफईजी पे प्राइस फाइट करता ही रहेगा। फाइव मिनट लेफ्ट, 5 मिनट और हैं यूएस मार्केट की इस कैंडल क्लोज होने पे।
News when you want it with Bloomberg News Now. I'm Karen Moscow. President Donald Trump widening his tariff threats to include China and the European Union. He's threatening 10% tariffs on both. And we get more with Bloomberg's Anne-Marie Hordern.
Well, what's happening is that trade is really starting to become the focus in Washington, D.C. after we heard from President Donald Trump yesterday, day 2 of his administration yesterday, focusing again on tariffs when asked by reporters what really is going to be the tactic. Because remember, on the campaign trail, he said day 1, the walls are going up. What we've seen now is a little bit more of a negotiating tactic.
And that's Bloomberg's Anne-Marie Hordern. Trump made the comments at the White House yesterday. The only actual action taken so far in regard to tariffs is the call for
रेजिस्टेंस में दोनों साइड मार्क कर दीजिए। किसकी बात कर रहे हो? रेजिस्टेंस मार्क किया हुआ है क्रूड ऑयल में और नेचुरल गैस में।
a review of trade practices that's due by April 1st, potentially giving China and others almost 10 weeks to avert new levies or address his demands. Well, the president also said he would be open to Oracle chairman Larry Ellison or Elon Musk purchasing TikTok. This will be part of a joint venture with the U.S. government. We get more with Bloomberg Government's Jack Fitzpatrick.
He mentioned thinking about allowing someone to buy TikTok and giving half to the U.S. In exchange, effectively, the U.S. government will give the owner of half of the country a permit to operate it here. That raises a lot of questions, and you also have a lot of questions coming up based on him mentioning Elon Musk as a possible owner. There could be antitrust issues given Musk's ownership of X, formerly Twitter, and also it's important to keep in mind Musk's close relationship with Trump. Musk is leading a governmental effort, the so-called Department of Government Efficiency. So this is a fascinating comment, at least, by the president.
And that's Bloomberg Government's Jack Fitzpatrick. While TikTok temporarily went offline over the weekend, Trump signed an executive order on his first day in office to extend the deadline for a sale by 75 days. Billionaire Frank McCourt and Shark Tank investor Kevin O'Leary made a formal offer to buy TikTok earlier this month. And Mr. Beast, the internet's most followed and highest earning content creator, has joined a new bid assembled by tech entrepreneur Jesse Tinsley that's also vying to buy TikTok's U.S. business before a possible ban. SoftBank, OpenAI, and Oracle forming a $100 billion joint venture to fund artificial intelligence infrastructure. It's an effort unveiled with President Donald Trump aimed at speeding development of the emerging technology. The joint venture will deploy $100 billion immediately and have a goal of increasing to at least $500 billion to build new infrastructure for OpenAI, including data centers and physical campuses. That's according to SoftBank's Masayoshi Son, who will be the venture's chairman. India's government preparing to work with Donald Trump's administration to identify and take back all its citizens residing illegally in the U.S. It's an early signal from New Delhi that it's willing to comply with the U.S. president and avoid a trade war. Sources tell Bloomberg the U.S. has identified some 18,000 undocumented Indian migrants to be sent back home, for which India will verify and start the process of deportation. Meanwhile, the Associated Press is reporting the Justice Department is directing its federal prosecutors to investigate any state or local officials who stand in the way of beefed-up enforcement of immigration laws under the Trump administration. While the Trump administration is moving to end affirmative action in federal contracting and is directing that all federal diversity, equity, and inclusion staff be put on paid leave and eventually be laid off. The moves follow an executive order Trump signed on his first day, ordering a sweeping dismantling of the federal government's diversity and inclusion programs. We're watching shares of Netflix on the rise this morning, hitting an all-time high. The streaming giant closed 2024 with its biggest quarterly subscriber gain in history, benefiting from its first major live sporting events and the return of Squid Game. We get more with the Bloomberg Technology host Caroline Hyde.
They've added on net 41 million more people around the world over the course of this year. I mean, this is better than they did during 2020 in the onset of COVID, when we were all suddenly trapped in our homes and had nothing else to do.
And that's Bloomberg Technology host Caroline Hyde, who says the company added 18.9 million customers in the fourth quarter. Netflix is also raising prices. Its ad-supported tier will go up $1 to $7.99 a month. The cost of the premium tier is rising to $24.99. Rupert Murdoch's UK tabloids have made an unprecedented apology to Prince Harry. That was part of settling his privacy invasion lawsuit. Prince Harry will also be paid a substantial sum. And futures are higher, lifted by a slew of robust corporate results. NASDAQ futures leading the way up 1%. S&P futures up 0.6%. Dow futures up 0.33%. 10-year Treasury yield 4.56%. And that's news when you want it with Bloomberg.
अगर नेचुरल गैस की करंट कैंडल 329.5 के ऊपर का क्लोज हो गई ना, तो फिर ब्रेकआउट के चांसेस बढ़ जाएंगे. स्टिल देयर इज अ रेजिस्टेंस एरिया, अभी भी रेजिस्टेंस ही है, बट अगर 330 कह सकते हैं अप्रॉक्सीमेटली, राउंड नंबर ले लो, के ऊपर कैंडल क्लोज जाती है 15 मिनट की, तो ब्रेकआउट चांसेस है वेरी हाई कि फिर ब्रेकआउट हो जाए. बाकी अब प्राइस अगर नीचे आता है तो यहाँ पर आपको एक एफईजी दिख जाएगा, ये इसको आप रिमूव कर सकते हैं. द फ्रेश एफईजी इज ओवर हियर. लाइक भी करो गाइस, 60 लाइक हो चुके हैं, 100 लाइक्स का टारगेट है. जिन लोगों ने लाइक नहीं किया स्ट्रीम को अभी तक, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. मार्केट इज फाइटिंग बिटवीन द लेवल्स नाउ. Trump puts federal DEI staff on paid leave as cuts take save.
News when you want it with Bloomberg News Now. I'm Karen Moscow, and stocks rising at the open, lifted by a slew of robust earnings reports and a sign that U.S. tariffs on trade partners could be less harsh than feared. The NASDAQ leading the way, up 1% this morning. The S&P 500 up 0.6%. The Dow Jones Industrial Average up 0.2%. And the 10-year Treasury yield at 4.57%. President Trump did say he was still considering a 10% tariff on all goods from China following a threat to enact tariffs of as much as 25% on Mexico and Canada by February 1st. We get more on that with Bloomberg Government's Jack Fitzpatrick.
How much does President Trump like tariffs because he wants to place tariffs on goods coming in from other countries? And how much does he like them as a negotiating tactic to improve the U.S.'s standing in trade deals or any number of other things? That's a big, outstanding question.
And that's Bloomberg Government's Jack Fitzpatrick. The only actual action taken so far in regards to tariffs is the call for a review of trade practices that's due by April 1st that potentially gives China and others almost 10 weeks to avert new levies or address President Trump's demands. SoftBank, OpenAI, and Oracle are forming a $100 billion joint venture to fund artificial intelligence infrastructure. It's an effort unveiled with President Trump aimed at speeding development of the emerging technology. The joint venture will deploy $100 billion immediately and have a goal of increasing to at least $500 billion to build a new infrastructure for OpenAI, including data centers and physical campuses. This is according to SoftBank's Masayoshi Son, who will be the venture's chairman. India's government is prepared to work with the Trump administration to identify and take back all its citizens residing illegally in the U.S. It's an early signal from New Delhi that it's willing to comply with the U.S. president and avoid a trade war. Sources tell Bloomberg the U.S. has identified some 18,000 undocumented Indian migrants to be sent back home, for which India will verify and start the process of deportation. Meanwhile, the Associated Press is reporting the Justice Department is directing its federal prosecutors to investigate any state or local officials who stand in the way of beefed up enforcement of immigration laws under the Trump administration. The Trump administration is moving to end affirmative action in federal contracting and is directing that all federal diversity, equity, and inclusion staff be put on paid leave and eventually laid off. The moves follow an executive order Trump signed on his first day, ordering a sweeping dismantling of the federal government's diversity and inclusion programs. Mr. Beast, the internet's most followed and highest earning content creator, has joined a new bid to buy TikTok. The YouTube star, whose real name is Jimmy Donaldson, is part of a group of American investors assembled by tech entrepreneur Jesse Tinsley that's vying to buy TikTok's U.S. business before a possible ban. According to the law, ByteDance had to sell TikTok before January 19th or face a nationwide ban. While TikTok temporarily went offline over the weekend, Trump signed an executive order on his first day in office to extend the deadline for sale by 75 days. Shares of Netflix are jumping up more than 13% this morning. The streaming giant closed 2024 with its biggest quarterly subscriber gain in history, benefiting from its first major live sporting events and the return of Squid Games. We get more with Bloomberg technology host Caroline Hyde.
They've added on net 41 million more people around the world over the course of this year. I mean, this is better than they did during 2020 in the onset of COVID, when we were all suddenly trapped in our homes and had nothing else to do.
And that's Bloomberg technology host Caroline Hyde, who says the company added 18.9 million customers in the fourth quarter. Netflix is also raising prices. Its ad-supported tier will go up by $1 to $7.99 a month. The cost of the premium tier rising to $24.99. Speaking in Davos today, J.P. Morgan Chase CEO Jamie Dimon expressed caution about the U.S. stock market. Speaking to CNBC, he said asset prices are kind of inflated and require good outcomes to justify them. U.S. mortgage rates dropped for the first time in 6 weeks, helping keep a gauge of home purchase applications at a one-year high. The contract rate on a 30-year mortgage declined 7 basis points to 7.02% in the week that ended January 17th. And Rupert Murdoch's UK tabloids have made an unprecedented apology to Prince Harry in settling his privacy invasion lawsuit and will pay him a substantial sum. And again, the S&P 500 is up 0.6% this morning. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
This is the Asia Trade. I'm Paul Allen in Sydney. We are seeing President Trump delivering some remarks from the White House at the moment. We have live pictures from the press conference, which is ongoing. The president just taking a few questions from reporters there. It has been a wide-ranging press conference. A number of things have been raised here. Trump has said we're talking about a tariff of 10% on China. This is based on the fact that they are sending fentanyl to Mexico and Canada. And in terms of Mexico and Canada, he says he's planning 25% tariffs there to start in the coming weeks. He's also said he's thinking of a trip to the Middle East soon. He's considering to have those tariffs I mentioned on China begin as soon as February the 1st. So a bit of a reversal from some of the comments that we saw yesterday.
You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, let's go to Adidas, reporting better than expected quarterly results amid the sustained boom for retro sneakers like the Samba. They're citing that particular one. Shares right now up by about 2.4%. I would also point out some of the success that they've seen in basketball over the course of this past year as well. Anthony Edwards and the new silhouettes really catching a lot of eyes, a lot of attention, and I think that's really cemented their next play within basketball, even with some of the successes that they had seen with James Harden and, of course, Damian Lillard over the years as well. Anthony Edwards, representing a new face of the league, has certainly given them the opportunity on the marketing front and the product front to make their case.
Yeah, I think it's very much back to the basics when it comes to Adidas and what that focal point is, what their product pipeline looks like. When you take a look at the outperformance of the stock over the last year, shares have jumped just about 50%. When you take a look at some of the guidance that we are getting from the company, they aim to deliver double-digit sales growth and increase operating profit in the coming years. Now, all this coming despite some of those macroeconomic headwinds that we have been talking about, inflationary pressures on a global basis, obviously impacting consumer sentiment, how consumers are spending at this point. So they're having success in this tough macroeconomic environment. I think that tells us a lot about some of the momentum behind Adidas right now as they do try to narrow that gap with Nike.
Trying to get towards that 10% margin target that they put forward.
All right, let's take a look at Ford. Ford seeing a downgrade from Barclays, cutting the car maker to equal weight from overweight, citing volume headwinds due to inventory destocking as well as continued price normalization. You're looking at share losses of just about 3%. Digging into this, the analyst saying that it's unclear that cost actions will be sufficient to offset these drags. They also went on to write that this uncertainty leads us to step to the sidelines, at least for now. That's the analyst there from Barclays, Dan Levy. Now, he anticipates that Ford is going to deliver a slight fourth quarter earnings beat, though the guidance that we're going to get from 2025 will likely disappoint.
You know, we were talking about this with Tom Narayan yesterday in the context of what President Trump had been talking about in trying to get automotive production back to a level that we never thought fathomable, essentially. But it also comes with the demand consideration here and the volume consideration, which I think is the larger inclination for this call that Barclays is making here, understanding the consumer environment and also understanding understanding exactly at what price point Ford is going to be able to hit a sweet spot in the future.
All right, we'll keep it right here on Yahoo Finance. That does it for Morning Brief. But my co-host Madison Mills and I have you for the next
President
hour.
Trump saying that he's also likely to impose sanctions on Russia if President Vladimir Putin doesn't come to the table soon to negotiate on Iran. To negotiate on Ukraine. So he says he's going to be talking to President Putin, quote, pretty soon. He says that the EU and NATO should increase their defence spending to 5% of GDP. That's up from the current 2% target, so a familiar tone there as well. Let's get some more context here now and get to our political news director, Jody Schneider, who is in Washington. So, Jody, another wide-ranging press conference here. What are some of the key takeaways so far?
Well, Paul, this started off as an announcement, really. It was viewed as an announcement of a big investment. Earlier in the day, it said it was going to be a massive infrastructure announcement, but an investment in AI and related services by the heads of SoftBank, OpenAI, and Oracle, who all were at that the remarks in the Roosevelt Room by the president, and they each gave a little speech. And then we turned back to Donald Trump, who then took questions and had a wide-ranging, as you can see, press conference on a number of issues. He talked about tariffs. Tariffs, as you might recall, were really not in his inaugural speech yesterday or even in some of the other speeches he gave during his inauguration day. He mentioned China, but he didn't really talk about tariffs. Tonight he said he's looking at 10% tariffs on China because of fentanyl, sending fentanyl to North America. And that is also why he wants to impose tariffs on Canada and Mexico. He's saying as much as 25%, and that will take place around February 1st, which is something he did say yesterday. He also talked about, there were questions to him, as expected, on the pardoning of 1,500 people who partook in that riot at the Capitol on January 6th of 2021, 4 years ago. And he defended pardoning them, saying that it was actually in defense of democracy that he was pardoning them. It was a good thing for democracy and the rule of law in that they hadn't, he mentioned some of them hadn't done so much, and that he thinks that they were their rights were being intruded upon by the sentences they were given. Of course, violent crimes were committed at the Capitol that day, and that was a lot of the source of the questioning. Should those people be allowed to be free when they had been convicted of violent crimes? The president withstood those questions, basically took the stance that they needed all to be pardoned. There's only, I think, 8 sentences that were commuted that they're still looking at, but 1,500 were pardoned.
Well, one of the big news events of the day was his mention of that Stargate project. That is the $100 billion investment in the AI projects that you mentioned, and that could scale as well. What's been the immediate reaction to that, and have we had any more detail in this press conference?
We didn't really hear a lot of detail. We heard from the three heads of those companies who are involved in this. It was very jovial. They were, saying how happy they were to invest in the U.S. Some numbers were thrown around. The question in these kind of situations always is, Paul, is this a new investment, or is this investment that they've already started in the U.S.? How much will be moved from other investments? But the dollars do sound large, and Donald Trump has promised to try to work with technology leaders to have them bring their investment to the U.S., including foreign-based companies.
One of the other big pieces of news that we're all waiting on really is whether or not President Trump is going to have a phone call and perhaps later a meeting with the Russian President Vladimir Putin, because it was a campaign trail pledge, of course, that he would end the Ukraine war very, very quickly. Have there been any remarks on that?
Yeah, yesterday he did not mention Ukraine in his inauguration speech, interestingly. At a kind of press event last night where he did a lot of these signings of these executive orders, he did mention that he wanted to try to get out of Ukraine. He said, again, he repeated that had he been president, this war during this period where they went to war, that it would never have happened, and that he wants to see it end. He thinks it's in Ukraine's best interest to end it, and he thinks it's in Russia's best interest to end it, saying that Russia has lost a lot of people and a lot of money in that war. He didn't say that he would necessarily meet with President Putin. He did say that he wanted to try to do that, and he wanted to try to set something up. And there's been some reporting that there are talks in the works for them to meet, perhaps at another location on the sidelines of another summit.
All right, Bloomberg political news director Jody Schneider there, and President Trump saying that he'll meet Putin anytime that he wants. It has been a broad-ranging press conference, as we mentioned, veering from topic to topic. There have been a few more remarks about China here. President Trump saying he didn't talk much about tariffs in his recent conversation with China's Xi Jinping, saying that Xi, quotes, knows where I stand. He also says that the 10% tariff on China would be related to the importation of fentanyl through Mexico and Canada. So that is
State Street CEO said on a separate panel that he doesn't think that China is going to be a natural buyer of U.S. treasuries going forward, something that the U.S. has really counted on in years past. And also just want to note that UBS's Emeritus also said that the shadow banking system is a concern for him because it's not subject to the same stringent regulations as the traditional banking system. He says that the prospect of deregulation, something that the Trump administration has put forth, actually worries him because financial companies, banks should be a resolution during a financial crisis, not a problem. Guys.
All right, Jennifer, thank you so much. Appreciate you joining us from the World Economic Forum in Davos. Here in the States, President Trump considering a 10% across-the-board tariff on China starting as early as February 1st. Despite recent threats against U.S. trade partners, including Canada and Mexico, the president has yet to take official action implementing any tariffs. Joining us now with more, Leland Miller, China Beige Book co-founder and CEO. Leland, great to speak with you today. So on the campaign trail, we heard about a 60% tariff on China. Now that he's in the White House, it's down to 10%. How are you thinking about clarity on what the actual tariff rate is going to be on China?
I think the appropriate way to approach this entire issue is from a strategy perspective and not from a tactical and, revolving deadline perspective. What does the Trump administration want to do? They want to do a few things. They want to use tariffs for making deals, negotiating leverage. Sure, that's part of it. But a larger part of what this administration is planning to do for the next 4 years is use tariffs to restructure economic relationships. There's a belief that the trade deficit, the massive trade deficit, and some bilateral trade deficits are national security crises and need to be dealt with. And you've also got a separate component in which you have a desire to use tariff revenue being brought in order to pay for tax cuts and for domestic production back home. So you've got tariffs falling in several different buckets in several different ways. And when you look at China, the major thing is bucket number 2 is the economic relationship. It's how to fix that. There are issues involving fentanyl and other things. The president has that as a tier 1 priority. So it is top of mind right now. But I think when you look at this, some of the tactics have not been figured out. There's a lot of, messiness in terms of the initial rollout. But I think you have to look at this in terms of what does the president want to accomplish and what will he do in terms of, the first 10 days and then 10 months into this. I think it's going to be very different as this evolves.
Leland, I want to pull up a chart that we got from Apollo's Torsten Slok, and he very much outlined Chinese economy right now, where things stand, talked a little bit about the consumer. But I first want to talk about the U.S. and China trade relationship and the dependency or the moving away that we've seen from the two countries in terms of now they're not depending on each other as much. And that's very much illustrated in the chart that we have there. It's China exports to the U.S. as a percentage of the total. Then you have U.S. imports from China as a percentage of the total. And both of those lines pretty much steadily declining to the downside. What do you think that percentage will potentially look like by the end of the Trump administration? Is it going to be dramatically different?
Well, there's two key components of this. The first is whether China will import more. I mean, domestic demand in China has always been the key problem. They'll export to the world, but when it comes to demand, they're going to hoover that up for themselves. So the question is, will the Chinese buy more, either because there's, a turn towards more domestic-focused consumption stimulus, or because they're forced to in some sort of trade deal. And the other aspect of that is Chinese exports. You see numbers go down, but that's not always what's really happening because of transshipment. So the Chinese have a wall around the United States for tariffs directly from China, then they try to ship things through Mexico or Vietnam or other places, Southeast Asia. So the numbers are not always the numbers, but the trends are the trends. And the trends right now is there's too many exports coming out of China. There's not enough domestic demand to bring imports up. And as long as that inequity continues, there's going to be enormous political friction, not just with the United States, but with the entire world.
How likely is that friction to lead to a broader trade war?
Very likely. I mean, what has President Trump been saying for years now? He's saying that this is a massive problem. And it's not just about the bilateral trade deficit and whether one number goes to another number. It's about structurally how the Chinese run their economy. And they have run their economy and doubled down in 2024 on more production, more exports, gobbling up manufacturing share from the whole world. These are trends that are not sustainable. You see them going up during COVID. There were a lot of exigent circumstances during that time. But since COVID, it keeps going up and up and up. And these are trends that are not going to be sustainable for the United States, for the European Union, for other countries to tolerate for much longer. So we've always said there was going to be a trade war regardless who the U.S. president was in 2025. But the fact that it's President Trump and he has laid out very clearly the way he views these things, I think the trade war is some sort is very likely this year.
Leland, what are the implications then of that and escalating tensions between the U.S. and China, and what that ultimately means here for the TikTok debate and how that is going to end and play out here in the U.S.?
Well, TikTok obviously has nothing to do with economics per se. It is a valuable company that the president says he'd love to see a deal on, which is why he extended the shutdown an extra 75 days. Will we see Beijing come in and try to trade off selling TikTok in some way, shape, or form in return for some sort of insularity against moves like tariffs? I'm sure there's going to be discussions, but I think that this is secondary to the structural problems in the relationship. Even if a deal on TikTok is somehow made in the next, 74 days or so, you still have the problems that are sort of spiraling in the wrong direction for U.S.-China relationship and China's relationship with the rest of the world. So these are things that are not going to get taken care of no matter what is done with TikTok.
But Leland, just given what we know about the relationship between the Trump administration and Xi Jinping and his administration, do you see, I guess, what is the possibility or what is the likelihood that we are going to see some sort of deal made?
Well, I think it has to do with, what the Trump administration decides it wants. If all they want is a bunch of purchases of commodities and maybe some sort of deal on TikTok, that's something that Beijing can very easily give up. Now, there'll be a lot of drama along the way, but that's something that I don't think Beijing cares about too much. If the push is to restructure the relationship, which again has been something President Trump has been harping on for years and years and years and really seems to feel very deeply about, then that's not something that Beijing is going to give away easily. They're not going to, Xi Jinping's not going to wake up one day and say, okay, well, we've run the economy this way for over a decade. We're just going to, restructure the economy because the United States asked to. That's a very hard ask. It's something that's very difficult to do. So the question is, what is a deal? What would comprise a deal? There's an easy deal to be had, and there's a very difficult one to be had. The question is which one the United States goes for, if it does go for a deal.
More broadly, though, it does seem like deal making is certainly on the table between Trump and China across tariffs and TikTok. I want to end, though, on the Chinese consumer. And this chart from Apollo stood out to me, looking at the number of workers per retiree in China dropping down to 5. It was at 10 just in the early 2000s here. So significant drop off, just indicative of the weakness in the economy there. And I want to get your take on how that could weigh on American company earnings, specifically for those consumer-leading companies that rely on Chinese consumers for a significant portion of their revenue.
Yeah, well, look, 30,000 feet. What does this chart say? It says that domestic consumption in China is weak. It's been weak for years. It's getting weaker, and demographic headwinds suggest it's going to keep getting weaker and weaker. So we're talking about the structural, problems in the economy. These are all things that are going to get more difficult over time and more unlikely for China to double down and fix themselves without some pressure. So, again, demographics are not the only reason that consumption is going to be weak in the future. Structurally, consumption is not a priority of the economic leadership, and as a result, you've got these trade problems that are boiling up. So I think looking forward, it's very hard to see how these problems are going to be taken care of without increasing deterioration in the relationship.
All right, Leland Miller, always great to get your insight. Thanks so much.
My pleasure.
Take a look at the crypto market. Bitcoin moving to the upside today after acting SEC Chair Mark Ueda launched a crypto task force. Task force is meant to develop a regulatory framework for crypto assets, provide clarity around issues like disclosures, registration, and also what is legal in this space. For more on this, we want to bring in Rick Edelman. He's Digital Assets Council of Financial Professionals, founder of that. Rick, it's great to have you here on Yahoo Finance. Talk to me just about how big of a catalyst this is for the industry and whether or not this is something it looks like the industry, at least investors, are excited about it. But those inside of crypto, is this what they want to see from the administration?
Yes, it is. We're very excited about what's going on now after 4 years of blockage and obstinance from the Biden administration and the SEC Chair Gary Gensler. We're now seeing the chains unleashed. And as a result of this, we're finally going to see over the next 18 months all of the regulation and legislation that the crypto industry has been asking for. I mean, how many industries are begging Washington for regulation? We've wanted it in the crypto field because nobody knows what the rules of the road are. We're happy to obey the rules. Just tell me what the speed limit is. I'll drive within the speed limit, but don't pull me over for speeding without telling me what the speed limit was. That was the way it was under Biden and Gensler. And now we're going to get the clarity that has been lacking so far. And this clarity is going to not only provide us the rules of the road, but most importantly, it's going to allow banks and brokerage firms to engage in crypto. We're going to be able to custody and trade for client accounts. And that opening the door to banks and brokerage firms for the first time ever is going to unleash trillions of dollars of access, resulting in massive asset flows into crypto. And that's why you're going to see prices rise dramatically. And they've already risen a lot in anticipation of this.
Perhaps that regulatory clarity might apply to the president himself after President Trump and First Lady Melania launched meme coins ahead of the inauguration, and that Trump coin falling yesterday after Trump said this. Take a listen.
Well, I don't know if it benefited. I don't know where it is. I don't know much about it other than I launched it. I heard it was very successful. I haven't checked it. Where is it today?
So outside of the lack of legal clarity on meme coins more broadly, what does the existence of the Trump coin, of the Melania coin, do to legitimize or delegitimize crypto as an asset class?
Yeah, it's distasteful for sure. It's probably unethical. It's possibly illegal. And it's a huge distraction. The crypto community has worked really hard ever since FTX's collapse 2.5, 3 years ago. We've been working really hard to demonstrate professionalism and honesty and legitimacy. We've made a lot of progress, come a long way, and then you have this ridiculous distraction. But nobody can say they're shocked by it. I mean, we understand who Donald Trump is. He's a great leader, but he's also very self-motivated. And if he can make a buck, he's going to do it. He's got a great history of making a lot of bucks. And this was an opportunist moment for the president and his wife. And we have to kind of hold our nose to see that this is going to be a sideshow along the way of crypto legitimization, growth and development, and access to billions of people around the world. The crypto community is a little embarrassed by this. Not that it merely that it happened, but how it happened, when it happened, just days before the inauguration. And I think you're right. I think the new legislation and regulation will, I'm hoping, put a stop to stunts like this.
How big of an overhang do you see this being? Is this something that you think investors are going to brush aside in the coming days and coming weeks?
Yeah, they're going to ignore it. I mean, this is one of tens of thousands, hundreds of thousands of meme coins. It happens to be incredibly prominent because it's the president and his wife. But the end of the day, this is a sideshow. It's not going to have any material, long-lasting impact other than reminding legislators and regulators the need for rules and clarity.
I guess that makes me wonder, though, if it does put a cap on flows into Bitcoin as an asset class, if there are certain portions of the population that haven't gotten in yet that may see this as another sign of the asset class just not being on par with the traditional asset classes that we invest in, like stocks and bonds.
No, I don't think so. I don't think this is any more significant than institutional investors refusing to buy the S&P 500 because of the existence of penny stocks. So I don't see anybody drawing a conclusion saying that this is evidence I should stay out. If you're a crypto hater, you'll use this as an argument to hate crypto. But if you're someone who studies the technology, understands the incredible economic benefits to consumers, to businesses, to governments, you're going to recognize that the unleashing of the technological capabilities far outweighs the isolated sideshows that periodically crop up.
Rick, let's talk about some of the excitement within the crypto market. Here we are today. You've got Bitcoin back above 104,000. Given what we've heard from the administration, the crypto-friendly nature, and the language that we're expected to get here over the next 4 years, what does that mean for the price? How high do you think Bitcoin's going to go?
Well, about a year ago, I came out with a prediction saying, and this was when Bitcoin was around 15,000 or so, that Bitcoin by the end of the decade will reach 500,000. I confirmed that today. I still believe that will be the case. I think Bitcoin will rise somewhere between 50 and 100% this year. It'll end 150,000 to 200,000 in value. It could even go higher than that. We'll see. But the reason for my optimism is because we are going to be creating the rules of the road that are going to allow institutional investors, endowments, pension funds, hedge funds, family offices, sovereign wealth funds, major Wall Street banks and brokerage firms to participate in this asset class for the very first time. You'll ultimately see Bitcoin available in 401k plans as well. It's already available, but in a small sense. And so we're going to see the availability of trillions of dollars of assets being available as asset flows. And since Bitcoin is still very small, it's only about $3 trillion in value, the total crypto marketplace, compared to $100 trillion of value in assets in the U.S., there is a huge upside left to go. And because Bitcoin has a limited supply, all of the new inflows simply result in price appreciation. It's the classic supply-demand scenario. So it's easy to see why Bitcoin is going to rise dramatically over the next 4 or 5 years. And I haven't really seen anybody suggesting that it's going to fall dramatically. But I do see an awful lot of folks arguing that it's going to perform extremely well and largely outperforming every other asset class.
Rick, there's always plenty of skeptics out there. Rick Edelman, we appreciate your time. Thanks so much. Coming up, we're taking a look at today's Yahoo Finance trending tickers. We'll give you the news behind some of the moves that we're seeing in the stock market here today. That's coming up next on Catalyst.
Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and the worst performing stocks of this session. All done on Yahoo Finance's trending tickers page. First up, let's take a look at Abbott. Abbott Labs missing fourth quarter sales expectations, dragged down by weakness in its nutrition and diagnostics units. The medical device maker also forecasting first quarter profit below the street's expectations. Still, though, the company's full year outlook coming in line with estimates. A bit of a silver lining there. I guess you're looking at gains of just about 0.6%. But when you drill down into these numbers here, there is something to be concerned about. When you take a look at diagnostic sales, that declined on a year-over-year basis, coming in just below what the street was looking for. Pharmaceutical sales was up slightly on a year-over-year basis, although, again, just below what the street was looking for. And the medical devices, that's the one that stuck out to me there. Bit of a bright spot there. They did see some improvement on a year-over-year basis, but again, not enough to really move the needle. At least it looks like here with that small gain that we're seeing so far in this morning's trading.
It's interesting, the double-digit gains in medical device sales in the context of their COVID testing diagnostics unit, down by double digits as well, over 30%. It speaks to this idea of these companies having to continue to reinvent themselves following the pandemic. Perhaps that's a little bit of what we're seeing here with Abbott, but TD Cowen noting that any pressure on the stock that we saw after that slight miss this morning could potentially be short-lived. And Bloomberg Intelligence talking about how there could be more growth in that medical device sales unit throughout the rest of this year, which could be another tailwind to this stock and their revenue moving forward here. Next up, Citi resuming its coverage of Disney with a buy rating and a price target of $125, citing the attractive risk reward after a period of rating suspended from Citi. So again, just reinitiating their coverage here in this buy rating. But it's interesting what they say about Disney. They actually say that the street is a little bit too bullish, which I thought was really interesting. They are not as bullish as the average price target from the rest of Wall Street and analysts. Disney getting a little bit of a bid this morning off of that Netflix news already, and then just a touch more off of this coverage rating perhaps, but not too much. And it's interesting too, the bear case that they point out for Disney. They talk about the macroeconomic backdrop if we do see any broader consumer weakness, and they also say Universal Epic Universe could potentially pressure Disney World in the parks. So I thought that was interesting that those are their two headline misses for Disney potentially.
Yeah, exactly. It is interesting, especially just given the performance that we've seen from Disney here over the last several months and really over the last year. If you take a look at a one-year chart, yes, we're looking at gains, but still significantly underperforming the gains that we saw from the S&P 500, for example. You're looking at gains of just about 14% on that 52-week basis. When it comes to why they are optimistic, I think a lot of that has to do with pure valuation, just a risk reward right now, how attractive that looks to them. And given their base case and even their bull case, you can kind of see some of those scenarios playing out, right? If the macroeconomic picture just improves just a bit, if consumers continue to spend, if cord cutting maybe slows a bit more than what they are right now currently forecasting within their estimates, that will lead to actually their more bullish case right now on the stock. But again, Citi covering or initiating their coverage right now with a buy rating after suspending their coverage there, 125 price target. So they're seeing some gains from here. We'll see how it all plays out.
Especially because, to your point, they also talk about entertainment and experiences being growth drivers, but they don't see a lot of growth in sports. So perhaps if you're the CEO, you just see that as an opportunity, not necessarily a ding to
Yeah, exactly. We've seen Disney take a number of initiatives with their ESPN arm just in terms of cost cutting. That's a strategy that we have seen play out over the last several years, whether or not it comes to top talent, whether or not it comes to some of the deals that they have with the league. So we certainly have seen a shift there, and that move is expected to be a further push in the direction that it's been going as well. Let's take a look at GE Vernova, missing fourth quarter revenue expectations, but still reaffirming their 2025 outlook, citing a strong finish to 2024. We want to bring in Chris Dendrinos. He is RBC Capital Markets analyst. And Chris, you see strong indications of some upside here. Why?
Yeah, thanks. I guess you could go back to the overall Trump narrative and the positive demand backdrop. He signed a number of executive orders on Monday, and you saw the Stargate announcement. That's right in GEV's wheelhouse. They are a leader in gas turbine manufacturing for power production, and then they have an electrification portfolio. And all that kind of lends itself to an opportunity to continue to support the electric grid. And so, from my perspective, the commentary on the call this morning was very, very bullish. They called out positive dynamics in demand, positive dynamics in pricing, positive dynamics in productivity. And so, there's nothing really to, at this moment at least, really poke holes into that would suggest that the trend is not going to continue up and to the right.
The one thing that I found a hole in, and I'm excited to get your context on this, Chris, is those tumbling wind orders as potentially part of the problem for GE Vernova. And I wondered if you think the focus on liquefied natural gas and oil under the incoming administration, the current administration, I should say, is that going to present an even bigger problem for GE Vernova, or is any shift in focus to other forms of energy just an opportunity?
Yeah, I mean, I guess honestly, it's a bit of both because they've got a very diversified portfolio of gas, nuke, and then wind. And so if there's wind weakness, the grid needs energy, and so maybe that's more of an opportunity for gas power, which actually carries higher margins for them. And now, to your comments on the wind portfolio. It's an offshore wind portfolio that continues to have losses, but there's an end in sight. And then onshore, it's a smaller piece of the business that has lower margins. And so, some of the announcements or the executive orders from President Trump, at the margins could impact that onshore wind portfolio. But I think the key message there is that only 5% of total wind production in the U.S. occurs on federal lands where he's instituted a ban, and so it's a very small portion of the overall demand picture. And then, for GEV, they've got other parts of the portfolio that pick up and supplement that. So, overall, yes, some weakness in wind, but it's one of those segments of the business that expectations are extremely low, whereas everywhere else in the portfolio where they continue to outperform, those expectations are really high. So they're clearing the high bar and maybe falling short of the low bar, but the low bar is not that relevant.
Chris, one of the areas of that outperformance, a lot of that related to the AI boom. You have nat gas turbines more than double their orders, more than doubling to 20 gigawatts last year. They're saying they said on the earnings call that they expect 2025 to be even stronger. I'm curious what you're modeling out, just how big of a boom you're expected to see over the next 12 months.
Yeah, so I mean, this is the biggest head scratcher for me is just how much are they able to push pricing, and I think the narrative from them continues to be extremely bullish, and so they last year they announced an increase of capacity for their gas turbines. It was a 35% increase, and they've been pretty adamant so far, and commentary on the earnings call as well that it's not going to go much higher than that, but they're fielding a lot of phone calls, and so. What do you do? Well, that's an opportunity for them to take pricing further. And so, for us, we're continuing to scratch this one and try to figure out just how much the opportunity is. But, I think the expectations amongst the investor group is, our 2025 numbers are already at the high end of the company's guide. I think, call it buy side expectations are above the high end of company guide. And I think there's, no signs right now, at least that suggest that couldn't actually that won't occur. And the commentary from the company definitely supports that.
All right, Chris, we got to leave it there. Thanks so much for joining us. Appreciate it.
Okay.
Coming up, Richard Dixon, Gap Inc. CEO, weighing in on tariffs and the state of the consumer from the World Economic Forum. We'll bring you that conversation from Davos.
Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
गाइस क्रूड ऑयल को देखोगे अभी भी सपोर्ट पे रुका हुआ है. नेचुरल गैस भी रेजिस्टेंस पे रुका हुआ है, ब्रेकआउट किया नहीं है. या तो ब्रेकआउट करे या फिर कोई नया सपोर्ट बनाए तभी कुछ कर सकते हैं. नीचे एफई जरूर है बट देयर इज नो सच सपोर्ट. ब्रेकआउट हुआ नहीं है तो बाई मत कर लेना कहीं अभी. कोई नया सपोर्ट बनेगा तो देखेंगे, नहीं तो इट इज स्टिल ऑन रेजिस्टेंस. क्रूड ऑयल की इन्वेंट्री नहीं है आज. नॉर्मली वेडनेसडे के दिन होती है बट देयर इज नो क्रूड ऑयल इन्वेंट्री शेड्यूल फॉर टुडे. इन्वेंट्री अब सीधा आपका कल आएगी क्रूड ऑयल की और नेचुरल गैस की. सो देयर इज नो इन्वेंट्री टुडे. कोई डेटा ही नहीं है आज के दिन. होता तो मैं लिख देता स्क्रीन पे. देयर इज नो डेटा. ये सारे डेटा कल ही हैं ऑलमोस्ट 23rd ऑफ जनवरी को. मेजर चाहे वो क्रूड ऑयल इन्वेंट्री हो, नेचुरल गैस इन्वेंट्री हो, अनएम्प्लॉयमेंट क्लेम्स का डेटा हो. भी करते रहो गाइस. 60 लाइक हो चुके हैं. 100 लाइक्स का टारगेट है. 9 PM हो चुका है. कुछ नए लेवल बनेंगे तो वी विल सी. अब अच्छा मूव आया क्रूड ऑयल में. सेलिंग भी अच्छी आई, फिर थोड़ी बाइंग भी ठीक ठाक थी. अब थोड़ा सा साइडवेज जैसा हो चुका है. नेचुरल गैस में भी सेलिंग अच्छी थी. नीचे वाला एफईजी थोड़ा सा ब्रेक नहीं हो पाया, नहीं तो एग्जैक्टली सपोर्ट पे हिट करता. वहाँ पर एक बाइंग अच्छी प्लान कर सकते थे. सब एफईजी पर ही फाइट चल रही है.
Moments in time where we were less relevant, and the company, I believe, overall through that has been incredibly resilient. So this is a group of assets that, as we continue to drive our strategic priorities, putting more discipline into financial and operational rigor, we've stabilized the top line, we've expanded the margin component of our P&L pretty significantly, we've controlled inventory, we've done less promotions, we've controlled the SG&A, and now our operating margins are really getting back to some historical references.
How much sourcing is still left in China, and how concerned are you about potential tariffs?
Yeah. Our team has done an incredible job over the last several years diversifying our global manufacturing footprint. Less than 10% of our product is coming from China. We've got Southeast Asia, Central America, Europe, India. We've got various different places and ways that we've been developing over time, and we continue to develop even new markets for product development. So tariffs, they'll come, but ultimately it's our job to figure out the value proposition and make sure that we present our consumers with the best product at the best price with the best execution.
Are you spending outsized time at the board level even thinking about tariffs?
Our board is concentrating on our strategic priorities. I mean, tariffs are a dynamic and arguably one that we've experienced before. This is again a legendary company, 55 years young. There's a lot of events that have happened over that course of time, and the company's proven resilient through all of the trials and tribulations. We are going into another chapter of challenges, but again, as we stick to our strategic priorities, do what we say we're going to do, we're going to figure all the various different policies out with this new administration. We're optimistic about the future of our brands, and we're looking forward to working with the administration and dealing with all the various challenges ahead.
Do you have to, I had a conversation with the CEO of Suntory. He told me they were stockpiling whiskey in Europe because of tariffs. He has 1 year of whiskey in Europe. Is that a strategy you could employ? Will you stockpile merchandise?
We are really making sure that we manage our inventory really carefully. There are always timing issues with inventory that may have different fluctuations, but ultimately, and I think as you see our gross margin expansion over time, the discipline that we put into place, running a much more financial and operational rigorous model, is a big component of that is inventory management. And so we are running our business as we need to with the right inventory and the right time. And it's a fundamental fix that, again, with the metrics that we put on the scoreboard, is a discipline that I'm feeling much more confident about.
Before I let you go, when I first caught up, when you first took this job over a year ago, it wasn't the right time to ask this question, but like now that you've settled in, should all these brands still be owned under this umbrella of Gap? Does that model still make sense? And it's top of mind for me, not only for your company. I'm talking to Honeywell CEO. His company is splitting up to drive shareholder value. Have you thought about this at all?
Of course, we think about it and we've analyzed it, and we believe the portfolio that we have in place is a powerful portfolio. We've spent a lot of time differentiating each one of our brands, as we talked about before, and now you go online and you start to feel brand storytelling that's distinct from each other. We're building a lot of capability and insights into making sure that we leverage our portfolio, study our consumer from the various brands, and offer the most distinct and unique product by brand. The platform that we have in the context of our portfolio can be leveraged in really exciting ways. Our global supply chain is one of the largest in the fashion industries. The value proposition that we get when we go buy fabric, when we negotiate, real estate, we're the largest apparel specialty player in the country. We've got great pride in that heritage, but we also have a strong negotiating point of view as a large leaseholder.
Sounds like you couldn't even unwind it. I mean, it would be very difficult.
It's very difficult to revitalize portfolio brands that you're seeing the progress that we're making. I believe by strengthening our platform and continuing to do what we say we're going to do in the middle of the P&L and now growing our brands on the top line, the platform is going to be leveraged, and there's going to be a lot of exciting ways that we share with our shareholders, various different ways to optimize and create shareholder value.
That's all Banana you're wearing, right?
It is all Banana head to toe, and a little bit of Gap and Old Navy in places that you can't see.
All right, well, don't make me blush there, Richard Dixon. We're just going to leave it there. CEO of Gap, always nice to see you, man. I appreciate you always making time for us.
Thank you so much.
All right, do stick around. Much more ahead on Yahoo Finance.
Appeal to Donald Trump ahead of talks with Russia. News when you want it with Bloomberg News Now. I'm Karen Moscow. In an exclusive sit-down interview with Bloomberg News editor-in-chief John Micklethwaite, President Volodymyr Zelensky said U.S. troops will need to be deployed in Ukraine as part of any workable ceasefire agreement in an appeal to Donald Trump ahead of talks with Russia. Micklethwaite asked Zelensky about the role of peacekeepers in any deal.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important because I heard that some allies said that, yes, but it's okay, we can be in the center of some city. And then, no, we don't need such contingents. No. Yes, with our people, of course. Yes, because this means security. And that's it. So, but it can't be. It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin. to divide this unity.
And that's Ukraine's Volodymyr Zelensky in an exclusive interview with Bloomberg News editor-in-chief John Micklethwaite from Davos, Switzerland. Zelensky argued that his European allies don't have enough soldiers to pose a realistic deterrent to Russian President Vladimir Putin. And again, stocks are on the rise today. The S&P 500 up 0.6%, the Nasdaq up 1.1%, and the Dow Jones Industrial Average up 0.2%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
गोल्ड के लेवल, गोल्ड को देख लेते हैं. लेट्स सी द गोल्ड लेवल. 15 मिनट टाइम फ्रेम. ओके, सपोर्ट पर ही है गोल्ड ऑलरेडी. गोल्ड ऑलरेडी ऑन देयर सपोर्ट. काफी देर से रुका हुआ है सपोर्ट जोन पे ही. 2753-54 is a support zone. तक आ जानी चाहिए थी बाइंग इस लेवल पे. सपोर्ट पे कंसोलिडेशन हो गया इसका. अगर ये ब्रेक डाउन कर गया 2751 के नीचे ब्रेक डाउन रीटेस्ट, तो और सेलिंग आ सकती है. 545 पे आया था सपोर्ट एरिया पे, 2-3 बार बाइंग दिखा भी चुका है, बट लग रहा है शायद अब कंसोलिडेशन करेगा. जस्ट लाइक क्रूड ऑयल सेम सिचुएशन बनी हुई है. एक बार नीचे का भी देख लेते हैं, कोई और सपोर्ट है इसके अलावा.
Believe genuinely that these companies don't have the funding. The $500 billion that's announced is the long tail idea for how much they want to spend, right? So they don't have to have $500 billion on hand right now. That's the expectation if everything goes well. So, I think part of it could be Musk just being annoyed that OpenAI is involved. And it'll be interesting to see what that means for the dynamic between him and Trump, just because they were besties. He's, been all over the place there. Now he's continuing to be himself on X/Twitter, whatever. What does that mean then for him and Trump.
Yeah, there's a lot of speculation as to how long it would take for something like this to happen and for him to start questioning some of President Trump's ideas. We're already starting to see it. All right, Dan, great stuff. Thanks. Well, Google is investing another $1 billion in OpenAI's rival Anthropic. That's according to a report from the Financial Times. This investment is in addition to over $2 billion stake Google already has in Anthropic. The partnership allowing the two companies to co-develop AI systems, and Google uses Anthropic's Claude model in its online cloud services. Amazon is also a big backer for Anthropic, investing $8 billion in the company over the last 2 years. The tech giant planning to use Claude in its next generation Alexa speakers. This new funding from Google coming just weeks after Bloomberg News reported that Anthropic is in talks to raise $2 billion in a round that values the company at $60 billion. The competition in the AI startup space is fierce. OpenAI's latest valuation putting it at just around $157 billion, and Elon Musk's XAI at $45 billion. Coming up, we're discussing some of the top themes for ETF investors in 2025. We've got that investment playbook for you when we come back.
देखिए बाकी देखो ऊपर इसमें कोई खास रेजिस्टेंस बने ही नहीं है 15 मिनट में उतना पीछे लेवल दिख नहीं रहा है सो दैट इज द ओनली सपोर्ट एरिया 2-3 बार यहाँ ऑलरेडी ले चुका है अभी तक निकल जाना चाहिए था नॉर्मली बट अभी भी नहीं निकल रहा है तो दैट इज़ द लास्ट सपोर्ट कह सकते हो 2751 के नीचे ब्रेकडाउन रीटेस्ट होता है तो फिर सेलिंग का प्लान करना बीच में जो भी एफईजी बने होंगे 2000 द फर्स्ट लेवल जहाँ पर प्राइस थोड़ा बहुत रुकने की कोशिश करेगा जैसे ये नीचे एफईजी बना है यहाँ पर फिर नीचे एक मेजर सपोर्ट है इसका 2729 ऊपर रेजिस्टेंस शायद कहीं बना हो बट इतना पीछे चार्ट में दिख नहीं रहा है तो यहाँ पर कोई लेवल अब है नहीं 15 मिनट में कुछ खास दिख ही नहीं रहा है यहाँ पर टाइम फ्रेम इंक्रीज कर सकते हो या फिर कोई नया सपोर्ट रेजिस्टेंस बनेगा तो विल सी तो यह लेवल है फिलहाल के लिए गोल्ड में क्रूड ऑयल वही सपोर्ट पे ही रुक गया बिल्कुल नेचुरल गैस रेजिस्टेंस पे ही होल्ड किया हुआ है स्टिल नो बिग मूव लाइक भी करते रहो गाइस डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल इफ यू हैव एनी क्वेश्चन यू कैन आस्क इन द कमेंट बॉक्स में पूछ सकते हैं अपना क्वेश्चन डेटा है बड़ा इंपॉर्टेंट है वो गोल्ड के लिए उस पर भी फोकस रखना टुमारो देयर इज वेरी बिग इंपॉर्टेंट डेटा अनएम्प्लॉयमेंट क्लेम्स का क्रूड ऑयल वॉलेटिलिटी जरूर शो कर रहा है बट स्टिल होल्डिंग सपोर्ट अभी भी होल्ड किया हुआ है नेचुरल गैस ऑल्सो ऑन रेजिस्टेंस स्टिल होल्डिंग ब्रेकआउट अभी भी नहीं हुआ है और ना ही कोई नीचे सपोर्ट बना है एफईजी है नथिंग एल्स in 15-minute time frame. आज इन्वेंट्री नहीं है, ध्यान रखना, देयर इज नो इन्वेंट्री फॉर टुडे, शेड्यूल फॉर टुडे। आज की क्रूड ऑयल की जो इन्वेंट्री नॉर्मली आती है वो कल शेड्यूल हो गई है, तो आज कोई इन्वेंट्री नहीं है, सारे डेटा अब कल ही रहेंगे। क्रूड ऑयल की इन्वेंट्री है, फिर नेचुरल गैस की इन्वेंट्री, पहले नेचुरल गैस की इन्वेंट्री आएगी 9 PM, फिर 9:30 क्रूड ऑयल की इन्वेंट्री, 7 PM पे अनएम्प्लॉयमेंट क्लेम्स का डेटा, और 6:30 न्यूयॉर्क सेशन की ओपनिंग, 8 PM यूएस मार्केट की ओपनिंग। साथ ही साथ कल ये स्पीच भी ज़रूर देखना, 9:30 PM पे यूएस के प्रेसिडेंट की कुछ स्पीच है, वहाँ पर कुछ भी बोलेंगे तो उसका भी इम्पैक्ट होगा डेफिनेटली। सो टुमारो इज़ वेरी इंपॉर्टेंट डे फॉर कॉमोडिटी। क्रूड ऑयल देखो ऊपर एफईजी को ब्रेक करता है तो अच्छा मूव कर सकता है, अगर ये सारे एफईजी ब्रेक करके निकल जाता है तो। ऊपर डे हाई रेजिस्टेंस है, वो ऑलरेडी टेस्ट हो चुका है, तो अगर एफईजी सारे बीच के हट निकल जाते हैं तो 6648 तक जाने की पॉसिबिलिटी रहेगी, अगर एफईजी ब्रेक हो जाता है इन केस। तो एफईजी निकाल देगा क्रूड ऑयल इस बार।
cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks are higher as optimism around AI growth outweighs tariff concerns. Netflix shares surging to an all-time high after topping earnings expectations and reporting its biggest quarterly subscriber add ever in the fourth quarter. The results spurring analysts to boost their price targets on the stock, Jefferies even calling the results, quote, near flawless. And Oracle and a slew of other AI stocks are higher after Trump announced Oracle is teaming up with OpenAI and SoftBank for a joint venture called Stargate. They will invest $500 billion to build out AI infrastructure in the U.S. We're seeing NVIDIA and ARM shares rising along with Oracle. Amazon also having a good day today, notching a record high intraday high. Analysts at Raymond James boosting their price target on the company, citing the outlook for generative AI growth. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session. Wealth starts now. Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and the tricks that you need to grow your money. Hey, on today's show, we're examining your portfolio. One financial advisor reveals why investors should feel comfortable moving their cash off the sidelines despite policy uncertainty. And trading for Trump 2.0, we break down how you can play the options market with 3 picks one guest says are due for bigger breakouts. Plus, paying for higher ed. We discuss what a Trump presidency means for student loan borrowers. Plus, an expert gives us tips for current students and older borrowers. All that and much more coming up during today's show. But first, let's begin, as we always do, taking a look at some of the market action here on the day. We're higher across the board 90 minutes into the trading day. Stocks rising right now as boosted by strong earnings and some tech optimism. Joining me now, we've got Liz Miller, who's the Summit Place Financial Advisors founder and president. Liz, good to have you on the program with us. You say investors should feel comfortable getting into this market. Why is that?
Well, we know there was a lot of cash on the sidelines all throughout last year from investors who sort of felt like they missed it and kept saying, is now too late, is now too late. And then there was a lot of profit taking into year end. So we know there's a lot of cash on the sidelines. And when we get days like today, this great strong day, a lot of investors again will say to themselves, well, let me wait, maybe I missed it. But, one of the big things we're seeing it today and really over the last day or two is that, the market that was a little bit sideways the beginning of this year with uncertainty is now breaking out. It's moving higher. And all those underlying trends in our economy that we knew were good for the market, earnings coming, a decent employment outlook, are starting to come through, and we little by little will get rid of that uncertainty of what policy looks like this year.
And it's policy two-pronged, right? Because it's policy that's coming from 1600 Pennsylvania Avenue as well as from Capitol Hill, and that policy aimed at what Trump and President Trump and his administration will target in terms of tariffs. And then the other side of that policy is, okay, if tariffs do get implemented and there is some type of pass-through to inflation, how does that impact Fed policy here? How are you striking a balance, especially as you're charting forward your own portfolio strategy?
What we've done for the most part is continually balance those two policy uncertainties, as you said, the Fed versus fiscal policy and potential tariffs coming out of Washington. But one thing we all know, it's nice to have a president who we know a little bit about, and we understand as investors that the right step is to wait and see the actual policy. And you see that in the long term in the markets, that in the short term, we do see that volatility when comments are made and they suggest much higher tariffs and inflation that can come down the pike. But if we stick to a discipline of understanding the underlying U.S. trends are good domestic growth, good earnings growth, and reasonable capitalization of companies, we found last time and we'll probably find this time around, that will come through in the markets because the discussion looks a lot scarier than the policies that end up really taking hold.
Let's focus in on the Fed a little bit more here as well. When you think about the amount of rate cuts and what that would also need to sense and really kind of say about the economy more broadly, if we did get to that point later on this year, it seems like it's not until later on this year that we will see, and in the back half of this year, that we might see any type of rate cut coming from the Fed. What's your anticipation there?
We do expect to see some rate cut this year, but clearly a lot of uncertainty. And what we're seeing in the bond market, the fact that longer maturities have moved higher is those experienced bond investors getting ahead of the Fed. They're really telling the rest of us what they expect out there. There's a real feeling that the Fed doesn't have much strength right now. It's almost like we kind of talk about a lame duck Congress. It's almost a lame duck Fed for the next year. And so we're going to look a whole lot more at what the bond market tells us about concerns. And really, the 10-year is a little over 4%. And if you look at long-term history, that's not that high. We've just spent the last 5 to 7 years used to these unusually low rates. But a 3% inflation environment, a 4+% 10-year yield is very average for long-term history and has never put the brakes on an economy.
Liz, just lastly, while we have you here, I want to get some actionable picks right now that you're targeting, especially even as we began the conversation saying that this is still a safe market to get into. Where are the top areas that you're prioritizing?
We're prioritizing investments that have a strong domestic exposure because of that global uncertainty. Over 40% of revenues in the S&P 500 come from overseas. So one of the first things we've been talking about that was spoken about on the last show is small caps. We do like the exchange traded fund for the Russell 2000. We look at the IWM. Small caps are at very reasonable valuations. They've lagged. And when we see a stable environment and ongoing growth, they have a lot of potential for upside, and they tend to be very domestically focused, most of the companies there. So we think if you're a mutual fund or index investor, this is a great choice right now. We also like the REIT area, which is also lagged behind and is very U.S. domestically focused. One of the leaders there being equity residential. The United States is still very underbuilt for residential housing, and EQR is one of the leaders in that segment of the real estate market.
Liz, thanks so much for taking the time here with us this morning. Appreciate it.
Great to see you.
Good to see you too. Now time for some of today's trending tickers that we're tracking. You can scan the QR code below to track the best and worst performing stocks of the sessions with Yahoo Finance's trending tickers page. Joining me now, we've got Catalyst co-host Madison Mills here, and we're tracking a pair of analyst downgrades this morning, Maddie. First up, Reddit. Reddit cuts to neutral from buy at Roth Capital Partners. The analyst Rohit Kulkarni, who we've had on the show before, writing fourth quarter performance and first quarter guidance setup is, quote, not for the faint of heart. The analyst arguing that Reddit's valuation is above that of its peers. 2025 fundamental optics are, quote, mixed at best. The words in this particular call here. What do you make of this?
Yeah, it's not that surprising when you take a look at Reddit's stock run. It's been on such a tear. He notes that since the August low, it's up 270%. It's not really a question of anything wrong with the company. It's actually the opposite. It's that they've been so good over time. And you're taking a look there over even the last 6 months, up by triple digits for Reddit. It's just a question of that revenue growth and whether or not it's going to sustain with the street's expectations. He notes, as you point out, revenue growth could decelerate every quarter with somewhat deteriorating incremental EBITDA margins. He does say a risk to his call, which would be good news for Reddit shareholders, is that they could come up with new products and potentially that the Wall Street bets AI investors could potentially keep the stock lifted for longer. So we'll just have to see what those retail investors do to the stock moving forward.
Yeah, it's been quite the surge since this company went public here. Of course, we were both here on the desk to be able to break that down.
Yeah.
Also, we got to talk about Yum Brands here, and we're going to get hungry and ready for lunch off of this one. Yum Brands downgraded to market perform from outperform at Bernstein. The analyst citing a more pressured outlook in their algorithm in 2025 here. Shares right now, they're holding on to gains, though. They're up by about 0.4%.
I think it's interesting. There's a lot of good news within this, at least for the consumer. They talk about in this print from Bernstein, just the idea of increased expansion opportunities on margins, for example, particularly due to the fact that you've got consumer spending that could potentially keep Yum Brands up here, which I think is interesting given that we're in this context of a questioned market when it comes to the consumer. They do note GLP-1 adoption as a risk, but that there's still uncertainty about how that GLP-1 movement is going to go with regards to people being able to afford GLP-1s more broadly moving forward. This is not one of their top picks for 2025, but they do note that they just see, broader increases to Yum Brands moving forward here, and to Darden restaurants, I should say, actually, as part of their upgrade here. For those other restaurants, Yum Brands, though, I should clarify, is a downgrade within this note.
Yeah, it seems like their top picks continue to be Chipotle and Starbucks here, and then additionally, saying Wingstop, which we've had some own debate within our newsroom about Wingstop before here. We can talk about that at a later date. It's interesting. They also pointed out some of the policies that may shake profitability here for the sector, and notably talking about tariffs on China, and then also talking about the labor pool potential shrinkage amid greater immigration controls in the U.S. And a possible impact there here. So that factoring back into the Yum Brands downgrade.
Even mentioning RFK Jr. and potentially that Make America Healthy Again initiative being a headwind as well. So lots of policy impacts to talk about.
Maddie, great to break these down with you. Thanks so much. Appreciate it. We're going to turn now to a check of the housing market. I want to bring in Yahoo Finance senior reporter Danny Romero. Danny, let's start first with mortgage rates. We get those tomorrow. What's the lay of the land?
Well, buyers still remain on the fence. Mortgage Bankers Association, the association that tracks mortgage applications, showed that mortgage applications rose 0.1% from the prior week. That is such a small increase. And the reason is mortgage rates are hovering over 7%, which is hindering both activity for refinancing and purchasing. But we also have to remember that buyers are dealing with elevated home prices. Redfin reports that home prices rose 5.4% on an annual basis. Now, this is the smallest annual increase since 2015, but economists say that prices will continue to go up because there's not a lot of inventory that will be hitting the market. Some economists even say that there will be more sales activity this year compared to last year because there's a lot of pent-up demand, but it's unlikely that that will put pressure on home prices. Brad?
Now, Danny, we're seeing a lot of headlines about the rental market as well. What is the story that you're tracking there?
Good news. The rental market still remains attractive. Rents continue to fall, according to Realtor.com. That's because new construction is outpacing rental demand. Remember, there was such a big construction surge in 2023, and so renters are reaping the benefits of this construction boom that happened. However, on the single family home front, there's such a big demand for single family homes, and there hasn't been a lot of construction for these types of homes. And so rents continue to go up. They're about 40% higher than pre-pandemic levels for single family homes. Now, inventory just hasn't been able to recover, but there is a lot of discussion right now whether or not the new administration, the Trump administration, how they're planning to alleviate some of these pressures, whether it comes on the rental front or purchasing front. Brad?
Danny, thanks so much. Tracking all things housing market. Appreciate it. Coming up, the macro trends to watch in 2025. We'll break them down. Stay tuned. We've got much more wealth after the break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time. From Yahoo Mail.
News when you want it with Bloomberg News Now. I'm Amy Morris. In an exclusive sit-down interview with Bloomberg News editor-in-chief John Micklethwait, Ukraine President Vladimir Zelensky is arguing that his European allies just don't have enough soldiers to pose a realistic deterrent to President Vladimir Putin. Zelensky says U.S. troops will need to be deployed in Ukraine as part of any workable ceasefire agreement.
The troops will not be in the center of the capital. Yes. They will not have relaxed time. But it can't be. It can't be without the United States.
Ukraine's President Volodymyr Zelensky in an exclusive interview with Bloomberg News editor-in-chief John Micklethwait from Davos, Switzerland. President Trump, meanwhile, posted on Truth Social that he doesn't want to hurt Russia, but that if Putin does not end the war in Ukraine, there will be a new wave of tariffs, taxes, and sanctions. Trump posting, quote, "We can do it the easy way or the hard way." Also at Davos, J.P. Morgan Chase CEO Jamie Dimon expressed caution about the U.S. stock market.
I think asset prices are kind of inflated. And, by any measure, they're top 10 or 15%. I'm talking about the U.S. stock market, but it's not true for stock markets around the world.
Dimon told CNBC he has concerns about global deficit spending, persistent inflation, and geopolitical issues, but he believes growth is the solution to reduce deficits. J.P. Morgan Chase COO Daniel Pinto will relinquish his duties in June as he prepares to step down from the company. At the World Economic Forum in Davos, Switzerland, Pinto sat down with Bloomberg News in an exclusive interview where he says deregulation could have a downside.
I don't like to talk about deregulation. Rational regulation in our sector, in any other sector, could be good for growth. But if things go too far, then the Fed may have to hike rates and deal with inflation. Hopefully it doesn't happen.
J.P. Morgan Chase COO Daniel Pinto. Former U.S. House Speaker Paul Ryan, speaking with Bloomberg Television at Davos, says he would describe Trump's trade beliefs as America first.
I think the best way to describe it is America first. I think he's articulated an America first. On trade, it's a little more mercantilistic, say, than the traditional Republican, Reagan free trade. But America first is the quickest way of describing it. A lot of good fiscal policy, regulatory policy, tax policy. There's a lot of optimism, frankly. But on trade, I'm sure you have an international audience here. There's going to be some trade friction.
Former House Speaker Paul Ryan. A batch of earnings from industry heavyweights drove stocks to the brink of all-time highs in a continuation of the rally fueled by the strength of corporate America. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.6%, NASDAQ up 1.25%, and the Dow is up 0.1%. The 10-year Treasury yield at 4.58%, and the 2-year yield is at 4.27%. Netflix and other technology stocks also lifting the markets as their profits pile higher and excitement builds around the money-making prospects of artificial intelligence. Netflix shares right now 11% higher. And there may be a deal in the works for TikTok. General Atlantic CEO William Ford in Davos sits on ByteDance's board, and he tells Axios that negotiations may start as soon as the end of this week. Ford says there could be solutions short of divestiture. The Justice Department is directing its federal prosecutors to investigate any state or local officials who stand in the way of beefed-up enforcement of immigration laws under the Trump administration. That's according to a memo written by Emil Bove, the acting deputy attorney general, to the entire workforce, obtained by the Associated Press. The memo says the department will return to the principle of charging defendants with the most serious crime it can prove, a staple position of Republican-led departments designed to remove a prosecutor's discretion to charge a lower-level defense. And a deep freeze is straining power supplies across the eastern U.S., sending demand on the country's largest electric grid to an all-time winter high as the Deep South digs out from one of the worst snowstorms in 130 years. Across the South, the Houston area got as much as 3 inches of snow, and a site near Pensacola, Florida, 10 inches of snow. Across the South, many highways are still closed or barely passable. And that's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
The other kind of the realities of the political system. But nonetheless, that tariff policy is potentially a headwind, as well as deficits, which we know have caused rates to rise, albeit calming down a bit here more recently. But so those are some of the key headwinds, tailwinds. But the big thing for us, we're taking a step back and trying to make sense out of all the noise out there, helping investors settle in. We serve about 60,000 financial professionals and 17 million customers. And what we try to do is distill down that noise, bring it to those financial professionals, investors to make sense and cut through the noise.
With those headwinds and tailwinds that you mentioned, what kind of sector dispersion are you anticipating?
Yeah, you know, we're definitely seeing an opportunity for some other sectors to perform well that haven't most recently. And I think you look at that from an administrative perspective. I think the financial sector as well as the energy sector have the potential to perform well. They've certainly not performed as well of late. We still like, you know, technology still makes sense. I think that the Mag 7, as much as they've run, they are companies that have real economic moats and real value to be added. So, you know, we're talking a lot with folks about just taking the time to check in, think about rebalancing your portfolio. It's a good time to do that, given the run-up that we've seen in the markets over the past couple of years. I mean, 20% years back-to-back, led by that Mag 7, may be causing for some impacts in the portfolio that may be unintended. So just making sure that folks are taking the time to rebalance and think about their allocations, as well as just diversification, thinking about ways to diversify the portfolio, not just from a sector perspective, but from a more of an asset class perspective, value, international, et cetera, and also bonds. We've seen that bond funds have really suffered given the rise that we've seen in interest rates over the past couple of years from a total return perspective, but it's really a great time to be adding income to the portfolio. So it's another thing that we like. And then third, I'll say is private markets. We're definitely seeing an opportunity for private markets. We invest in them considerably within our own general account on the institutional side, and we're seeing more and more opportunities for individual investors to take advantage of private market strategies that have historically only been available to more institutional or high net worth individuals.
So that kind of spells out a portfolio checkup for investors and looking for areas to rebalance.
Absolutely.
What would you say is a good rule of thumb as part of that rebalance?
Well, I think that the rule of thumb is always to think about, your financial objectives, your liabilities. We think about asset liability management very much as an insurance company. We want to think about what it is that we're trying to achieve, what those objectives are, and then design a portfolio that over time will meet those objectives, regardless of the economic backdrop. So try not to think specifically about the particular point in time of the economic backdrop, thinking through the cycle, thinking about the duration of your liabilities or when you'll need income, retirement, et cetera, and really making your planning from a portfolio perspective, from that long-term perspective, such that you can achieve those goals regardless of the noise that's out there in the market around us.
You call the last few years a roaring 20s for the markets. What are the chances that this trend will continue? What do we need to see in the back half of this year that sets up perhaps the second part of the 2020s?
Yeah, absolutely. So, we've seen 2 consecutive years of more than 20% growth in the S&P 500. And this in and of itself is not necessarily a reason to be bearish. We've done some good research on this. Going back since 1950, there have been 8 other instances in which we have seen 2 consecutive 20% plus back-to-back years in the S&P 500. And of those 8 instances, 6 of those times saw markets higher a year later. So 75% of the time, the market's gone higher later and gone higher by a considerable amount. 12% is the average return. Now, typically it does come with some degree of downturn in the process. And I would say statistically, I wouldn't be surprised to see some type of a downturn in the markets here, given the volatility that we have seen. Average market will have a downturn of roughly 14%, and then go on to produce new highs. So I wouldn't be surprised to see that happen. But I think big picture, if we take a step back and think about the economic fundamentals are key, and they still look pretty good. You've got growth is easing, but still growing. We saw the leading economic indicators were in line today. A little bit softer, showing a declining trend. The labor force has softened, but is in pretty good balance. And inflation, the Fed has done a pretty good job with inflation. So against that backdrop, things look pretty good. I mean, we say that there's an old adage that bull markets don't die of old age; they're murdered by the Fed. And I think the reality is that the backdrop sets up pretty well for the Fed right now. While that easing may subside because the economic growth is pretty good. So be mindful of what could be out there. We could certainly see some exogenous shocks that could change things. But where we sit right now, and where we are in this particular bull market, that's about 27 months in relative to a typical bull market on average, which runs over 5 years. The backdrop looks pretty balanced with certainly opportunities for growth and a bit of volatility along the way.
Lincoln Financial Group Chief Investment Officer Jason Bronchetti, thanks so much for taking the time.
Thank you.
Investors are parsing through a flurry of activity in the first few days of the second Trump administration and presidency. Our next guest joins us with 3 call options that investors can use to cash in on the new administration. With me now, we've got Matthew Tuttle, who's the Tuttle Capital Management CEO and CIO, for an option segment sponsored by Tasty Trade. Matthew, good to have you here with us. So let's start with your first one. It's a play on drones with aerospace defense company AeroVironment. So walk me through this call.
Yeah, so there's a few things going on with this. First off, what the war in Ukraine, I think, showed us is the future of warfare is drones. And I can't help but, think that as well when I'm watching Trump's motorcade the other day, and they're talking about how it's fitted with anti-drone technology. Bringing this now to kind of the administration and the policies, the first thing they did is they closed the border. Well, how are you going to do that? We don't have the wall built yet. There are not enough Border Patrol agents. There are gaps. How do you fill those gaps? You fill it with drones. So they're going to need to use more and more drones at the border. And then they've named the Mexican drug cartels as terrorist organizations. And somebody asked Trump, hey, you're going to send in special forces. And he said, well, everything's on the table. But are we going to really send troops into Mexico? Probably not. We're going to send in drones. So I think drones are the future of warfare. Anti-drone technology's got to be built up. We're going to use it at the border. We're going to use it against the cartels. I think it's an under-the-radar screen kind of Trump theme that you want to be in. And AV is the leader here.
Next up, you also like Coinbase as a way to play President Trump's pro-crypto tilt. Walk us through that one.
Yeah, so what you saw and have been seeing over the past couple of days is now we've got the first ever pro-crypto president, pro-crypto administration, more importantly, pro-crypto SEC. We saw a slew of ETF guys, including me pretty soon, filing for a bunch of crypto-related ETFs on almost every coin imaginable. All of that stuff has got to be custodied at Coinbase. Plus, the Trump coin, the Melania coin, right now for people to trade that, Coinbase. So I think Coinbase is positioned perfectly here for what's going on in this administration.
Yeah, I had a couple of friends notify me once they got the alert and the notification that Robinhood had finally listed those meme coins that you mentioned a moment ago. And finally, you see more upside for Trump ally Elon Musk's Tesla here. So as we've been continuing to try and figure out what the Tesla trade is here, you're looking at a particular options play around that.
Yeah, so, we think Tesla's a name you've got to be in. Elon Musk was the biggest winner, I think, of the election here. The stock ran up. It's come back in somewhat. They've got their hands in so many different areas. Me personally, we run TSLT, which is 2x long Tesla. I would buy options in that. But, for the faint of heart, you could buy options in, the regular 1x as well. I just think Elon Musk is in so many different areas tied to what's going on, in AI, in robotics, and he's definitely got Trump's ear.
Just lastly, while we have you, Matthew, and this is some fresh news that we've seen come across over the past 24 hours with regard to investments in what is being called Stargate. And as you look at some of the companies that are going to be beneficiaries as a result of that, where do you kind of start to think through the options analysis and the potential plays?
So again, those are things we want to be in long term. This is happening so fast. You don't know when an announcement is going to come out. So, Oracle is, I'm in January Oracles and have been. ARM is a name you want to be in. The below the radar screen here is healthcare in AI. Nancy Pelosi came out, bought Tempest AI, TEM. That's another option I've been in for a while. What does Nancy know? Be interesting to find out. And the only thing that they talked about in that press conference yesterday was healthcare and AI. That is going to be the future. So you want to be looking at those healthcare names. Tempest is the big one. Schrodinger is another one. RXRX. There's going to be more and more and more advances there. That is an area you want to be looking at.
Matt, thanks so much for taking the time here with us today. Really appreciate it and breaking down these calls.
All right, thanks.
Certainly. Coming up, we're bringing you a conversation with Ralph Lauren, CEO from Davos. We've got more wealth when we return.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Lots of big name retail CEOs here on the ground at the World Economic Forum in Davos, Switzerland. One of those big names, Ralph Lauren CEO Patrice Louvet. Patrice, good to see you. We've now talked around the world. I cut a promo ahead of this interview, and I teased that Ralph Lauren is a company exposed to tariff risk. It's a company maybe that does a lot of business in China. I'm not sure I got it 100% correct. Help us understand your international sourcing. How exposed are you to China, Europe, et cetera?
So we've diversified our sourcing pretty dramatically over the past 7-8 years. We used to be very dependent on China. China was more than 50% of our sourcing. Today it's low single digit, mid single digit. What we've come to realize, and this is true for sourcing, but it's true for our overall approach as a company, is diversification is critical, right? So diversifying our supply chain. So obviously we're paying the attention to tariffs. As you can imagine, we didn't start to think about it yesterday. We've been planning for this for a while, but I think we're nicely set up to navigate this more volatile environment because of the diversification of sourcing that we have, whether that's markets in Asia. We have a lot of near sourcing both here for North America or here in Europe. And for us, this ability to flex and to stay agile and nimble, I think has served us pretty well and is going to continue to be a priority.
Can you get 0% from China? I mean, can you fully move out of China?
China has some unique expertise in certain categories for us. Some of our more sophisticated sweaters are made in China. Some of our more sophisticated footwear is made in China. I think under duress, we could always find alternatives. And as you can imagine, we're running all types of scenarios to be prepared. But again, what's important for us is multiplicity of sourcing options. I don't want to be dependent on just one market or one supplier, and agility and the flexibility, which honestly was honed during COVID, right? And then the flexibility that was required during that time.
Is a 25% tariff on China, is that a duress moment?
Well, it's a pressure point, but again, I think we can work through it and we can manage it. I think we've lived with tariffs already. It's not a new concept, and we've been able to navigate that.
Does it mean higher prices for U.S. shoppers?
It likely translates into higher pricing for consumers at the end. Yeah.
I was speaking to a board member of a large electronics company here on the ground, and they said every board meeting now is involved with tariffs. Most of their meetings are fully thinking about how do they reposition supply chains. I mean, are you thinking about other things at the board level besides tariffs?
Brian, we are not obsessed with tariffs.
Okay.
We are obsessed with our consumer. We're obsessed with making sure we're giving him and her an incredible experience around the world. We're obsessed with bringing new consumers into the Ralph Lauren world. We're excited about the Australian Open partnership we have going on there right now and many other things for this coming year. Tariffs is part of running the business. And listen, there's regulation is another element. There are a number of elements we need to take into account to successfully manage the business. This company's been around for 57 years. We've seen many administrations in the U.S., around the world. We've seen many different policies around the world. I think if we can stay really focused on the consumer, making sure we're staying true to who we are and what we represent, we will be able to navigate.
Is the U.S. consumer, are they in a better place?
I think, we'll report our holiday results in a couple of weeks. I think that our consumer is pretty resilient. And that's true in the U.S. and that's true in most of the key markets. So I'm hopeful that with this new administration, we'll see a greater degree of optimism from consumers. I mean, they've had a tough time since COVID, right? And I think the mood's been pretty gloomy since COVID. So hopefully there's more optimism, but also ultimately translates to more engagement in brands and categories like ours.
I've been amazed, and I think we talked about this before, I've been amazed by the store closures by department stores. I mean, Macy's, a lot of legacy locations. How is this shaping the future of a company like yours?
So for us, the filter is very clear. We want the brand to show up in a place where we can tell our story authentically, and that's profitable. And it's pretty clear, and you and I have talked this in prior months, that we were over-distributed, and we are in locations where we could not showcase the brand in the right way or that were not financially viable. As you know, as we've talked, we've reduced our footprint in North America by about 2/3 of department store doors, which I think was required. It's enabled the continued elevation of our brand, so I feel very good about that move. And I think, some of the statements that you've seen from Tony Spring at Macy's saying he's going to shut down 150 doors, I think is right. I think if you cannot provide the consumer with an amazing experience and great service, then you should close.
What does the tie-up on the other end? You had a merger of Saks and Neiman Marcus. What is that? I mean, these are two iconic luxury department stores. How does that change the complexion of your business?
So those are separately two great partners with whom we've been doing business for many, many years, and we love the relationship that we have with them. I think this will strengthen both entities, so 1 + 1 = 3. And this in strong partners is beneficial to companies like ours. So I'm excited about the move. I'm excited that Mark will be leading that transformation, and I think both companies have things to learn from each other. I look forward to a lot of the Saks digital capabilities translating into Neiman's, and there are other things that will go the other way. But I think that's a positive move for the industry.
Ralph Lauren CEO Patrice Louvet, good to see you. We've now talked around the world.
Fantastic.
Yeah.
Looking forward to being in Asia with you.
Yeah, come on about all that, but maybe back in New York City. Patrice, good to see you.
Thank you, Brian.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Student loan borrowers who signed up for President Biden's SAVE plan are currently in forbearance, meaning their loan provider can't collect payments, but the Education Department is also blocked from forgiving debt. That's just one of multiple changes expected as we head into and are beginning a new presidency. Joining us now with some advice for borrowers, we've got Scott Buchanan, Student Loan Servicing Alliance Executive Director. Scott, thanks for joining us here. What changes might we see, and are we already beginning to see under Trump?
Yeah, so I don't think we've seen a whole lot of sort of specific announcements yet, but I think what's likely to occur is probably a return to repayment options that existed prior to the previous administration. including during the Obama administration as well as the previous Trump administration. So some of those things include repayment plans that are more flexible than they were 10 years ago, but certainly probably not at the level that the Biden administration had been promoting.
So what other programs should borrowers know about?
Sure, today, while the SAVE plan has been enjoined by the courts, and so folks are sort of stuck in a limbo as it relates to that, there are other income-driven repayment plans that exist today, like income-based repayment, income contingent repayment. All of those things are available, including PAY, which is in a previous Obama administration repayment plan. So if borrowers are really close to loan forgiveness under like public service loan forgiveness or other things, they can explore those repayment plans and move from SAVE into those, especially, like I said, if you're really close to loan forgiveness through another sort of federal program under the law.
What are your tips for borrowers who may be signed up for the SAVE plan and aren't sure what to do?
Yeah, I mean, and listen, it is a challenging environment right now. It's unclear sort of will SAVE survive? Will the new administration continue that plan? Will they rescind that plan? I think really what I always advise is you have to make decisions, especially personal financial decisions, based upon what's in the law today, what's available today. So don't, pin your hopes on what might or might not occur in the future, but explore the options that exist today. And there are plenty of them. To help people who are struggling or having difficulty making payment, and they just pick up the phone and talk to their federal servicer. We'll be able to walk them through what options they do have in front of them today under the law as it exists.
So what are your tips for current students as well?
Yeah, I mean, I think, it's always, whether it's current students or those who are sort of beginning to explore what they're going to be doing next, is making sure that you're looking at choosing a degree in an institution that's going to really offer you financial value. I mean, in many ways, higher education is probably the largest investment that people will make prior to buying a house. And so making sure that when you graduate and when you leave, you've chosen a major that's going to translate into income that's going to make, if you took on student loans, make that debt manageable and make it a wise investment that will pay off in the long term. So be very thoughtful about what degrees and what institutions you're going to.
How are we seeing that perhaps even alter the thought process about universities and programs that students are going into?
I think, sort of the broad discussion that's been going on over the last, whether it's, 5 or 10 years about the cost of higher education, including things like the rise of student loan debt in this country, have been a real indicator for families that it's time to start really thinking about this as a financial transaction, right? And looking at programs that if it's going to cost you $30,000 a year to get a degree that's going to have minimal financial impact on your ability to make money when you graduate, that's probably not a program you need to go into. And colleges and universities, I think, are taking a hard look at this as well to make sure that the programs that they have available are actually going to translate into success for those people rather than just costing a lot of money to get a piece of paper that isn't really worth anything in the market.
Scott, thanks so much for taking the time here with some very valuable tips for students and borrowers out there. Appreciate it.
Thanks.
Let's get a check of the markets here as we've continued to track the major averages over the course of today's trading session. We're taking a look at the major averages fractionally higher across the board. The Dow is up by about 0.2%, the S&P 500 up by about 0.75%, and the NASDAQ, you're seeing that up by about 1.4%. Speaking of the NASDAQ, we've got the NASDAQ 100 heat map here up for you right now. NVIDIA, you're seeing some gains there on the day, up by about 4%. We'll round that off too. Additionally, taking a look at some of the other mega cap tech stocks. As you're taking a look at Amazon, that's also up 2% here during today's activity. I want to focus in on Apple for a hot second here because I was able to take a look at just what the last month has looked like for this name here, and it's actually pulled back by about 13% over that course in time here. A few things, of course, that have been coming to light about the company as well as the consumer demand, especially in a key region for growth in China as well. And so we're going to be continuing to track Apple here with some of the slippage that we've seen there. However, elsewhere, of course, Meta right now, you're seeing that move higher on the day as well. That's up by about 2.6%. And then also just want to get a quick check in on some of the sector activity that we're tracking here for you today. 11 S&P 500 sectors. We've got them pulled up here for you on the screen. Utilities pulling up the caboose. Right now, that's down by about 1.6%. But technology, even as we were taking a look at the NASDAQ 100, you could see a lot of green that was on the screen with a little bit of red peppered in. And technology, XLK, is reflecting that. That's up by about 2.25% right now. Coming up, Americans, they're back on TikTok. But not all services have been restored just yet. We're breaking it down next.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Hey, it's me, Tiffany the Budgetnista, your favorite financial educator. Welcome to Capital Gains World for a few days and everything has changed.
From Wall Street to Main Street to the C-suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
A programming note, new Yahoo Finance podcast alert here. Slate Stone Wealth's chief market strategist, Kenny Polcari, partnering up with Yahoo Finance to bring you some clear, accessible insights on the movements and trends shaping global markets. On today's episode, Kenny speaks with Bullseye American Ingenuity Fund Portfolio Manager Adam Johnson about the differences between investing and trading. Let's listen.
So I am an investor. I'm not a trader. Right. You have to know what you're looking for.
Yeah, 100%.
And I always tell my clients, we focus on time in the markets, not timing the markets.
Right.
And so my approach is if I can project out 2 or 3 years and look at the cash flow and see a pathway to, say, 15 to 25% earnings growth for each of the next several years, and I can put a forward PE, price to earnings multiple, on that future cash flow and arrive at a target that represents a double, maybe a triple over the next several years,
right.
I'll buy it. And I don't worry about these pullbacks.
Right.
You can watch Trader Talk with Kenny Polcari every Wednesday at 12 p.m. on Yahoo Finance or wherever you get your podcasts. It's time for Tech Support, our weekly check-in on all things technology. President Trump signed an executive order extending the deadline for TikTok to find a U.S. buyer by 75 days. He also suggested a billionaire like Elon Musk or Larry Ellison could buy the app.
Are you open to Elon buying TikTok?
I would be if he wanted to buy it, yes.
On your inauguration.
I'd like Larry to buy it too. I have the right to make a deal.
But there's still some uncertainty about what you can and can't do on TikTok in the U.S. right now. So we've got Yahoo Finance's Dan Halley here to help us out a little bit. Let's start with those deals, Dan. What are some of the potential U.S. buyers? Who are they that are on the table right now?
Yeah, well, obviously there's Musk. He is Trump's, I was saying this earlier in the morning, Trump's election bestie is, I think, the way I want to phrase that going forward. Then obviously Larry Ellison. One of the folks that he had mentioned there. But then there's also Mr. Beast, the YouTube personality, wants to get in on the action. We have Frank McCourt, obviously has brought this up before. And then Kevin O'Leary, who's repeatedly said that he wants to purchase TikTok. And so those are really the major players that seem to be in the running. Obviously, Elon Musk already has Twitter/X. So, you know, you have to wonder if that would be okay. That doesn't seem like it wouldn't be, just because they're such different apps with such different audiences. But yeah, I mean, those are really the main folks who are potentially set up to buy this app.
And some of those are, of course, names that are once again reboot names, because some of them had efforts, and thinking of Larry Ellison, to buy TikTok previously during the first Trump administration.
Walmart too, remember
Walmart
that?
Too, I do.
What was going on?
So here's what a lot of users want to know. What can they do with TikTok right now and some of the other ByteDance apps at this juncture?
Yeah, I mean, we were covering the kind of turn on and turn off, or turn off and turn on of TikTok over the weekend, you know, around 10 o'clock. I think Saturday, East Coast time, it had gone off 10:30, and then it had come back on Sunday. And you know, if you tried to load the app, it just basically said it was dead. But now it's back. You can go through TikTok. You can use CapCut. That's what you would use to edit videos. You can post videos. You can do most everything on there. However, if you deleted the app, or you don't have the app already, tough luck. You're not going to be able to download it on Google Play or the Apple App Store. And if you have Marvel Snap, which is an app that's partially owned by ByteDance, which was also cut off when TikTok went down, you can't download that, and you can't make in-app purchases for the app via App Store. So those are some of the things you can't do, and we don't know when you'll be able to do those again, just because when it comes to browsing, you know, that's on Oracle, that's on the cloud providers, but when it comes to downloading, that's on Apple and Google, and you know, they might not have the appetite for risk that Oracle might have when it comes to this kind of endeavor.
Absolutely. This could be very costly if we don't see a buyer as well here.
Oh, yeah.
We're going to be tracking this very closely. We know you will as well. Thanks so much. That's it for Wealth, everyone. I'm Brad Smith. Thank you so much for watching. You can stay tuned for Market Domination with Julie Hyman and Josh Lipton. That comes up at 3 p.m. Eastern Time. They'll count you down to and through the market close.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Trader Talk, where we break down what's cooking on Wall Street so you and your portfolio don't get burned. I'm your host, Kenny Polcari, and being back here at the New York Stock Exchange is very personal for me. I spent 40 years here as an institutional stockbroker, and it changed the course of my life. For me, it's like coming home. On this show, we'll make sense of all of it with expert insight, actionable advice, and my take on everything from the Fed to why chicken cacciatore should be on tonight's menu. Yes, you heard me right, but we'll get to that in a moment. But first, let's get to today's market tips. 1, what happened to the rate cuts? Expect more volatility as earnings roll in. The idea that the job market is so much stronger than what markets had been led to believe is coming back to bite us in the ass. Look, a stronger report can have a range of impacts on stocks, depending on the context. And sometimes good news is bad news for the markets, and that's what we saw as stocks tumbled. Markets are now baking in the odds of only a single rate cut in 2025, with a 60% chance of a second rate cut. Yet, there's still a 25% shot of a rate hike. Translation, we're not out of the woods. Unless the data goes decisively south, there's little reason for the Fed to jump in with more stimulus, though they'll insist they're still restrictive, which clearly I don't think they are at all. All this does is set the stage for a potentially turbulent first quarter as investors, traders, and algos try to parse the latest rate moves, economic surprises, and Fed speak. When earnings kick off next week, expect the C-suite's outlook to drive much of the action. Strong guidance will likely steady the ship, while any whiff of weakness could push stocks into a fresh downdraft. 2, embrace the cycles without getting whipsawed. Markets move in waves. They always have and they always will. We'll see it in quantum computing stocks, in energy, in tech, you name it. The key is not to panic when a new cycle rears its head. That doesn't mean you ignore the red flags and rising bond yields and shifting Fed policy or even Jensen Huang's latest sermon. But you manage the risk methodically. instead of hitting the eject button every time there's a headline. Being a long-term investor is far different than being a trader. So you have to ask yourself, who am I? Am I an investor or a trader? Because how you answer that and react will dictate who you are. When prices swoon, ask yourself, is this short-term noise or a fundamental shift? Knowing the difference helps keep you on the right side of the trade and keeps you sane. And 3, revisit defensive plays even when it feels too late. The sudden beatdown in growth names is a reminder that defensive sectors, so you think healthcare, consumer staples, and utilities, shouldn't be relegated to the back burner, even if they've already moved a bit. When bond yields spike and fears creep up, these sectors often hang in there better than a frothy tech stock. Sure, the sexiness factor is lower, but when you're staring down the daily headlines that feel straight out of a 1967 Batman fight scene, a little defense can keep you from getting knocked out. This bull market is due for some turbulence. It really felt like a classic 1960s Batman brawl, right? Who remembers that? Kaboom, pow, wham. Only this time, the hits were delivered by rising bond yields and big corporate debt sales. Spiking wages suggest inflation may be revving up, which puts stocks under major pressure. Throw in record high yields for the 10-year, topping levels not seen since 2007, and it's enough to make any investor's head spin. The latest JOLTS report and the NFP report only added fresh fuel to the fire, signaling that the labor market is just fine and that businesses might have to dig a little bit deeper in their wallets to lure the right talent. Higher wages, of course, translate into higher costs, and they can sneak their way into everything from corporate earnings to consumer prices. No wonder the Fed is eyeing the situation carefully, and the market responded with an 11% jump in the VIX, the fear indexes, and then lower stock prices. Big tech, often dubbed the Mag 7, took a beating, dragging the market capitalization S&P index down 1.1% last week, while the equal-weighted S&P shed just 1/3%, reminding us just how much the mega caps can tilt the entire market when they move. It's really a wake-up call for anyone betting too heavily on one segment. Volatility is the name of the game right now, with a new administration, potential tariffs, and all the geopolitical drama vying for the spotlight. In times like this, you need to keep your guard up, manage your risk, and don't let a few clonks and biffs knock you out of the game. A well-diversified plan still holds the best defense in this market showdown. My next guest knows a thing or two about the Fed. He spent years as a hedge fund manager and then became a Bloomberg anchor and is now the author of the Bullseye Brief and the portfolio manager of the Bullseye American Ingenuity Fund. I am very excited about my next guest, Adam Johnson. Adam, thank you for joining us today.
You bet, Kenny.
Talk to me. There's been so much happening.
Oh, I
so
know.
let's just talk broadly first. Talk about, the recent NFP report, what you think of it, because I know I have my own sense of it, and then what you think that really means for investors and the Fed and rates.
Yeah, sure. Well, first of all, let me tell you, there is much more to like than to fear.
Okay.
And we have seen some chop in the markets really since the middle of December, when we found out that maybe inflation wasn't going down quite the way we thought, but possibly even ticking up.
Right.
That has definitely upset the apple basket. And yet, think about this, Kenny. We have one of the strongest economies we've seen in a long time. The most number of people ever are gainfully employed and spending money. Right. That's driving earnings growth. We have a GDP that is somewhere around 3%. We have an incoming administration that's business friendly. In theory, that means fewer regulations, lower taxes. That's all very good. So the only thing that we don't really know if we have is inflation kind of going back down,
right,
and the Fed possibly cutting rates more.
Okay, so here's the question. Do you think inflation's on its way back down, or do you think, in fact, it's going to rear its ugly head? Because I'm in the position that I think it's going to rear its ugly head, and I think we're going to find that out.
Define ugly head.
Well, I think it's going to start to rise again, and I don't think it's going to stick at 3%. I think if we see inflation go back to 4 or 5%, that's probably where I think it's going, which is not it's not like it was 9%,
right,
but it's certainly not the 2% that the Fed wants.
Sure. All right, so I agree that would be an ugly head.
Yes.
But so far, what we have seen is inflation tick up maybe 1 or 2 tenths higher each month for 3 months in a row. So instead of what we saw back in October, where inflation was 2.2% on average, if you average CPI, PPI, PCE, and GDP price index, those four, average them together, it went as low as 2.2%. The Fed's target is 2, so that's pretty darn good.
Yeah.
And now it's about 2.6. If you are only buying stocks because you think the Fed is going to cut rates and or inflation is going down, you're missing the point. You should be buying stocks because of earnings growth. And I think what we're going to see over the next 2 weeks as the fourth quarter earnings season begins is 10 to 12% growth. That's the highest in several years.
Great. If that happens, I think that's great. Right?
And that's a reason to own stocks and to be buying this dip, which is what I'm doing.
Right. And, it's interesting because, we talk about as a wealth manager, I'm in the wealth manager space now, right? So it's a very different conversation that you're having with your clients because they're not institutions, right? Well, remember when I was here as a broker, all my clients were big institutions. They were big asset managers, so they get it. But now the individual investor, it's a different conversation you're having with them, right? And so who's nervous, who doesn't feel right, who's afraid that, that the market's going to crash? Well, I don't think the market's going to crash.
No.
To your point, though, a healthy pullback would actually be welcome. I mean, for a lot of asset managers,
happening.
I think it's happening.
We're in it. We're in one.
I think it's healthy.
And to be clear for our viewers who don't understand gaps, you and I say, we filled the gap. Of course. All right. Say no more. I understand. Right. But if the stock market or any particular stock gaps up, it opens above the previous day's close and then trades higher, inevitably they want to go back and fill that gap.
Right.
And that's your point. We finally filled the gap. From when was it?
From November 5th and 6th,
which is
the election to the next day.
We filled the gap.
Right. So it closed on Tuesday night. It closed at the SP 5783.
Right.
But it then opened at 5864. So that gap is what we're talking about.
And we filled it, which is healthy. People, as you know, I'm long NVIDIA, right? I run the American Ingenuity Fund.
Who isn't long?
Well, but I own a fair amount of it. And as a growth investor, I own a lot of these companies that are growing quickly. That's the kind of company I like to own.
Right. That's what you do.
Yeah. In 2024, NVIDIA pulled back at least 25% on 3 separate occasions. Right. People each time said, is this it? Is it all over for NVIDIA? I said, no, it's not. They're going to continue to grow. They're going to continue to beat estimates. They are in the sweet spot. And these are all gifts. If you look at the broader market, either the S&P 500 or you can look at the NASDAQ, each of those indices pulled back 4 times last year by anywhere from 7 to 11%. The current pullback is somewhere in the midst of that, 7-8%.
The S&P, I think, is down 6.5%, which is, to your point, still within what's considered the normal trading
This is just part of markets.
Part of markets.
Yeah.
And that's what people, and that's a conversation that I have with investors is, look, the S&P, let's talk about that because that's the broad market index, is off about 6% off its high. Still well within. We could go down another 4% and still be within, 9.9%, we're still within normal. At 10%, then you say, okay, now we've entered a correction phase. Which actually still...
Which again happens.
It happens, and it's not necessarily the worst thing in the world. It shakes the branch a little bit. Maybe it gets some of the fluff out because maybe there is too much fluff.
That's right.
And maybe prices have to adjust based on now what the new narrative is.
Right. So I am an investor. I'm not a trader. You have to know what you're looking for.
That 100%.
And I always tell my clients, we focus on time in the markets, not timing the markets. And so my approach is if I can project out 2 or 3 years and look at the cash flow and see a pathway to, say, 15 to 25% earnings growth for each of the next several years, and I can put a forward PE, price to earnings multiple, on that future cash flow and arrive at a target that represents a double, maybe a triple over the next several years, I'll buy it. And I don't worry about these pullbacks.
Actually, and actually, when it pulls back, it gives you another opportunity to add to the name, as long as the thesis hasn't changed. The story, the reason you originally bought it, as long as that hasn't changed, then individuals, long-term investors really need to use that, which is why I was telling some clients today, look, now you need to be making sure that you have your shopping list, right? And that you have to pick names that you like.
Better believe it.
Whose stocks are on sale for no other reason than there's nervousness in the market. Not because the thesis changed, not because the story changed, but because it's part of the cycle, right? And you have to use that as an opportunity.
You want a couple picks or to pull back?
Yeah. Go ahead. Hit me with a couple of
Monolithic Power, MPWR, right? This is a company that helps regulate the power flow into all those arrays, those stacks of NVIDIA chips.
Right.
It has pulled back because some of the guidance was considered soft,
Right.
and yet the company reiterated full year guidance. Don't focus on the quarter, focus on the full year. There's one that has pulled back 30%. AeroVironment, the largest supplier of hand-launched drones to the U.S. military,
Right.
Has pulled back 30% because there were fewer sales to Ukraine because fewer allies gave Ukraine money. That's a one-quarter event. That's pulled back 30%. And given the incoming administration's focus on surveillance at the border, this is the company I think that's going to sell, right? So their names, I could give you, any number of names, but you have to always be willing to step in on these 20 to 30% pullbacks, like the 3 times NVIDIA pullback last year.
And that's exactly the point, right? The stock is on sale. It's down 30%. And so therefore it's an opportunity, as long as it's a name that you like and you've done your homework on and the story hasn't changed. It's nothing but an opportunity for the long-term investor. So I agree with you 100%. Look, I want to ask you another question because it's interesting. Somebody asked me this. The other day, the NFP report came out and it was good news.
Yeah. Right.
But yet good news.
In other words, stronger than expected job growth.
That's right. But in this case, good news was bad news.
So perverse.
Yeah, right. But on the same day, Delta Airlines came out with their earnings, right, last Friday.
Yeah.
They blew it out of the water.
Blew it out.
Where good news in that case was, in fact, good news because investors took Delta Airlines up 9%, yet they sold the market off 2.5% on the good news by the NFP report.
What they did with Delta, they should be doing with the S&P 500.
So
good news is good news. But we're in this perverse, this psychology where, oh my gosh, good news means there might be inflation. That means the Fed might not cut interest rates. That means we should sell stocks. No, no. You buy stocks because of earnings growth. And if you're buying stocks because you think the Fed's going to cut rates, you're buying for the wrong reason.
Well, agreed. But you also have to understand, if the economy changes and inflation once again spins out of control, then you just have to be more cautious in how you buy stocks or the stocks you buy and when you buy it, right? Just because you should understand what the economy is doing around you before you just haphazardly go in and start buying stocks.
But I think it's also important that our viewers recognize a lot of the chop in the markets, up, down, sell them, when there's good news, right? A lot of that is not coming from guys like you and me, running our models and debating and, what do you think, Kenneth? No, these are computers that have been pre-programmed to take certain data points,
and that's exactly what they do.
And then they instantly sell bonds, they instantly sell stocks.
Right. So the minute we hit, and I made a comment like this in my note this morning, right? Like the VIX, which is the fear index, right? So when the VIX passes 22, which is the high we saw in September, October, and again in November, if it pushes up and through 22, that's going to ignite a whole message sent out to the algorithms that we now pierce this, what was resistance. The VIX will probably shoot a little bit higher, and then the sell algos will just hit their button and they'll just sell stocks just because that's what they're programmed to do.
I hate to say this, but what do you bet the 10-year goes to 5% at some point? Because the boys just want to take it there.
Now it's about momentum. That's exactly right. And I think the 10-year is going to go to 5%. I'm not necessarily...
Which will not be great for stocks.
No, won't be great for stocks. Listen, if the economy remains robust and inflation is under control, 5% wouldn't necessarily be a stock killer.
Right.
But if they go to 5% and the economy starts to struggle and inflation starts to really lift its head, yes, then it's an issue.
Yeah, and it's all about baseline. And by that, I mean, think about it. Mortgages were like 2.5% to 3%. And, mortgages haven't been 7% in 15 years?
Yeah.
Maybe longer than that, 17, 18. I mean, I remember when my first mortgage was 7.5, it went down to 5 7/8. I refinanced and I thought I was the king. 5 7/8, boy, I really scraped bottom.
Me. My first mortgage was 15.5%.
Wow, shocking.
15.5%.
Shocking.
Now, the price of the house was only $246 or $249, but it was still 15.5%, right?
Yeah.
And then as rates came down, then I refinanced lower. Right?
Yeah, we got accustomed to low rates,
right,
to cheap, easy money,
way
to government largesse.
Right.
Oh, we need another stimulus program. No, we don't.
Right.
That's how we got to inflation.
Right.
So, again, I'm a guy who believes that I'm an investor. I'm a person who believes that smaller government is better government, and I would like to see the government spend less. I think that would be healthy for everybody.
Adam, just hold on 1 minute because we're going to toss to a break and we'll be right back. Okay, so we're back. So, Adam, we were talking about yields and the 10-year going to 5%. And what's that mean for the market? And, we both agree it's not necessarily the best thing for the market. Yet, if the economy remains robust and they can control inflation, it actually won't be a disaster.
Correct. And again, that gets to my central thesis right now, that there is more to like than to fear.
Right.
In fact, I would even argue that MAGA matters more than the Fed, right? This focus on efficiency in government, on reducing the waste, on lowering taxes, on making it easier for businesses to do what they do, which is to innovate. I think all of that's important, and it's happening against the backdrop of what is already a very positive market. 10 to 12% earnings growth, steady 3% GDP growth, employment that is almost as strong as we've seen ever because we have the highest gross adjusted income. It's only the inflation component and the Fed's response. Do they cut more or do they say? That's the only thing that we're having to wrestle with.
Actually, unemployment ticked lower in the last NFP report,
Thank you.
right? Which was unexpected.
Yeah.
They expected 4.2, came in at 4.1.
That's right.
But it still ticked lower, right?
And again, speaks to the thesis, there is more to like than to fear.
Right. And so I think, what's really interesting is I think it's also just a matter of, I think as investors, as this happens more, I think investors become used to this idea that pullbacks like this can happen and it's not the end of the world. And as long as the total thesis hasn't changed, then buying stocks on sale is a huge opportunity for the long-term investor.
Yes.
Listen, if you're a day trader, you're going to trade no matter what
Correct.
it is, right? You're going to trade the noise because that's what you do.
And I know because I used to be one of them.
Right.
I am reformed, Kenny.
Right. But that's what you do. As a long-term investor, you want to be here and you want to take advantage. You don't want to be scared away, and you want to take advantage of stocks that go on sale.
Well, the other thing about being a long-term investor is you don't have to reinvent the wheel every day.
That's right.
You don't have to come in and say, how am I going to make money today?
Right.
I'm not worried about making money today, maybe not even this week or this month. If I just continually review my companies, make sure, as you pointed out, nothing's changed.
Right.
I'm comfortable owning them through the chop.
Yeah, I think it's great. Adam, thank you very much. I appreciated this conversation. I always appreciate having you on, and I appreciate your friendship.
Oh, thank you.
Before we go, I want to recap today's tips. 1, don't let the rate cut odds blind you. Expect more volatility as earnings roll in. Markets still anticipate at least one 2025 rate cut with a decent chance of a second. And yet, acknowledge that there's a 25% possibility of a rate hike. In other words, we're not out of the woods. If economic data doesn't weaken meaningfully, the Fed can't jump in with added stimulus. And that would make no sense if they did, despite the idea that they keep telling us that the current stance is restrictive. It really reminds me of the transitory narrative. All this sets the stage for a choppy first quarter as everyone digests various rate predictions, economic releases, and Fed chatter. Once earnings season kicks off, corporate guidance takes the spotlight. Strong forecasts may calm the waters, while any hint of trouble can spark further sell-offs. 2, embrace the cycles without getting whipsawed. Markets move in waves. Diversification remains the name of the game. Do not ignore it. Genuine danger signs like spiking heights, spiking inflation, or abrupt policy shifts. But also, don't panic every time there's a downturn. Ask yourself, is this a routine pullback or a deeper shift in the market direction? Keeping that perspective helps you preserve both your portfolio and your peace of mind. And 3, revisit defensive plays, even when it feels too late. The recent pressure on growth names underscores why sectors like healthcare, staples, and utilities shouldn't be sidelined. They're not sexy by any stretch, but when fear rises and rates goes up, these areas often provide stability and ballast for your portfolio. Consider the strategic short-term contra plays like the DOG, the PSQ, SH, and SPSX, which is a triple leverage short play and is not for everyone, as well as the VIXI to help mute the downturn. Linguine arrabbiata. So in keeping with the theme today, how about an arrabbiata sauce? This is a southern Italian tomato sauce that gets its kick from the crushed red pepper. In fact, arrabbiata means angry. You can use this sauce over pasta or even meats. Today, we're going to eat it over linguine. Now, for this, you're going to need olive oil, onions, garlic, red wine, sugar, crushed red pepper, or chili peppers if you really want it hot, hot, hot. lemon juice, oregano, salt and pepper, crushed tomatoes, a tablespoon of tomato paste, and chopped parsley. Now you want to bring a pot of salted water to a rolling boil on the back burner so it's there when you need it. In a large, deep saute pan on medium-high, you're going to heat up the olive oil and the garlic. Saute it just a bit, don't burn it, for about 3 minutes or so. Then you're going to add in the sliced onion, saute that until it's soft, 5 or 8 minutes. Next, you're going to add in a half a cup of red wine, a half a tablespoon of sugar, fresh squeezed lemon juice, about a tablespoon, some oregano, a bit of tomato paste, and a 28-ounce can of kitchen-ready crushed tomatoes. Not the puree, just crushed tomatoes. And then you're going to add in the crushed red pepper or the chili pepper if that's what you prefer. Bring it all to a boil and then let it reduce to simmer and cook for 15 or 20 minutes. Now you're ready to add the linguine to the boiling water and cook that for about 8 minutes or just until it's al dente. Strain it, reserving a mug full of the pasta water, which we refer to as the tears of the gods. Return the pasta to the pot, add in back about a quarter cup of the pasta water to re-moisten it. Stir it, and now take the pasta and add it directly to the saute pan with the sauce. Toss it well, add a handful or two of grated Parmesan cheese, and serve it immediately in warm bowls. Enjoy this with a nice bottle of Brunello di Montalcino, and always have extra cheese on the table for your guests. Buon appetito.
News when you want it with Bloomberg News Now. I'm Amy Morris. Ukraine President Volodymyr Zelensky says any effective peacekeeping force deployed in Ukraine will need to include U.S. troops, as he appealed to Donald Trump ahead of talks with Russia. Zelensky said any boots on the ground would be working and fighting alongside Ukrainian troops and not centered in the capital.
The troops will not be in the center of the capital. Yes. I heard that some allies said that, yes, but it's okay, we can be in the center of some city. No, we don't need such contingents with our people, of course. Yes, because this means security.
In an interview with Bloomberg News editor-in-chief John Micklethwait, Zelensky said his European allies just don't have enough soldiers to pose a realistic deterrent to President Vladimir Putin of Russia, and any other solution would risk opening up divisions within the NATO alliance. President Trump, meanwhile, posted an ultimatum on Truth Social, saying that Vladimir Putin will face more sanctions and tariffs if he doesn't end the war in Ukraine. Bloomberg's Josh Wingrove says the impact of these actions would be limited.
We get very few imports from Russia. In other words, tariffs from the U.S. wouldn't have a lot of effect. The previous administration had been trying to find, let's call them creative ways to curtail Russia's economy by putting restrictions on things like oil sales. It's not clear if Trump is going to be the sort of bark up that tree and still go after it.
Trump posted, quote, "We can do this the easy way or the hard way." Also at Davos, J.P. Morgan Chase CEO May be in the works to ensure TikTok remains available in the U.S. General Atlantic CEO William Ford tells Axios that negotiations could begin as soon as the end of this week. Ford serves on ByteDance's board. Ford says the U.S. government, the Chinese government, and the company, plus the board, all need to be part of that conversation. The Justice Department is directing its federal prosecutors to investigate any state or local officials who might stand in the way of beefed-up enforcement of immigration laws under the Trump administration. A memo sent to the workforce, obtained by the Associated Press, says the department will return to the principle of charging defendants with the most serious crime it can prove. That is a staple position of Republican-led departments meant to remove a prosecutor's discretion to charge a lower-level offense. We turn now to the Middle East. The ceasefire agreement between Israel and Hezbollah in Lebanon is likely to be extended beyond its January 27th deadline. Despite accusations of breaches, both sides are not likely to resume full-scale fighting, and negotiations are underway to extend the truce. That's news when you want it with Bloomberg News Now. I'm Amy Morrison. This is Bloomberg.
Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a smarter investor and a better leader. And I want to lean into both of those things today. Normally, the millions of people that watch Opening Bid and listen to us on the podcast platforms, they know we tape this thing from the NASDAQ. So, I mean, it feels right. We're in Davos, World Economic Forum, to bring in NASDAQ Chair and CEO Adena Friedman. Good to see you.
It's great to be here, Ryan. Thank you.
Thanks for letting us in the building back in New York City.
Oh, we love having you and Marcus site. But of course, now we get this incredible scenery behind us, too. It's pretty good.
Yeah, we get some snow. Look, there's no shortage of things to talk about in the news cycle. We have the inauguration going on. We have a change, of course, in the White House. Take us through how you're thinking about how this change in the White House will impact IPOs, markets, and the future of technology.
Well, coming out of 2024, we were already feeling a better sense from investors that they were ready to put risk capital to work again and to underwrite more IPOs. So the IPO environment was getting better as we went through 2024. But as you know, it's been 2 years of a pretty challenging, or 3 years of a pretty challenging environment. So now with the new administration coming in, there's definitely a more, I would say, more certainty that there could be a really interesting and an exciting IPO environment for this year. We would expect, though, that it still will be kind of back half weighted as companies are getting ready. They're putting their dates on the calendar. They're actually, you just feel the energy coming through. They're doing their non-deal roadshows to understand where investors are coming from. I think that as the administration kind of sets in, it'll give people confidence to come out to the market. So we're excited about what could happen this year in that regard.
What has made it so difficult the past 3 years? We hear regulation, but what specifically has made it tough for companies to come to market?
Well, I think there are a few things. First, I would actually point to the cost of capital, meaning the interest rate environment. You know, to have rates go from 0 to 5% in such a short period of time, that just fundamentally changes an investment thesis. You know, investors have to predict the future. And then suddenly they're predicting a future that has a cost of capital that's vastly different than the future they thought there was going to be. And so that makes them pull back. That makes them say, let me take a risk-off environment, risk-off approach. Let me really look at this, re-underwrite my investments, rethink about, does this company have the fortitude to be able to operate successfully in a different cost of capital environment? The companies that are coming out now have been operating that environment now for going on this is the third year. So you know that these companies are going to be persistent. They're going to be able to answer this question successfully. And now also investors are likely to say, look, the interest rates may not go down as fast as I want, but they're not likely to go up. So they can also, again, predict the future with more certainty. So I personally think monetary policy has been a huge driver.
That's held it back.
And then I think regulation is another thing that just keeps companies from wanting to tap the public markets because they know that being a public company is a very different existence. Our hope is that in the new administration, they're going to focus on the challenges and what I'll call
As per a survey, more than half of Indians do not know how to manage their finances effectively. Only 27% are financially literate. This means we may know how to make money, but most of us do not know how to manage it. So, if you wish to live a stress-free life, you need to take charge and manage your personal finances well. But what does personal finance mean? It's all about building your relationship with money and how you can smartly manage it. Every individual's needs and wants are unique, and hence, one plan will not fit all. That's why it's called personal finance. The approach to planning personal finance, however, stays the same for everyone. You can start by setting up clear goals, tracking your income and expenses, preparing a budget, building an emergency fund, and investing based on your goals. A personal finance plan can provide financial security, help you achieve your financial goals, prepare you for emergencies, allow you to have your desired lifestyle, aid in enabling a comfortable retirement. Most importantly, brings you peace of mind. Remember, personal finance planning is equally important for the people of every gender, age, and demography. Start planning your personal finance today to pave the way for stress-free life for you and your family.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
What's your sense? We're 3 days now into Trump administration. Is this administration as business friendly as many are led to believe?
Yes.
Really?
Yes.
How so? I mean, is it just cutting taxes and regulations and we're off to the races?
Well, I think if you think about the things that are really have been difficult, first of all, you got to do taxes this year because there's a lot of expiring, and if we don't do them, there's trillions of dollars in tax increases for the American citizens. So we got to get that done. And with Republican Congress, Republican White House, it's still going to be complicated, but it'll be easier than it would have been. So that's first. And we know where Trump stands on corporate tax rate and corporate competitiveness. And everything that we believe in is around pro-growth, which we think is good for the country, and Trump generally believes in the same thing. So regulation, you mentioned, financial services industry in particular, permitting, things of that nature. We think M&A will be much simpler now. I think we've heard a lot of the banks CEOs talking about how the activity is beginning to pick up. And then, we have the issue of tariffs that we have to just wait and see how they play out.
You're also head of the Business Roundtable. Is that one of your main topics when you talk to CEOs and then you go, I guess, talk to members of the administration? Is taxes top of mind for you this year
Yes.
to get that corporate tax rate? I mean, what is it now? Isn't it somewhat favorable?
Oh, yes, 21. It's good.
That's pretty good.
And we worked hard in 17 for that. But, conditions are a little different now. This year, you've got the deficit, you've got interest rates, and so there are a lot more variables at play that are going to come into discussing what the actual tax package looks like. Our hope and desire is obviously to keep the rate where it is.
Can it go lower than 21%?
We would love to see it go lower than 21%, but we're also pragmatic about the broader situation that's going on with the tax package.
In the modern cloud, more tools and more data means more security risks. But
What's your sense? We're 3 days now into Trump administration. Is this administration as business friendly as many are led to believe?
Yes.
Really?
Yes.
How so? I mean, is it just cutting taxes and regulations and we're off to the races?
Well, I think if you think about the things that are really have been difficult, first of all, you got to do taxes this year because there's a lot of expiring, and if we don't do them, there's trillions of dollars in tax increases for the American citizens. So we got to get that done. And with Republican Congress, Republican White House, it's still going to be complicated, but it'll be easier than it would have been. So that's first. And we know where Trump stands on corporate tax rate and corporate competitiveness. And you know, everything that we believe in is around pro-growth, which we think is good for the country, and Trump generally believes in the same thing. So regulation, you mentioned, financial services industry in particular, permitting, things of that nature. We think M&A will be much simpler now. I think we've heard a lot of the banks CEOs talking about how the activity is beginning to pick up. And then, you know, we have the issue of tariffs that we have to just wait and see how they play out.
You're also head of the Business Roundtable. Is that one of your main topics when you talk to CEOs and then you go, I guess, talk to members of the administration? Is taxes top of mind for you this year
Yes.
to get that corporate tax rate? I mean, what is it now? Is it somewhat favorable or?
Oh yes,
or not?
21. It's good.
That's pretty good.
And we worked hard in 17 for that. But you know, conditions are a little different now. This year, you've got the deficit, you've got interest rates, and so there are a lot more variables at play that are going to come into discussing what the actual tax package.
As per a survey, more than half of Indians do not know how to manage their finances effectively. Only 27% are financially literate. This means we may know how to make money, but most of us do not know how to manage it. So, if you wish to live a stress-free life, you need to take charge and manage your personal finances well. But what does personal finance mean? It's all about building your relationship with money and how you can smartly manage it. Every individual's needs and wants are unique, and hence, one plan will not fit all. That's why it's called personal finance. The approach to planning personal finance, however, stays the same for everyone. You can start by setting up clear goals, tracking your income and expenses, preparing a budget, building an emergency fund, and investing based on your goals. A personal finance plan can provide financial security, help you achieve your financial goals, prepare you for emergencies, allow you to have your desired lifestyle, aid in enabling a comfortable retirement, most importantly, brings you peace of mind. Remember, personal finance planning is equally important for the people of every gender, age, and demography. Start planning your personal finance today to pave the way for stress-free life for you and your family.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
I cut a promo ahead of this interview, and I teased that Ralph Lauren is a company exposed to tariff risk. It's a company maybe that does a lot of business in China. I'm not sure I got it 100% correct. Help us understand your international sourcing. You know, how exposed are you to China, Europe, etc.?
So we've diversified our sourcing pretty dramatically over the past 7-8 years. We used to be very dependent on China. China was more than 50% of our sourcing. Today it's low single digit, mid single digit. What we've come to realize, and this is true for sourcing, but it's true for our overall approach as a company, is diversification is critical, right? So diversifying our supply chain. So obviously we're paying the attention to tariffs. As you can imagine, we didn't start to think about it yesterday. We've been planning for this for a while, but I think we're nicely set up to navigate this more volatile environment because of the diversification of sourcing that we have, whether that's markets in Asia. We have a lot of nearshoring both here for North America or here in Europe. And for us, this ability to flex and to stay agile and nimble, I think has served us pretty well and is going to continue to be a priority.
Can you get 0% from China? I mean, can you fully move out of China?
China has some unique expertise in certain categories for us. Some of our more sophisticated sweaters are made in China. Some of our more sophisticated footwear is made in China. I think under duress, we could always find alternatives. And as you can imagine, we're running all types of scenarios to be prepared. But again, what's important for us is multiplicity of sourcing options. I don't want to be dependent on just one market or one supplier. and agility and the which honestly was honed during COVID, right? And then the flexibility that was required during that time.
Is a 25% tariff on China, is that a duress moment?
Well, it's a pressure point, but again, I think we can work through it and we can manage it. I think we've lived with tariffs already. It's not a new concept, and we've been able to navigate that.
Does it mean higher prices for U.S. shoppers?
It likely translates into higher pricing for consumers at the end. Yeah.
As per a survey, more than half of Indians do not know how to manage their finances effectively. Only 27% are financially literate. This means we may know how to make money, but most of us do not know how to manage it. So, if you wish to live a stress-free life, you need to take charge and manage your personal finances well. But what does personal finance mean? It's all about building your relationship with money and how you can smartly manage it. Every individual's needs and wants are unique, and hence, one plan will not fit all. That's why it's called personal finance. The approach to planning personal finance, however, stays the same for every.
Crypto elites who saw Trump as their savior are already furious with him. That was quick. The reason for their anger is Trump's meme coin launch just before his inauguration. It's been described by top industry figures as fleecing people for billions, a lottery, and dictator-level corruption. Now, of course, they're right. These new cryptocurrencies, Melania has one too, are a naked cash grab for the MAGA cult. They're also very volatile, falling by around 50% in 3 days. And don't forget, Trump coin is named after someone who was convicted of fraud. But I think there could also be deeper worries about the sustainability of the wider crypto rally over the past year. Trump coins are far from the only sign of froth lately. There's the squirrel-themed token Peanut, which hit a market cap of $1 billion last year, and even Hawk Tuah Girl has a coin. Bitcoin is also at a record high on hopes Trump will further boost crypto. I could go on. Trump's meme coin play is important because it has the power to make the whole market look overvalued. It could be a replay of 2017 when cash poured into risky initial coin offerings, or 2022, when the NFT boom turned to bust. Bitcoin may aspire to be digital gold, but it tanked 65% that year as well. That could easily happen again. More risk and volatility are pouring into the system, with risks to the US dollar credibility if it gets out of control. We're not there yet, but bad money can drive away the good. So whatever your view of cryptocurrencies, it feels like this meme coin moment will not end well.
risk manually searching for answers in a siloed sea of disconnected data. But unified observability and security from Dynatrace puts precise answers and powerful automation at your fingertips to ensure your software works perfectly.
Yahoo Finance on the ground at the World Economic Forum in Davos, Switzerland, and one of the persons we always talk to at Davos, that is Salesforce co-founder and CEO Mark Benioff. Mark, good to see you. This is not going to be a podcast, so I don't have tons of time with you, unfortunately.
Great.
So let's come out of the block blasting on AI.
Faster the better, actually.
Faster the better. Okay, faster the better. AI, what's the job market impact to AI?
Well, technology is always getting lower cost, easier to use. It's going faster than ever, but technology is always impacting jobs. And so we're going to have changes in jobs. And we talked about this already, like just at Salesforce, for example. We've put Agentforce on top of our customer support platform. We have 9,000 support agents. We get about 36,000 customer support inquiries every single week. If you asked me a month ago, I'd say about 10,000 of those had to go to humans. Now with Agentforce, only 5,000 are going to humans. So I can now rebalance those customer support agents, and I'm going to ask them to move into different jobs inside the company where I have a lot of needs in other areas. So this is an exciting moment.
Is AI beginning to eviscerate departments in companies like HR?
No, I think that's not true. No, I think it's making us more productive. It's giving us the ability to augment, our companies in new ways. I'm wearing this vest from Gucci that I just got because I was in the Florence call center, and we put in our Agentforce platform. It augmented those employees. Their revenue went up 30%. The call center agents knew how to sell products, so they can do things that they could not do before. That's a very exciting part of what's possible now.
Do you think the workforce, the global workforce, will be massively, do they have to be massively retrained to work a lot of this technology coming at them?
I find that I am retraining myself. Like I'm working on my business plan for fiscal year 26 that starts February 1. So I'm actually working on writing the vision statement, the values, the methods, how I'm going to accomplish all the things. I want to make every company an Agentforce company, the obstacles, the measurements, and I'm using AI for the third year in a row to do that. So I'm working with the AI, I'm talking to it, it advises me. I ask it about how what I'm doing compares to my competitors, where my gaps are, how I should fill in, and it's been amazing, but I've had to learn how to do it. And as an example, I'm bringing an executive with me this year, and somebody new who's never worked on with me before, and they were just kind of sitting there with their mouth open, not understanding how I was working with the AI to achieve my goal. So I think that for all of us, whether you're a CEO, a journalist, or a support worker, a sales worker, a marketing worker, no matter what you're doing, you're going to have to reach a doctor, radiologist, you name it. Everybody's going to have to retrain themselves to be productive with AI.
Two questions. One, you've been keeping a running tab on how many Agentforce deals, and you've shared that with me in the past. How many deals have you signed, and what is the...
We're in the thousands.
All right, what is the... thousands now?
We're in the thousands.
That's huge.
We did 200 in...
I just talked to you a couple
in
months ago.
I know. Well, this is going way faster than anything we've ever done, and it's been amazing, and it's very exciting. And look, I'm shocked at how fast it is going, but here at the World Economic Forum, they've used our platform for more than a decade to run all the sessions and contacts and how everybody finds their way through this. But this is now an Agentforce operation here, and it's agents and humans working together in Davos to make a more successful Davos. I just showed you the app.
Yeah,
so
wild
were
app.
You surprised?
Yeah, I was surprised. I was surprised by the speed, Mark, of how fast things come up. And to that end, what is the consumption? Like people that now have agents in their business, what's the consumption? How aggressively they are using this technology day to day?
Well, I think that, a year ago, nobody had anything like this or could even conceptualize doing anything like this. So we are at the beginning of an incredible journey for every company. And every CEO that I meet with, I just talk to them about, hey, what's your path to becoming agent first? How will you build an agent first organization? And I'm trying to model myself and show that I'm doing that.
I'm sure you saw the news, Stargate, AI infrastructure fund by the Trump administration, some
Microsoft, Oracle, all those names are in there. Were you involved in that, and what signal does that send to the tech community?
Well, Larry Ellison, I mean,
mentor, right?
Was a huge mentor of mine. I worked at Oracle for 13 years before I started Salesforce over 25 years ago, and I'm very proud of him. He has a vision for curing cancer. You saw it all play out. He's talking about it now quite openly, using AI to do it. He's taken a lot of the research ideas that have come out of his institutes in Los Angeles and Oxford, and now he is putting it into action, and I hope he's very successful and that all of us will benefit from his ideas.
Do you think that Stargate is a good signal that this will be a tech-friendly administration?
Well, I think it's going to be a much more business-friendly administration, which is not that difficult compared to the last administration, where there was no embracing of business at all. There was no discussion of how to amplify. Probably one of the great assets of the United States is our technology companies and our technology leaders. And at a moment in time where the whole world is becoming augmented by artificial intelligence, the United States has an incredible lead right now. It's very exciting, and I think that the administration should work closely with all of these CEOs so that we're able to be successful globally. And this is very important, that the government is part and parcel with what business is doing.
We're concerned that President Trump, I guess, rolled back the AI guardrails that President Biden tried to put in place.
Well, I think we're still at the beginning of the administration. We don't know where all of this is going yet. So I think, as you know, I practice a beginner's mind, shoshin, the Japanese word for beginner's mind. And right now, at the beginning of this administration, I think it's best if we have a beginner's mind to see where everything is going. I'm very optimistic about what's possible. They have some incredible people working on this.
I remember you telling me, maybe last earnings call, Brian, agents could be used in government. Have you talked to Elon? Say, hey, we got to get these agents in government. They could be major cost savings?
Well, you're right. Agents in government, every government is going to, well, every company is going to benefit by being more agent first. I know that when I'm working with whether it's my state government or with my federal government, I never have somebody to talk to. So if I can talk to an agent, I'll be happy that I can actually get some of these issues finally resolved.
Lastly, of course, the World Economic Forum has always been focused on climate, and you've been a champion in this area. I think back to when you was working on planting 1 million trees.
5 years ago, we launched the Trillion Tree Initiative.
Trillion trees. I can't believe
trees.
It.
Yeah.
This administration is rolling a lot of those things back. I mean, does that set back the world as we refocus on drill, baby, drill, and using more fossil fuels?
Well, I'm optimistic that we can work on things that are important, like the trees, the oceans.
Oceans.
This is really important to me. I think that, again, in the Biden administration, we didn't see them really support work in the fundamental preservation of the ocean. We did see them work on the trees, though. So we saw them continue the work of Trump, where the first Trump administration, carried through, where we've had a lot more commitments to, making our trees healthier and better, and restoring and planting, and I hope that we're going to get something with oceans as well.
Mark Benioff, Salesforce co-founder and CEO. It's always a treat to get some time with you. I appreciate it.
Great to spend time with you, Brian.
Thank you.
Thanks for having me again.
Appreciate it. That's it. We'll be right back on Yahoo Finance.
As per a survey, more than half of Indians do not know how to manage their finances and hence one plan will not fit all. That's why it's called personal finance. The approach to planning personal finance, however, stays the same for everyone. You can start by setting up clear goals, tracking your income and expenses, preparing a budget, building an emergency fund, and investing based on your goals. A personal finance plan can provide financial security, help you achieve your financial goals, prepare you for emergencies, allow you to have your desired lifestyle, aid in enabling a comfortable retirement. Most importantly, brings you peace of mind. Remember, personal finance planning is equally important for the people of every gender, age, and demography. Start planning your personal finance today to pave the way for stress-free life for you and your family.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Our next guest has 3 themes investors should keep in mind for 2025. Broaden your equity horizons, stay invested, focus on income, and lastly, put your cash to work. ETFs are one way to do all of that. Here on set, we've got Marissa Ansel, Goldman Sachs Asset Management Head of ETF Investment Strategy, and she's joining us in studio for this week's ETF report brought to you by Invesco QQQ. Marissa, great to have you. So these 3 investment themes that you point out to us, I want to start on broadening your investments. How do ETFs allow investors to have an avenue for broadening their equity exposure?
Great. Well, first of all, thanks so much for having me on the show. It's great to be here today. As we look at the equity market today, levels of equity market concentration are really at all-time highs. We currently have more than a third, almost 40% of the S&P 500 in just 10 names. And so we are really advising our clients to make sure that they're not overexposed to the largest cap stocks and actually making sure that they're not missing opportunities further down the market cap spectrum. And in particular, we think that small caps are likely to be big beneficiaries as the market starts to broaden. And we expect equity market returns to start to broaden this year as we look forward. And I think, as I look at the market backdrop for small caps as an asset class this year, I think there's a pretty good setup, for a couple of reasons. So one, the economic backdrop is really supportive. And as you guys know, small caps tend to be very domestic focused. Number 2, with interest rates coming down, that's a really nice tailwind for small caps. They tend to be a little bit more sensitive to the cost of capital. And number 3, valuations are still really attractive. So the average small cap stock typically trades at about a 2% discount to large caps. Right now, they're trading at almost a 24% discount to large caps. And then putting that all together, the icing on the cake is that actually, and we were talking about this at the back end of last year as we were coming into 2025, and we said we expected there to be a pickup in M&A and IPO activity. And we've seen exactly that, actually. So in the last 3 weeks, we've had 5 takeouts of small cap stocks, and we very much think that that's going to continue. So I think as an asset class, it looks really good. The setup looks good for small caps. But I would caution, I think you absolutely have to go active in small caps in particular. And the reason for that is, it's a really inefficient part of the market. It's less well researched than the larger cap end of the equity market. So that's great for active managers if you can pick the right stocks. There's a lot of potential to generate alpha. However, almost 30% of small cap companies are actually still loss making. And so it's actually really, really important to make sure you avoid those companies. You definitely don't want to buy the whole benchmark in small cap. And so, in GSC, which is our small cap equity ETF, we do exactly that. It's actively managed by a very, very experienced industry-leading small cap investment team. And we're really active, really nimble, and we really focus on quality stocks.
So it's important to broaden your market exposure, but again, to do your homework, just given some of the risks surrounding that. One of the things that you're also focused on is staying invested and focusing on income, which Maddie just mentioned a moment ago. What's the best way for investors to do that through ETFs?
Yeah, great question. I think, right now, there are always risks on the horizon. There are always uncertainties. We're very focused on managing risk. Our clients are very focused on how to mitigate risk in their clients, in their portfolios. One way that I think a lot of clients are looking at staying invested, but also generating income, is looking for thoughtful investment strategies such as derivative income ETFs, which allow them to have equity market exposure, right? So GPIX as an example, or GPIQ, these are the Goldman Sachs Core Premium Income ETFs. They provide S&P 500 exposure and NASDAQ 100 exposure, respectively. But we also have an actively managed call writing overlay on top. And that's what allows us to actually generate income. And so they generate 8.5% and 10.5% annualized distribution rate, which is huge, particularly in the current environment where rates are falling. And I think what's even more important is that it's not only a very attractive source of income, but it's actually a source of income that is uncorrelated to falling interest rates. And so I think that's a way that investors can, stay invested, maintain that capital appreciation potential, but also, realize a nice healthy income stream.
Final 45 seconds here. Money market funds still at record highs.
Yes.
Is it time for that to change?
I think it is. I think we're overdue a change here. We've got nearly $7 trillion sitting in money market funds at an all-time high. And I think investors really need to start to put that cash to work because that cash is earning less and less as rates come down. I think we've got a couple of interesting opportunities in fixed income right now. I think the first stop out of money market funds is ultra-short duration. GSST is our ultra-short duration bond ETF, where, just for a modest increase in duration, you can really open up your opportunity set and generate incremental yield. And the other area that we're really excited about actually in fixed income is municipal bonds. And we're seeing great opportunities here. We launched a suite of actively managed municipal bond ETFs last year. And here, GMUB, as an example, is actually generating a tax equivalent yield because, of course, remember, munis are income tax free, the tax equivalent yield of nearly 7%. So I think that stacks up really, really well in the current environment.
Great for our viewers to keep in mind. All right, Marissa, thanks so much.
Thanks for having me.
Davis, the AI engine at the heart of the Dynatrace platform, doesn't just see every entity in your environment, it instantly knows how they all relate. So if a problem occurs, we show you where it is, why it happened, and the business impact, so you can prioritize action and trigger auto remediation.
Bitcoin moving to the upside today after acting SEC Chair Mark Ueda launched a crypto task force. Task force is meant to develop a regulatory framework for crypto assets, provide clarity around issues like disclosures, registration, and also what is legal in this space. For more on this, we want to bring in Rick Edelman. He's Digital Assets Council Financial Professionals founder of that. Rick, it's great to have you here on Yahoo Finance. Talk to me just about how big of a catalyst this is for the industry and whether or not this is something it looks like the industry, at least investors, are excited about it. But those inside of crypto, is this what they want to see from the administration?
Yes, it is. We're very excited about what's going on now after 4 years of blockage and obstinance from the Biden administration and the SEC Chair Gary Gensler. We're now seeing the chains unleashed. And as a result of